Good morning, everyone. Well, I say morning, assuming that it's morning. Wherever you are, hello and welcome to the silver edition of the Metals Investor Forum. We're very happy to have you here today. Joining us for our very first session, I'm Gwen, Preston of Resource Maven. Sorry for starting a few minutes late. There was a child, my child, who needed to be put in a car seat and extracted from the house so that there wasn't just a little bit of background noise going on. The virtues of working from home, right? I'm very excited to have the three companies presenting in my session today. So I'm keen to get to their presentation so you can learn more about Discovery Silver, Reyna Silver, and Outcrop Silver and Gold. But before we get to that, I'm going to run through my presentation. I know that Peter Krauth and David Morgan will focus exclusively on silver in their talks today. So I decided to do a little bit more of a broad commodities talk, sort of set the stage for the silver conversation. That's partly so that we aren't all three of us talking about the same thing, and it's partly because they are their knowledge of silver is more in depth than mine. So I figured we could all play to our strengths to some extent. You saw the title there. Is this it? Yes, it is. My broad thesis here is that we are in a commodities bull market. So that's what I'm running through here. Here's the GSCI. I always say that one backwards if I try and say it too fast. GSCI Commodities Index. This is just the first 4 months of the year, but it rose 23% in those first 4 months. Like it's pretty, and actually more since then. I just have the first 4 months because I have some comparisons and historical looks at previous times that we've had gains like this in the first 4 months of the year. Yes, it's just recovering to its pre-COVID levels, but the pace of the ascent has been standout, right? That is a really impressive ascent for the commodities index. So then the question, of course, is can that last? And I think to try to answer that question, I want to look at fundamentals, technicals, and history. You know, it's the best we can do, right? On the fundamental side, I mean, I'm talking right now about base metal or commodities as a whole, not even just base metals, commodities as a whole, precious metals, base metals, and other commodities for that index. So obviously I can't talk in detail, but when we come to the metals space, it's pretty safe to say that almost across the board, there is strong demand against weak supply. And that just stems from the way that our sector has been for the last 10 years, with not a lot of investment into new projects, and with, especially through electrification, demand really ramping up. And so that's why, bottom line, copper, silver, nickel, uranium, that's why their prices have been rising so much. Supplies just will not meet demand in the coming years. So, you know, good starting point there. A few more examples. I mean, this is the palladium chart. This is the iron ore chart, right? These things have done, these metals and commodities have made pretty impressive moves in the last year, and it's largely a basic supply demand situation. When we get to the technical side of things, it's a bit mixed right now. I'm going to focus just on copper, gold, and silver because, you know, you can only cover so much ground in one short talk. Right now, the signals are a bit mixed. This is the copper chart. You know, different technical analysts focus on different things. And as I was going through all of those various outlooks yesterday, I basically decided that there are as many up arguments as there are down arguments for the short term, right? But that's okay. And because for me, when the technicals are mixed in the short term, I just step back and look at the fundamentals, which are very bullish in the medium to long term, right? And the technical trends are also bullish medium to long term. So I don't know exactly what copper is going to do next week based on this chart. I mean, does anybody ever? But you know what I mean? Similar actually for gold and silver. So the two charts on the top here are for gold. The two charts below are for silver. Basically, the bulls have it in the short term, but the signals are mixed for various reasons. Again, in the short term, I don't know exactly what's going to happen with these prices. But in the medium and long term, the technical pictures are very supportive for both metals. So, you know, moving quickly, I think it's safe to say that absolutely on a fundamentals side of things, we are well supported for commodities. On the technicals picture, we are well supported in the medium to long term, albeit with a mixed short-term outlook. Now I mentioned, let's look a little bit at history. So, I mean, for commodities to be up 23% in the first 4 months of the year is anomalous, but it has happened before. So what happened in those previous instances when commodities had an extremely strong start to the year? Well, Canaccord did exactly that analysis. They looked at years when commodities were strong through April, and then they averaged out those patterns to see what happened over the rest of the year. They excluded two anomalous years, 2008 and 1982. And the patterns pretty clearly suggests that after a summer breather, which matches that mixed short-term technical outlook, right? A summer breather, sideways, we're not sure what's going to happen through the summer. Commodity prices rose again to add another 9% from May through December, including that summer breather. So history supports the potential for this rally to continue through the year. If we settle down just into the exact moment that we're in, I mean, gold is strong. If you look at the sort of 5-day chart of gold, you might not think that it's a bullish commodity, but all you have to do is step back and look at the 60-day chart of gold, and it's a very strong chart, let alone if you step back and look at the 1 year, the 2 year, the 5 year, they all look really strong. The primary drivers right now are absolutely, inflation talk is absolutely one of them, and we'll get a little bit more of a feel for that, or that conversation will evolve, is perhaps a better way of saying it, this afternoon when the Federal Reserve releases its next round of minutes from its conversations. But nonetheless, there's a lot of focus on inflation, and so that's pushing gold because, of course, inflation pushes real rates into more negative territory. And then there's this concept of commodity catch-up. I was just talking about how commodities have been so strong in the last 6 months to a year, and gold usually tracks metal markets. It usually moves with them, but it hasn't. The somewhat complicated chart on the bottom there shows that gold is lagging right now. But that black arrow on the right that suggests a turnaround and move back up again suggests that gold often lags in its tracking of the metals market a bit, but it does catch up once it turns around. So is a catch up coming as part of the commodities argument? I would suggest that it is, because metals do like to move as a group. It's not just that they like to move as a group. I'm not trying to anthropomorphize metals. It is, of course, because of inflation and growth and all of the fact that similar macroeconomic factors move these things together. I just like to talk about them as people because I spend so much darn time thinking about them that it makes me feel like I don't sit alone at my desk so much. Okay, then if we want to just look at gold, and I'm looking at gold certainly as a proxy for silver. Silver, as all of you will well know, has those dual forces, the industrial side, which is more of the commodities argument that I was just describing, and then the precious side. So let's look a little bit more closely at gold. Negative real rates are the most important bull force for gold. This is a chart of the inflation indexed 10-year treasury. So it's a good proxy for real rates. A lot of people look at real rates based on the 10-year treasury. And this is just the history over what I would call the gold market so far. So the beginning in 2016, real rates started falling, the gold bull market started, then real rates were gaining for a couple of years, and that hindered the gold market until 2019 when they started falling again. And so in 2019, falling rates were actually setting us up very nicely for a precious metals market on their own. And then COVID hit, which wasn't actually a bad thing for the gold market, because wham, bam, central banks around the world, of course, slammed interest rates to zero, which pushed real rates into negative territory. So they were suddenly very negative, and based on the words that come out of central bankers around the world, again, we will get a little bit of an update on the American group thereof this afternoon, but everybody keeps saying that they are going to hold rates negative. I mean, the ECB just kept their rates at negative 0.5 in their meeting just last week. And the Federal Reserve certainly is suggesting that they are going to keep rates at zero for the time being. They continue to be confident that inflation is transitory. I'll get to that in a moment. But the point is that real rates are negative. The chart on the bottom here shows gold inverted and the 10-year real yield. And I just put that chart in there. I love this chart because it shows how correlated these things are. This is why negative real rates are this shows how negative real rates are the most important bull force for gold. They move together. So then, of course, the question is what's ahead for real rates? I do not think that the Federal Reserve is going to raise rates in the near term. They've been, it would be a significant turnaround for them to suddenly say, oh no, inflation's real, so we're going to raise rates. They've been very strong on saying that inflation is transitory, so I don't think that a rate hike is coming soon. So if rates stay at zero, what's ahead for inflation? Because real rates are interest rates minus inflation. That brings up the question, will inflation stick? The Fed, as I was just saying, has been saying over and over and over again that inflation will be transitory. But I do think that there's, and there are some arguments for that that make sense. The factors that are contributing most to inflation, some of them are transitory. Certainly, if you look at year over year inflation numbers, I think that those are a little bit overstated. They're overstating the effect right now because of that base impact from where we were a year ago in the depths of COVID chaos. But I also think that there's a pretty good list of reasons that inflation will stick. I mean, some of the COVID-based supply chain disruptions that we're facing are likely to last for a while. I mean, my husband wanted to buy a new cassette for his mountain bike last night, and he could not find it. And that's largely a COVID fallout. Mountain bike parts come mostly out of Japan and Taiwan, and things are not functioning there the way that they need to. That's just one example. There's real supply chain issues from COVID that are going to stick, and inflation is stems partly from that. Then you can look at just some data. I mean, surging transportation costs, land and sea. You know, manufacturers don't just absorb that. That gets passed along the pricing chain. Of course, lumber is the standout example on the commodity side. The prices have eased a little bit, but you know, a year ago, you could build 10 single family units for $50K worth of lumber, and now you can build 2. Like that's a crazy change. Then there's, of course, the ongoing massive fiscal spending, which is very much still true, and the explosion in money supply. There are some aspects of inflation that are transitory. I'm not trying to suggest that everything is going to stick, but I do think that a lot of aspects of inflation are here for a while. And the fact that they're here, I mean, I don't think anybody's going to argue that. We had, in April, we had a 0.8% month over month gain, and then we had 0.6% in May. Those were both, the 0.8 was way above expectations. The 0.6 was slightly above expectations. We have things like small business owners, you know, a third of them raising prices, that being the highest proportion to answer such in a survey in 40 years. There are clear signs that inflation is here. COVID has given, if you want to call it, an excuse for prices to rise. So it's easier for retailers to raise prices because there's this sort of obvious finger to point. There is a little bit of a caveat that wages are not yet rising, which might hurt the inflation argument a bit. But at the end of the day, inflation's here. And inflation really matters for those of us who invest in precious metals. I really like this chart. It looks like a bit of a kid's painting until you focus in on it a little more closely, but it's a Scotiabank analysis, which shows how when inflation is less than 3%, sort of 2.5% or less, then inflation and gold are not correlated. The correlation is all over the map there, right? From negative 0.3 to positive 0.3, whatever. That's not a correlation. As soon as inflation ticks above 3%, the correlation between gold and inflation suddenly gets very clear. So if we are in the scenario that I think we're in, where inflation is here and it's real, it doesn't need to be insane. It just needs to be here and real in about a 3% level. Then the two rise together. And I do think that that is a key thing to watch. I think it's going to be a very significant force going forward here. So about those real rates. This is the 10-year Treasury yield. It, of course, the other factor here is, yes, the Federal Reserve has kept interest rates at zero, but people don't think about real rates relative to, you know, the Federal Reserve's interest rates. They think about real rates relative to the 5-year treasury, the 10-year treasury. The 10-year is the most common. And it went on a run. The yield there, ran from 0.5 as high as 1.7 between August and April. That's an insane move for something that's supposed to be like the stable stalwart of the economic world. It has eased some, as the chart here shows, but it could still gain more. I mean, if we have economic growth and that creates inflation, inflation pushes yields higher. Similarly, massive deficits require the government to issue lots of notes, and an abundance of notes also pushes yields higher. So I'm not standing here saying that the 10-year treasury yield is not going to go higher, but I am saying that if inflation stays above 2.5%, which I think is a pretty safe statement to make, real rates will remain negative, right? So I don't lay awake at night stressing about whether the Federal Reserve is going to boost interest rates by 1/4 of a point. I don't lay awake at night wondering about the delicate balance between the 10-year yield and inflation. I think it's pretty clear that there's going to be enough inflation that sticks enough that it will overcome the 10-year yield, even if it gains some. That's just the scenario we're in, and that means real rates are going to stay negative. And this just reiterates what I was saying there. Gold and real rates are best friends. They move together. Right now, the real yield has moved ahead of gold. That suggests more upside for gold in the near term. And I mean, there's a chart there on the bottom that is from Canaccord, which suggests that a real yield on the 10-year of -1.5, which is potentially the direction in which we're heading, would mean gold at better than $2,000 an ounce. Now, lines on charts are what they are, but I do think that these correlations are very important. Now, it's one thing to believe in the technical picture for gold and silver and commodities and all of those things. It's another thing for that to actually attract investors. It seems like it shouldn't be a different thing, but it is. Part of it is because precious metals just have their naysayers. There's people who just aren't interested in these things. There's also the simple fact that the broad market funds have handed out money for years, that tech stocks and crypto and biotech are so splashy and exciting. And that commodities have sort of stumbled for a few years, right? Maybe gone forward and then stepped back, and in uncertainty, it's been hard with all of those factors for metals to attract sustained attention. But I do really believe that we're at a point right now where we have a multi-metal bull market fueled by electrification and green energy, clearly very important on the silver scene, but for lots of metals, by inflation, by growth, by negative real rates, and by the fact that mining companies are printing money. They stand out across equities for their balance sheets and their dividends. When you have all of those forces working together, that's a multi-metal market, and it's multi-metal markets that build momentum. So even though investor interest right now still feels perhaps a bit muted, I do think that that's going to change soon. And over the rest of this year, I really think that we're going to get that sense of generalists being unable to deny the opportunity, the upside, the low risk gains that are apparent in this multi-metal bull market. This chart, I'm almost done here, but this is an example of how miners stand out across equities for their balance sheets and their free cash and their dividend yields. I mean, the chart that I have on the upper left here shows the dividend yield history for gold and outlook for gold producers. Now, I've added some yellow lines in there because the chart was a few years old. And guess what? The average dividend yield of the S&P 500 is down to 1.4, and we are looking at gold majors giving out 2.3. And those trends are going to continue to diverge. And so things like that. And then there's the bar chart there shows precious metal miners' free cash flow versus dividends. Precious metal miners have, it doesn't, not even actually miners, a lot of them have pegged their dividends to free cash flow, and it's like free cash flow is through the roof. Look at those blue lines. And so you don't have to be a metals lover. You don't have to be a silver buff. You don't have to be any of those things to see the value in metals right now and in mining companies. And I think that's a really important factor in fueling this bull market. You just have to be a number cruncher to see that these stocks make sense. So I really think that that's going to help fuel the market. I do think we are in, if I I haven't said it over and over enough yet. I do really think that we are in a major metals bull market. Corrections happen, right? Short-term uncertainty is just part of any market. But when we have this level of demand for metals, from growth, from stimulus, from infrastructure plans, when we have that plus inflation, when we have that on top of insufficient supply, we just, the ingredients are all in place for a major metals bull market. I mean, right? Copper is strong and people are expecting copper to get stronger from here. Uranium has to go at some point. Battery needs alone are going to double nickel demand by 2030. That statement always catches me a bit off guard. Nickel's a steel thing, right? Well, no, in the next 10 years, battery demand is going to double nickel demand, right? This is a paradigm shift, and it matters in the metals world. It's going to fuel a really significant bull market. So I really think that this is where we're at, and that's all I'm going to do for today. These are I don't think in this audience that I need to talk a lot about what I do as a business. I publish 2 newsletters, and my partner in crime, Peter Krauth, who will take the stage here twice today, publishes another 2 newsletters. Importantly, we don't take money from companies for what we say. We just write about what we're buying and selling. And with that, I am done. I hopefully have set the stage there, the commodities stage, so that the other speakers today can focus more on silver and how silver might perform within that commodities picture. So without further ado, well, there's one moment of further ado, which is I do want to remind everyone that we love to get questions from the audience. So please, if you have questions for me or if you have questions for any of the presenters, please enter them at any time. The folks in the back end here collate those, send them over to me, and I can ask them or answer them if they're for me during the Q&A that we will have after I ask these 3 gentlemen to tell us about their companies. So now to that, I would love to ask Taj Singh of Discovery Silver. We haven't had Discovery at a MIF before, so I'm excited for Taj to step forward and take us through the Discovery story. Taj, please go ahead.
Perfect, thank you, Gwen. Just want to confirm you can hear me okay?
I certainly can, yes.
Perfect, and you can see my screen here, the cover page?
Yes.
Perfect, fantastic. Thank you for having us, and thanks, Gwen, for the intro and the great talk to set the stage. I'm Taj Singh, President and CEO of Discovery Silver, and we are advancing Cordero, which is one of the world's largest undeveloped silver deposits. That's our flagship and our focus. There will be forward-looking statements in the course of the presentation, and then kind of the teaser right away. What are the kind of 3 points I want to leave you with for this presentation? What makes Discovery a really compelling story? And we think the Cordero asset is quickly becoming one of the most important silver assets globally, very quickly. The 3 kind of key things that stick out is the combination that Cordero has of margin, size, and scalability. We've been able to show fantastic margin potential with very good grades, open pit grades over broad widths, and more recently, to add some exploration sizzle to the story, some high-grade vein potential. We'll talk about that in the coming slides. Size, Cordero is the world's largest undeveloped silver deposit, so that one's a pretty straightforward one. And then the third one is the scalability point of it. It's a bit of a nuanced characteristic, but as we know, most silver deposits, for example, 9 out of the top 10 are underground deposits. You're either, it's a vein style deposit. Typically, you're either in ore or you're in waste. So your ability to then, as silver goes up, or as CapEx is paid off, your ability to get substantially larger is not very easy. First of all, your ability to increase your throughput drastically underground is difficult, but you simply don't have the scalability that we think, open pits obviously do, but Cordero has in abundance. The fact that there's a core that's high grade, and there's a medium grade, and you can keep expanding out, and the deposit becomes very, very large, as we'll talk to in a minute. The basics of Discovery: we are located in Chihuahua State, Mexico, on a major gold silver belt. Some of the more well-known projects and mines around us are shown here, but it's a lots of long-lived and robust projects near us. We are at the resource and PEA stage, and we're focused again on our Cordero silver silver, zinc, lead, and gold project in Chihuahua State, Mexico. There was a previous resource by the previous operators, Luana Resources, which was put out in 2018, that showed a global resource of over 1 billion ounces of silver equivalent. Roughly, if you look at spot prices, silver represents about 65% of that value. Gold's about 5% or so, and then zinc and lead make up the remainder of that. So quite substantial exposure to silver, one of the highest in the space. Our cash position is also one of the key differentiators. We've got over $85 million of cash in the bank, no debt, so we can aggressively push this to a construction decision, and still actually have a significant portion of the equity capital needed for the build. And I'll talk about that in a second when I talk about capital structure. And so we're backed by success. We are part of the Oxygen Capital group of companies. Oxygen is an integrated merchant bank and mining house. They're the founder and cornerstone shareholder of Discovery Silver. There's currently 4 active companies within Oxygen: Discovery, Liberty Gold, which is focused on the Great Basin; Pure Gold, which has just started production at its high-grade underground mine in Ontario; and then Northwest Copper, focused in British Columbia and large copper gold projects. But Oxygen has built, has had serious success in the industry. Built 9 mining companies over the past decade. 5 have been acquired, crystallized over $3 billion of value. So made a lot of money for people. So the ability to attract capital and have good, long-standing shareholders has been definitely a very positive characteristic we've been able to have as part of the Discovery story. And Eric Sprott, whom we all know, is a very supportive shareholder of ours. He personally owns 25% of Discovery. It is one of his largest investments in the silver space. In fact, it is his largest position as in terms of dollar value for developers, and the only one larger of all silver companies is First Majestic. And his other second and third positions that are his largest ones are Mag Silver and Silvercrest. So good company to be in. Capital structure, really quickly, pie chart shows the breakdown. As I mentioned, Eric Sprott owns 25%, and then retails and institutions are at about a third each. And then founders, management, and board are at 10%. So obviously, definitely incentivized to make this a success. Stock has done well over the past 18 months to 2 years. Very healthy market cap, sitting over 800 million now in market cap. And we trading volumes are a little down over the past few months. It could be across the board like that, but from the first quarter of the year, we were trading over 1.5 million shares a day, closer to 2 actually, between being on the TSX Venture and the OTCQX. I talked about being funded for a build. You'll see here there's warrants outstanding that come due in 2022. They're all in the money. Between Eric and another very large shareholder, 70% of them are controlled by those two. So they're in good, strong hands. But in addition to that, coming in with our current cash balance and our spend, roughly, if you look at high level modeling, we probably have on the order of $70 to $75 million of cash ready to build, which you'll see when we get to represents probably a quarter or a third of the capital needed to build to start the project at Cordero. So very quickly, just looking, at the qualitative characteristics at Cordero. There'll be assets out there that obviously have some technical merits that are great, but do they tick the boxes for eventually becoming a mine? And we think Cordero definitely does. First of all, simple structure, 100% owned by us. No JVs, no earn-ins, no option agreements. We own 100% of it. The land package we're sitting on is over 35,000 hectares. The resource area shown here in the red, where the PEA outline is shown, the 2018 PEA outline, that represents less than 1,000 hectares. So obviously a lot of land for layout, logistics, et cetera, for an eventual open pit mine. And also the land package is very important, as the last bullet shows here on the left, because there's multiple property-wide targets that we'll be working on. Our real focus has been the resource and the PEA coming out, but we will be starting in Q4 of this year to look at some targets that look very interesting property-wide. These orange areas here are interpreted intrusive center. So this is the first time last year airborne mag and EM was flown over the property. And we've got reconnaissance teams out there working up the targets to get them ready to drill. Topography, classic rolling northern Mexico topography, fantastic for an eventual open pit mine. Chihuahua State is consistently ranked as one of the best states to mine in Mexico. So, we have very good, strong connections with the local government and state government, but definitely a very pro-mining stance there. And then I already talked about the property-wide targets. So a lot of very important qualitative characteristics for Cordero to eventually become a mine. I forgot to talk about infrastructure, sorry. Power line up one side of the property on the right there, and then a major highway up the other side of the property. So again, CapEx advantages, OpEx advantages. It's a fantastic situation to be in for infrastructure. Got to point that out. Moving forward, looking at 2021, so we acquired this project in late 2019, began drilling, which eventually ended up being a 75,000 meter program, one of the largest in the space. The phase 1 drilling ended April 30th, but seamlessly phase 2 drilling has continued. That is with a focus on the PFS and also the high grade veins I will talk to that flank the open pit PEA. We'll talk about those in a second. So that will then culminate in a brand new resource estimate and a PEA about a quarter after that for the second half of this year. Met testing, there has been significant amount of met testing done previously. We built on that. Obviously, we've got our own new pit phases based on our additional drilling and our kind of new interpretations on the project, which are pretty substantial versus the previous operators. So not only did we go by pit phases, but we went by rock types within each of the pit phases. So very, very detailed met testing program. And to point out, the resource and met are pretty much at a PFS level of study. It's not a classic kind of PEA style, throw stuff down on paper, arm waving PEA. This is backed by a lot of data. The project has been drilled extensively. Probably 60 to 70% of what will be in the mine plan will be indicated and above. And again, for the met testing, a substantial amount of testing has been done, much more akin to a PFS. Property-wide drilling I talked about, those are the targets regional to the main pit area. We're going to be working on building those up and hopefully be able to start drilling those later this year, early next year. The game plan, I talked about our phase 1 drill program. The focus of it was to define and delineate high-grade zones and upgrade a majority of the resource to M&I. The deliverable for that will be, as I talked about, a brand new resource model. That resource model will incorporate geology and structure for the first time. The previous model by the previous operators was a grade model, assay grade cutoff model. And as I mentioned, the data set will include over 180,000 meters of drilling and well over 400 holes, probably closer to 500. The met testing I've talked about before, but our focus, which will feed into the PEA, is focus on high grades early in the mine life. And the beauty of the Cordero deposit is the geometry allows us to just have staged expansions. You have the high grade, lowest strip part of the mine right up front, and that continues to expand into the other parts of the mine, which I'll show just shortly here, which again, obviously leads to a very manageable development CapEx. These two slides back to back show really the story. We acquired this property in late 2019. And you'll see here the gray outline represents the old PEA. You've got 800 million tons of rock there, about half of it ore, half of it waste. Big footprint, big project. But again, it was considered a project that was very, very high tonnage, but low grade, so needed higher silver prices into the 20s before it actually started really making money. And we acquired this project when silver was $15. Our real focus was that orange kind of hatched area. That's the high grade zone. That was the original discovery part of this deposit. And you'll see there's some beautiful high grade intercepts there. We were showing in orange anything from 50 to 100 gram per ton silver equivalent, and then over 100 gram per ton silver equivalent shown in the magenta. But it's a very nice coherent high grade zone there in the north corridor. And that was our focus. We said, forget about the rest for now. Well, let's try to work on making a project that works at $17 or $18 silver. In addition to that kind of orange hatched area, we thought as you move northeast and in this south corridor, there's quite a bit of smoke, but areas haven't been drilled enough. There was sometimes 200, 300 meters between holes. So our focus was to go and plug those gaps and see if we could expand that high grade area. So again, focus on the higher grade area and then see if we can expand that area. And then you had the optionality on the lower grades later in the mine life as CapEx is paid off, or as if silver runs, which obviously we're in a good position now. But if you see that and then you show our drilling, what's happened, the high grade area has almost 4x versus us acquiring it. We've drilled it very extensively. This is only showing 45,000 meters of our drilling. There's still another 30,000 meters to come over the coming months. But you'll see a lot of the gaps in the south corridor and then the northeast extension of the north corridor have been filled in very substantially, and they're still open along strike. So it's a fantastic position. We're in now. That will really be the engine room of the PEA right there, what you see in front of you, that orange hatched area. And then for the PFS, we'll continue to drill the less drilled areas, obviously into indicated and above. So very quickly, in the 2018 PEA, it was a low cutoff grade approach. You had a cutoff grade of 20 gram per ton silver equivalent, a head grade of a 46 gram per ton silver equivalent. It worked, but you needed a big mill, 40,000 ton per day, which obviously leads to a fairly substantial capex. Our look at things now, increased cutoff grades. In the early part of the mine life, you'll have grades that are triple or even more of the previous head grades. And obviously the cutoff grade will change. We'll have higher cutoff grades early in the mine life and then move to lower and lower cutoff grades as capex is paid off. And again, Cordero is very amenable to that. And then a very manageable development capex. We're looking at starting at about 15,000 ton per day, which gives you circa capex of circa 300 million or so. And then we expand the mill to 30,000 tons per day once the initial capex is paid off. At 15,000 ton per day, and based on the grades we're looking at, et cetera, we'll be producing over 15 million ounces of silver equivalent a year, which will make us a top 10 primary silver mine. When we get to 30,000 ton per day, we'll be producing in the high 20s, but into the low 30s, also in some years, million ounces of silver equivalent a year. That's the target, which would make us one of the, if not the largest primary silver mines in the world. And very quickly, I think I've got 2 slides left here, but the veins I've talked about, this is the exploration potential part of this story. These veins are essentially what we believe is the source for the disseminated mineralization in the pit area. We believe the intrusive source is further northeast here, but the veins stem from there. They met some host rock, which was very favorable for creating the disseminated mineralization, and then you're getting that open pit, the high-grade open pit material. But the veins, we've got over 5 kilometers of strike of veins that flank the pit. And if you look at them, you kind of have anywhere from 1.5 meters to 4 or 5 meters. A very nice grade, 500, 600, 700 gram per ton silver equivalent, very consistently. Every time we've stepped out on the veins, we've been able to hit. So what the general idea around this is, you've got your engine room, your open pit, and you supplement that 500 ton per day, 1,000 ton per day from the veins to bring up the grades even further to get that margin expansion. And because the mine would be starting in the southwest, the open pit, it's quite a ways away from the veins. So in terms of layout and logistics, it's perfect. You'd be able to really bring up the grades early in the mine life. Again, help expedite payback, IRR, etc. So these veins will not see their way into the PEA. They will be in the PFS. We want to be able to drill them enough where we feel comfortable enough to put them into the mine plan with enough drill density, to be able to hang our hat on. And the last point here, I talked about the nuance of scalability. So this kind of shows our cutoff grade, and then the total the total endowment in the resource. You'll see at 50 gram per ton silver equivalent cutoff grade, we're sitting at about 600 million ounces. But as you go up, now if you lower your cutoff grade to 25 gram per ton, which may correspond to, for example, $22, $23 silver, that it would make money at, you're adding on the sidelines already drilled close to another 400 or 500 million ounces of silver equivalent coming on. Then silver goes up into the high 20s, boom, another 200 million ounces or so can come online. So as you pay capex off, or as silver really starts moving, the resource gets larger and larger, the mineable resource. So if you look at an underground mine, this cutoff of these bars wouldn't change really, regardless of the cutoff grade, really. You don't get such a substantial increase as you lower the cutoff grade. So that's one of the which is very hard to find in the silver world. And last slide here, sorry. Cordero, you'll notice here, these are the top 15 largest undeveloped deposits by silver resources, just silver. You'll see an interesting thing, 3 out of the 15 are where silver is the primary metal. that's interesting in and of itself. For someone who wants exposure, you'd kind of want the primary commodity of the asset to be silver first and foremost. And second of all, most of them are owned by very, very large companies, and or they have very, very high capex. Right, KSM is first. We know what that capex is, and that's first of all the primary commodity there is gold. But as you go down the line, you'll see they're very high capex kind of numbers for a lot of these projects. A lot of these projects have been sidelined or they're sitting in very remote areas. Cordero is on a major gold silver belt with a very manageable capex. So in terms of an investment exposure to silver, there's really not many assets out there that can match Cordero. So that is it for me. And then I guess we'll do some questions later. Back to you, Gwen.
Thank you so much, Taj. That was a great introduction to the discovery story. I certainly have some questions that I wrote down during that to pass along to Taj at the end of the session. So anybody else, please send your questions through so I can pester him with them. Next up, I would like to ask Jorge to bring us up to speed on the latest with Reyna. And there's a lot going on with Reyna, with drills turning, yay. Jorge, please go ahead.
Thanks a lot, Gwen, and great to be with everybody. And thank you for Metal Investors Forum to give us the opportunity to introduce the company. Gwen, may I just confirm with you how much time I have?
15 minutes.
Perfect. So just very briefly, for those of you who might be new to the Reyna Silver story, this is a relatively new company. We went public last year, right in the middle of COVID. Which obviously had some challenges in terms of operations, but also a very favorable time to go public given silver prices. The genesis of the company is around two assets which we acquired from Mag Silver, and which, as part of the deal, Dr. Peter McGaw, who's the co-founder of Mag Silver and arguably one of the most successful silver exploration geologists in the last 20 years, stayed with us as our chief technical advisor. We've managed to have a very well-funded company. We have about $15 million in the bank, a very strong institutional investor base. We have good liquidity, about 300,000 shares traded per day. The philosophy of the company is we've set up portfolio of assets where we're looking for high grade and district scale. That really has been Peter McGaw's philosophy. He put together Gigi and Batopilas, which are the two assets that we acquired from Mag Silver in the late 1990s, and they were actually part of the original IPO for Mag Silver. There are two district scale projects that Peter put together piece by piece over a number of years, and I'll be introducing them to you in a little bit. Then we also have the Medicine Springs project in Nevada and the La Reyna project in Mexico as well. All four of our projects have a brownfield component to them and a high grade silver component to them. They've been producing silver at high grades historically, and really what we're doing now is in many cases for the first time applying modern exploration methods to prove the district scale potential of the projects. Very briefly, in terms of our leadership, we have Peter Jones as our chairman. Peter is a former CEO of Hudbay Minerals. In terms of our management, we have a team of geologists, all who have experience working for companies like Mag Silver, as well as Pan American, Exelon. And really, as a team, they've been working together with Peter McGaw from day one. They're full-time with us now. Rene Ramirez, who's our senior exploration manager, has been in every single drill hole, especially in the early days of the Juanicipio discovery for Mag Silver, also involved in the Cinco de Mayo discovery for Mag Silver, the Platosas discovery for Exelon. And then very briefly to mention to you about Peter McGaw in case he might not be known to some of you. He is the co-founder of Mag Silver. Mag Silver is about to go into production in what will be one of the highest grade silver mines in the world. And as I mentioned to you before, the Gigi project was part of Mag Silver's original IPO. It was actually Peter McGough's doctoral thesis, and it's a project that we're currently drilling. It's a very important in Mexico. It's a CRD system that has produced 500 million ounces of silver, where the average grade of the silver was 310 grams per ton silver, with 15% lead zinc combined. We have done about 7,000 meters of drilling out of a target of 12,000 meters. We're just adding a second drill rig to the project, and with that, we will complete our drilling in the next 8 weeks, and then at that point, looking to release the results of our drill campaign. To tell you a little bit of what we're looking to prove with our drill campaign is this is actually Mexico's largest CRD system. And as I mentioned before, Peter McGough lived at the mine and did his PhD in the late 1980s. And he noticed that, peculiarity of the system was, while those 500 million ounces of high-grade silver, make this CRD the largest CRD system in Mexico. One of the peculiarities is that the entire production came from the upper part of the system, which is the chimney and mantle system. And, Peter quickly discovered that the heart of the CRD had never been found for the whole district. So Mag Silver and Peter, over the years, found multiple indications, both at surface and at depth, through drilling and geophysics, that indicate towards that source being in the area that we're now drilling. And on the back of this information, we designed an initial 12,000 meter drill campaign. That's, as I indicated, we're coming to the looking to conclude it in the next eight weeks. We're obviously looking for extensions to the producing mines to our east and west, and what we will do is do our release of results in this first stage, let the market digest the results, and we have a budget already in place for the next stage of drilling, at least another 12,000 meters. But we think once we release the results, we'll look at the possibility of doing an even larger drill campaign. So the target of our exploration campaign is looking for extensions to the mines to the east and west. To tell you a little bit of those two mines is that the Potosi mine and the San Antonio mine. You can see they're really come right to the edge of our property. They've been in continuous production since the 1700s. The San Antonio mine had a flooding event last year, so they're trying to fix that. But my understanding is they're looking to bring that back into production. And these CRD systems, they have very wide chimneys that are can be as wide as 6 meters and then go down to as much as 20 meters of just solid silver mineralization. So Mag Silver, with the drilling that they did, which was very limited, were able to prove extensions to the San Antonio mine going into our property. And then on the back of extensive geophysics and mapping, as well as following the drilling that both producers had done to our east and west, we designed this first drill campaign. This is the first time that this project has a dedicated budget of the size that we have been able to put together. So the next couple of months are crucial for the company, and certainly a time to watch for drill results for this project. I will now tell a little bit about our second project. Again, the second project that we acquired from Mag Silver. This project has a pretty amazing history. It's also in the state of Chihuahua. It is the highest grade silver mine in the history of Mexico. It produced a staggering 350 million ounces of silver, where the average grade of the silver was 1.5 kilos per ton. So, as I mentioned, the highest grade silver mine in the history of Mexico. In the mid 90s, when NAFTA was signed, and you might remember we had the first wave of Canadian explorers coming to Mexico in a big way. Peter McGaw staked the old mine, which is, the heart of it is this tunnel that I put in the picture. It's called the Porfirio Diaz Tunnel. The bulk of the 350 million ounces of silver came from that tunnel, from just a 2-kilometer tunnel, which Mag Silver refurbished and basically, when I've personally walked it from beginning to end, it's in very good condition. It was rehabilitated such that you could do drilling and exploration from within the tunnel. But the other thing that Mag Silver and Peter McGaw did was they put together the entire district together, which they had to do claim by claim. And we have 30 known veins, all of which have historic production that was mostly artisanal, feeding into the main mine, and that the majority of those veins have never been drilled. So with that knowledge, Mag Silver did limited drilling here around 2008 to 2010. Did have very successful drill intersects. You see some of the highlights here, a few meters of 3 kilos per ton silver. And having established the information from Mag Silver, we wanted to build on both the historic as well as Mag Silver's previous drill campaign. So our initial exploration last fall and early into the spring was doing extensive sampling and trenching, focused on this area to the north that actually had never been explored before. And we had a very successful campaign. We found multiple extensions to the known veins, going almost to the entire length of our property for about 2 kilometers. We also found 2 new veins, one of them containing high-grade gold, which is the first time that we have encountered high-grade gold. So what we did is, we did trenches through the entire length of the vein. We found, some very high-grade silver grades, and a very high percentage of our samples. The highlight is a sample of 42,000 grams per ton silver, but there are, I think close to a dozen samples that had more than a kilo per ton. On the back of this campaign, we designed and permitted a drill campaign of 10,000 meters. What we'll do is, drill at intervals through the vein, initially to 150 meters in depth, and then on selected targets, we'll go to a depth of about 350 meters. We're starting our 10,000 meter drill campaign next week. We're very excited to finally be able to drill this project. It's a project that, again, has never really had a dedicated team with the focus that we have now. It's a district that's, historic, that has a very, very little modern day exploration done to it. And, again, we are starting drilling next week. Very excited about the next months ahead for this project. The third project in our portfolio is called Medicine Springs. This project is in Nevada. It's a CRD project. As you know, Peter McGaw has become a sort of world leading authority on CRDs. His geological model has been used as a footprint for multiple discoveries with his involvement and also without his involvement. This project was one that was very interesting to us because Peter recognized that it's geologically almost identical to our Iquique project in Chihuahua. We were able to acquire the project last October, and recently, if you follow our company, we put a press release where we've made the project about, I think, 3-4 times bigger than it was originally by adding claims We now control the entire district. We're in the middle of an extensive sampling campaign, doing a LiDAR survey. We do have permits in a particular area, which is the area that was drilled historically. What was drilled here before was high-grade silver. We're in the middle of the Carlin district, and the heart of the project is a former producer that produced extremely high-grade silver, something like over a kilo per ton silver as well. A group drilled it in the 1980s looking for open pit gold. Instead of that, found high-grade silver at surface and all the way to about 50 meters. And we believe that's one of the mantos. What we're doing at the moment is with the mapping and LiDAR, we think there are multiple areas that have this upper manto. There's also areas where the skarn comes to surface. So we're going to take the next month or so to refine our drill targets, and then proceed to permitting. And it's a project that we may drill later this year as well, depending on which we can obtain our permits. But we do have a budget here for about 7,000 meters that we could drill this year. And finally, we have the La Reyna project. This is another former producer, very close to our flagship asset, Gigi. It's an epithermal silver former producer. It produced the district itself, which you see here, and Sierra Metals is a producing mine in it, has produced about 80 million ounces of silver. Our project is a 2-kilometer epithermal strike, where the Spanish mined from surface to about 50 meters. Some of the reported grades were, upwards of half a kilo per ton silver. And, they couldn't get any deeper because of either the water table or the rock was too hard. So at the moment, we're working on our access permits. We're also looking at making our land package a little bit bigger. And, we'll, as soon as we have our access permits, which, expected it'll be within the next couple of months, we'll move to generate drill targets. And, again, we have set aside a budget to drill this year, this project as well. So that's a summary of our projects. The big catalyst for the company is the results of our initial 12,000 meters at Gigi. We will also do 10,000 meters at Batopilas. I think those are I think, two main catalysts for the company. And then, Medicine Springs and La Reyna, we'll keep advancing them and getting them drill ready, and drill it as soon as we feel confident we have, strong enough drill targets. As I mentioned, we're well funded for these initial round of exploration on our portfolio of assets. I think a very unique portfolio of assets focused on high-grade silver and district scale. And I think that's a good summary of the company. And so I think I'll leave it at that. We're still undervalued. I think that obviously the market, looking at our drill results, I think that'll be the big catalyst for the company. And if you're new to the story, definitely take a look. Feel free to contact me if you want to have a more in-depth discussion. And yeah, I'll leave it at that. Thank you, Gwen, for giving us the opportunity to present the company.
Thank you so much for doing so. Very exciting to be drilling and another drill starting up at Batopilas. We're all keen to see those results. Again, I have some questions that I wrote down for Jorge during that presentation. Please, if you have questions, I'm seeing them come in, but keep them coming. I will put them together and pass them along after we hear from our third presenter of the group, and that is Outcrop Silver and Gold. They just added silver to the name, and appropriately so, I would certainly say. So Joe, could you please take us up to speed on the latest with Outcrop, including news that you put out just this morning?
It's a pleasure, Gwen. It's always a pleasure to be with you, and it's a privilege to be with this distinguished group. I'm the CEO of Outcrop Silver and Gold. I'm going to focus on the progress we're making drilling our high-grade Santa Ana Silver and Gold project in Colombia. I want to first point out quickly a first for Colombia. Colombia has slowly, through positive yearly momentum, made it to the Fraser Institute investment rankings for 2020 as first for a country measured by investment attractiveness index. It's the first year that Colombia beat both Peru and Chile. I'll be making forward-looking statements, which simply means that it's predictions that may or may not come true based on unforeseen circumstances. Our capital and share structure, we have 132 million shares outstanding. We have 206 million fully diluted. The warrants are probably at an average of 38 cents. We have reported 2.2 million cash on February 28th, and we had a bought financing that closed at 43 cents a share and netted us $9.2 million in March. Eric Sprott still owns almost 15% of the company. We have 10 to 12% in institutions, and management still owns 25% of the company. So Santa Ana is it's a colonial era high-grade silver and gold district, the highest known grade system in Colombia, famous all over South America, and particularly Colombia. We have reports from the Spanish Royal Archives that were actually abstracted by Indiana University that reported 14 mines producing an average of 4 kilograms silver over 1.4 meter width, up to 17 kilograms silver locally. All 14 of those mines are on our concession. And our best hole this year was 10.8 kilograms of silver equivalent. So it's quite possible for us to continue to drill these sort of numbers that the Spaniards were mining in the 1500s. So this is the news release I want to point out for this morning. We made our 6th chute discovery with 1.18 meters of 410 grams silver equivalent, and also a hole with 0.3 meters of 6,000 grams silver equivalent. You can do a lot with 6,000 grams, even at 0.3 meters. If you just look at a straight line dilution, you could dilute it to 2.2 meters and still have almost a kilogram of silver. So I think we're still, this new discovery demonstrates that we're in a potential rapid growth stage still. This chute provided a periodicity of chutes that are 3 large chutes in only 1,250 meters of a single vein zone. We have at least 7 or 8 vein zones identified, and we're going to resume panel and fan drilling with to the south and the north of this new discovery, and we expect to shoot discovery potential of every, or we expect that we could find a chute every 400 meters of vein zone. I'll just pull a few things briefly out of the summary. Is it's a 100% owned project, now over 28,000 hectares. Highway access, it's a drive-up project. Grid power, a lot of water that could be developed on the property, very strong community support, and excellent security conditions. The security isn't anything unusual, even though it's in Colombia. We have 6 discoveries now. We were rolling at a 75% success or 100% success rate. Things got a little bit more difficult, but we're still defining structure in all the targets. We have about a 75% success rate on targets now. The weighted average grade for all significant intercepts in 90 core holes equals 1.45 kilograms silver per ton equivalent. That's about 9 grams gold and about 857 grams silver. Again, our best intercept this year was 0.95 meters of 70 grams gold and 5.55 kilograms silver, or 10.8 kilograms silver per ton, equivalent per ton. Outcrop really, since the acquisition, we probably have over 60 kilometers of veins identified. We think we have a world-class silver project. This would be the geophysics that we're developing on the new acquisition. There's actually 4 historic mining areas to provide orientation and response modeling. We have the freest mine, which is in the central part of the acquisition, produced 10 million ounces of silver before 1907 in a very small footprint. There's mines between Santa Ana and El Porvenir, which is almost 30 kilometers apart. So a 60 kilometers cumulative strike of inferred vein. So the geophysics will be on known mining areas. We expect that the mining signatures will be useful for mine response and discovery response. This is on the original acquisition of only 700 hectares. We have 6 high-grade shoots discovered. That's less than 35% of the projected vein system here. You can see the discovery holes in the core of each shoot. San Antonio, the latest, is 1.18 meters at 410 grams equivalent silver. Megapozo, 9.5 meters of 10,000 7 grams silver equivalent. La Ivana, 1 meter at 6,400 equivalent grams per ton. Roberto Tovar, 5.6 meters of 800 grams equivalent. El Dorado, 1.2 meters of 1.4 kilograms. San Juan, 1.79 of 1.3 kilograms. Our exploration goal for 2021 is to identify now 5 to 6 new shoots in 2021. This just shows you the new discovery. San Antonio is just west of this Roberto Tovar. San Juan is just to the east. This demonstrates 3 shoots in approximately 1,200 meters of vein. Basically the center of the core of a shoot every 400 meters. And so we plan to panel and fan drill north and south for almost 1,500 meters of this vein zone. I like to say that Silver Corp is mining the veins that Outcrop is exploring. You can certainly make a lot of money and mine at a low cost and develop a large market cap with narrow veins. Silver Corp is doing it. This is just a narrow scale and narrow vein comparison on almost all metrics except width. We look as good or better than Vizsla. Vizsla is now down to a 4.41 weighted average grade with all their drilling. They do have a very large shoot in Panuco, but we've got 6 shoots of 250 by 350 meters, 6 with good definition. Silver Corp, the average of their veins is only 0.7 to 0.8 meters, and with a 450 15 equivalent silver gram diluted head to the mill. They're mining basically the type of veins we are exploring at $7 per equivalent ounce silver. It's important to remember that that Santa Ana is a high angle and low angle intersecting vein system. Invariably, when the high angle veins occur, they're usually packaged or they're in a package of up to 4 veins, closely spaced in parallel. Just some desktop compositing, you can get up to 18 meters at 450 equivalent grams silver per ton. So narrow vein system, but you're going to have some percent of this whole system that will be able to be essentially bulk mined underground with large jumbos and LHDs. This is a look at the low angle La Ivana. Basically, that yellow contour is greater than 500 grams. Just that 500 gram contour is greater than 500 gram contour is 250 meters by 350 meters and opening in 3 directions. Whereas it's less prevalent than the high angle shoots, the portions of the low angle shoots can also be composited together. Here's an example on the right of where two veins taken together composite is 6.3 meters at 338 grams. There really is something called the narrow vein advantage. It's develop small, mine small, and mill less. There's several advantages to narrow vein systems, lower capex, and faster development and buildup. It's a complete focus on maximizing grade. It's smaller equipment, produces higher grade ore with much less waste, much less processing, and a very small disturbance footprint and tailings facility for permitting. Resu stope mining is a mining method that's been around for a long time, still in use in numerous mines around the world, particularly in Australia, where it's very refined. You can Resu stope less than 1 meter veins at less than 12% dilution. You basically blow out the waste as working room, and then you take out a very narrow vein with very little dilution. Otherwise, on the right, the stope there would be an example of what they're doing in the Ying mine with 1.2 meter slusher and shrinkage stopes. Again, very narrow vein mining. So again, an example of low cost narrow vein mines are Silver Corp, 0.7 meter veins, AISC of $7 equivalent silver ounces reported, Resu and shrink stope mining, 415 grams. Then you have the more recent Orcano Ore mine, 0.35 mines, 3.5 meter veins, all Resu mining, and with a $8 equivalent silver per ounce cost, and mining 1.2 kilograms. So social responsibility is a big issue in Colombia, mainly because there's not much of a historic modern gold mining history in the Central Andes. So we've been doing some innovative things to maintain and build our social license. We've cooperated with nonprofits to do various things, including providing primary and secondary education to adults. We have provided materials for vegetable plots in the less developed areas of town. We're developing through the University of Medellin higher productivity farming methods. We're doing several microcap business startups, including fish farming and beekeeping, and we've provided over 400 wheelchairs to the disabled community of Falan. We know we're doing good with the CSR because we were able to receive drill permits in Santa Ana in less than 2 months. We have another project called Majama, which we hope to have permits to drill by late 2021. So really, it's truly is build trust in the community, partner with them, do the right thing, ask them how you can help, build opportunities in relative proportion to your budget and spend, and convince them there is a future for mining on lands near their communities. So the corporate catalyst would be finishing a 12,000 meter program, exploration drill program that's underway. We've got 2 rigs drilling approximately 2,400 meters a month every month. So we can expect, we hope to have continual news flow of drilling these high-grade veins. We hope to announce several more discoveries before the end of the year. We hope to generate drill targets on the 60 kilometers of veins on the new acquisition. There would be a possibility, if we get to the magic number of 10 or 12 shoots to think about a resource delineation decision in late 2021. Because of the way we're taking some delineation drilling, for example, in Lavana, along with exploration, we might be able to produce a inferred and estimated resource document publication in 18 months. Other projects we have going are Majama. It's an extremely high-grade gold and silver system. There's over 40 kilometers of veins that we've identified. There would be a chance that we would be scout drill it also in 2021 with a fairly modest program, but where we know we have a lot of veins being developed by artisan miners. We would like to advance at least 2 projects, being our Orobeja project and our Antares project in the Middle Cauca Belt, to major companies. Orobeja is right next to Newmont and Agnico's Anza joint venture. Antares is immediately adjacent to B2 Gold. Other objectives would be, as we've done before, secure a funding alliance with a major company. We had one with Agnico Eagle up until 3 years ago that lasted 3 years and provided almost $2 million of our exploration spend. And I'm happy to take phone calls when I can and respond to every email. So, please follow up with any questions you have.
Thank you so much, Joe. I will back up that Joe certainly responds to every question that I send him. So we should just test that out. He offered, so send them on over. Speaking of questions, thanks all 3 of you for your presentations. And I have a bunch of questions that have come in from the audience and of course, others that I will add to the mix. Joe, why don't I just stick with you to begin with, since your story is freshest in our minds. You just finished talking. Let's talk about, you started by mentioning that Colombia has made it onto the Fraser Institute of the Fraser rankings, and that it beat Peru and Chile. So that I wrote that down because that stood out to me as a comment. I don't know if that says more about Colombia advancing or other countries deteriorating in their mining functionality. But you've been in Colombia for some time. Do you feel investor sentiment towards Colombia turning? Have you experienced changes in how functional it is as a jurisdiction while you've been there? And of course, what about the current unrest that's going on right now? Let's dive into that side of things a little bit more.
Yeah, let me address the unrest first. It's more of an urban phenomenon or a local indigenous community phenomenon. We have an office in Medellin, but people are going to work every day. We really haven't seen much of a reflection of the strikes or the stoppages in Falan itself. It's certainly a sad situation for the Colombians, but like COVID, it really hasn't affected our project in Santa Ana for the last 18 months. Regarding the government has always been bureaucratic inertia, particularly reflected in converting applications to titles. Mm-hmm. We basically have 2 people that are essentially, for lack of a better word, lobbying or getting in the face of the National Agency of Mining to make sure that they're looking at converting our applications. We think we're going to have at least 3 converted contiguous to our existing Santa Ana concession this year. I think what you are seeing, and it's reflected in the Fraser ranking, is you are seeing companies on the outside looking in. So we talk frequently or have companies come in the office to talk. And so I think Colombia, the security risk has finally got to an acceptable level where they're seeing the exceptional gold endowment in Colombia, because Colombia is like Peru or Chile 30 years ago in terms of exploration that's been done.
Gotcha. Okay, that's some good context there. I got a few questions about, when a resource estimate might happen. You touched on that near the end of the presentation. I wanted to layer onto that a little bit with, Santa Ana. There's some complexity to Santa Ana in that there's, steeply dipping veins that are stacked, they're narrow, then there's low angle veins. You've certainly, as one should, put a lot of time into thinking about how these could be mined. But I guess what I'm getting at is, the market isn't great at complexity. They like, one big thing with lots of silver in it. And instead you have multiple smaller but high grade things of different shapes and sizes. So what's your approach to that? What's your tipping point for a resource estimate, or potentially even a PEA, since a PEA would be the kind of thing that would demonstrate that the complexity all works? Talk a little bit about your approach to the fact that this is a little bit complicated, even if, despite or alongside being a fantastic discovery.
Yeah, I think that, okay, let's accept the fact that there's multiple large chutes. I mean, 250 by 300 meters is large area wise and provides a lot of working faces. I think if we had, just doing the simple arithmetic, that anyone can do based on the size and our average width and grade, if we get 10 or 12 of these this year, we would be getting in that, magic, whatever you want to say, 60 million ounces or something, a silver equivalent, or at least that potential in front of you to evaluate. And then I think you got to realize that if you have, okay, think of comparing San Antonio, Roberto Tovar, and San Juan to Panuco at 800 meters. You have 750 meters of cumulative strike of vein in 1,250 meters, and the development would be sequentially bang, bang, bang on those chutes. And then what you would do is simultaneously you would have a crosscut to an adjoining group of chutes. So you're gonna invariably have a little bit more development relative to the volume of ore you're producing, but on the other hand, you're going to have that small vein advantage of very high grades. Selective mining that's a little more costly, but it produces much more grade for the amount of money you spend, taken together. It would be like a checkerboard of expansion outward as you mine, taken, and you would probably have 4 chutes active at any one time, and you'd be working say 3 levels on those chutes and have as many faces as you'd need to have it be a major company size production rate. Right.
And if you say 10 to 12 would be perhaps that rough estimate tipping point. This periodicity of chutes that you've talked about since you first introduced Santa Ana to me, a year and a half ago or whatever it was, and that has followed through as you've explored, that if that periodicity continues, then that is a reasonable expectation even for the end of this year.
Yeah, I think so. You don't want to get too smart with exploration or too elegant. Because it's all about you don't actually you're exploring for structure first, and then you're defining, and then you're finding veins within or chutes within the structure. It's a typical pinch and swell. You drill almost barren structure because you're in the structure and you're doing it in the pursuit with systematic drilling to hit the next chute 400 meters away.
Yeah, gotcha.
And they seem to be there, so.
Well, keep stepping 400 meters away. We'll keep watching the drill results, okay?
Okay.
Thanks, Joe. Jorge, let's, I got a bunch of questions about when you're going to issue the drill results from Gigi, and I'm sure this is I would guess this is the most common question that you get. Now, you and I have chatted about how you think you're going to issue those all in one group. Do you want to just talk about that a bit so people understand that approach? Yeah, and understand, yeah, what to wait for, what to expect here.
Absolutely. So, the plan is, as I said, we've added a second drill rig that's coming to site next week, really just to help us finish this as quick as possible. The reality is that we received the assays were very late to come, as everybody knows, but I think that's been addressed. They're now, I was just at site a couple of weeks ago. The lab we're working with is now able to deliver them quite a bit quicker. So, we think it'll take us another 8 weeks to complete the program. And then, within August, the idea is to deliver the results. So we're looking at the rest of June and July to complete the program. And then, as soon as we have the results to release the whole drill campaign. The thinking behind doing the whole drill campaign in one package is, because we're drilling such an extensive area, the distance between, the drill holes is in many cases, considerable distance. And, it's to really paint a picture of this stage one phase of exploration, there's two big things that we're looking for is the intrusive which is typically where the skarn part of the mineralization is wrapped, and of course continuations of the chimneys and veins from the two producing mines to our east and west. So that would be what to watch for. I think as soon as we release the results, as I mentioned, the idea is to keep drilling, and if we already have a budget established for drilling, and then let the market digest the results, and depending on the results, of course, we'll determine the size of the drill campaign and the exact drill targets. So yeah, I hope I answered that sufficiently.
For sure. I would say adding a second rig, obviously, for to speed things up makes sense. For those of us who sit on this side waiting for the numbers, second rigs are never a bad thing. They usually suggest that the rock is looking more like you want it to than what you don't want to see. Drilling, obviously, you're now also drilling at Batopilas. The statement that Batopilas was the highest grade silver mine in Mexico ever, that's a heck of a statement, since we're talking about like the silver, we're talking about Mexico. Do you want to, I know you went through Batopilas and a bunch of the grades. Do you want to talk a bit about widths there, just so that, results from Batopilas are obviously a ways off. You're starting drilling next week, but let's set the stage for those results a little bit. I don't think we talked.
So it's very different from Gigi. The widths at Gigi are just very large. Just the nature of that CRD system. Batopilas, there are narrower veins. The way that the old miners mined it was, they chased the veins. It's native silver, so it's, in many cases you can see it visually. So they change the veins, and they do, in many cases get quite big in places. But generally speaking, it's narrower veins, but just extremely high grade. So again, the average grade of the silver is 1.5 kilos per ton over 350 million ounces. However, there were years, where you had, this is also one of the first mines that was in production using modern mining methods. And there were years where I understand, a full year of 20 kilos per ton silver, and which is kind of outrageous, but well documented, so it's a little bit hard to tell exactly what we're going to encounter in this first drill campaign, but again, we're drilling close to surface, and what Mag Silver has drilled in the past, was extremely high grade, and we'll have to see. The other thing that I'll point out is the first time that gold has been encountering the property. Also very high grade gold from the trenching. We did trenches from surface to about 3 meters, and then took channel samples along the trenches, and found a large number of high-grade gold samples. I think the highest one right at surface, 21 grams per ton gold. We're also getting whiffs of an epithermal system with silver, which is not something that we had seen before. So I think this first drill campaign at Batopilas, I think it's the largest drill campaign ever done in this district. So it will generate a lot of information.
And quickly, a little early to ask, but do you think you're going to wait and issue all of those results together, or if you hit the high grade on a vein?
I don't think so. No, I don't think so. But Batopilas is very different because we really are just drilling along a vein, right?
Exactly.
And so I think
we won't have to be perhaps so patient for those ones.
Correct. Yeah, we haven't discussed that as a team, but I think the idea is at least do it in 2 stages. I think we should be able to finish the first 3,000 to 4,000 meters before the end of the summer.
Okay, that sounds great.
Yeah.
Thanks, Jorge. Taj, I'm going to get back to you. You had a long wait there between presenting and me pestering you, but here we are back at you now. I got quite a few questions, and you and I can dive into this a bit more in our backstage interview, but I got quite a few questions about grade variability amongst the metals that are there and how those fit into the high grade pit versus the bigger picture. Do you want to talk a little bit about metal zonation or variability within the deposit?
Yeah, perfect. What we're noticing, obviously, it's a very big footprint, almost 2 kilometers in strike for the pit. Along there, the early parts of the mine are much higher in silver. So when I talked about kind of a life of mine, we're targeting kind of revenue split of 60-65 silver, 5% or so gold, and then the rest zinc lead with a heavy emphasis on zinc. That in the early parts of the mine life, it's actually more like 70-75 silver. As you start moving to the northeast into the later stages of the mine life, the base metals come up. So that's generally what it is. Is it staggeringly different? No, but it's enough where you get a 7-10% kind of swing in revenue contribution for silver. Okay,
sounds good. Maybe we'll try and show some cross sections maybe in our backstage interview there so that people can get a look at that.
Perfect.
You talk about moving to the northwest and the zinc content increasing relative to silver, things like that. But of course, then there's these veins, and this brings us to the sort of required process that an explorer goes through, where you're putting together this PEA on the pit, but at the same time, you know that these veins are there, and you know that you're going to put them in the next mine plan, and maybe ideally you just wait and do it all at one go because you don't want the market to sort of think one thing when there's another thing coming right down the pipe. But how do you, if the veins come through in any of the way that along the lines that you think that they're going to, do you want to talk about how that zonation or how that life of mine silver grade or silver weighting might change? I know that's a lot of arm waving because you're still early on the vein side of things, but people still want to know.
Yeah, so for the veins, we don't notice the zonation as much. You're kind of in that kind of 60-65 silver throughout the strike that we're seeing for right now. The vein we've drilled the most in terms of number of pierce points at the Todo Santos, that's in the most north. We've got about, I think, 25 pierce points in it across about a kilometer or so, kilometer and a half strike. We're down to about 350-400 meters, but there's a lot less zonation there. You've kind of got your ratios and they kind of stay tight. That again relates back to the geology, kind of the rocks were tighter there, stayed intact. Your ratios kept pretty constant. And then once it got to the area where it was able to permeate through and disseminate the mineralization where the pit was, you're getting more of your zonation. So the veins are a lot more fixed in terms of their kind of ratios.
And then what do you think about, somebody was specifically asking, what do you think the IRR and NPV are going to be when you put out your PEA? I know that you're not going to get yourself in trouble, but you can talk about expectations. And then I want to layer onto that how you think those might shift once you perhaps incorporate veins in the next iteration.
Yeah, so obviously the resource and PEA are work in progress. We can't say anything to those yet, but listen, it's, you know, if you have an NPV of CapEx ratio of 1-to-1, that's great. Probably going to be a mine. I think we're going to be comfortably ahead of the 1-to-1 NPV to CapEx, probably ahead of the 2-to-1 even. But we'll see as we start putting things together. And obviously IRR, you're kind of targeting definitely over 20, probably into the 30s, depending on what price you use for your base case silver. But remember, this is a mine life of about 20-25 years at least right now. So you don't have that. You sometimes see the 80% IRR. This is a multi-generational mine where if you get 25% IRR, it's fantastic.
For sure.
But NPV to CapEx ratio is a huge part of it, and we think we're gonna do a great job on that. For the veins, you talked about what incremental effect that might have on the PFS NPV early days. But the engine room is the pit, the PEA. But if we worked out, if you can put even 2 kilometers together, 2.5 kilometers of the grades and widths we're seeing, you're talking about 4 or 5 million tons of 20-25 ounce per ton silver equivalent. There's, you know, that's an extra 100 million ounces added to what we already have. That's a company in and of itself, just the veins. So it could be pretty. It could be definitely a huge bump on the NPV. But you know, we really do, you know, think and know that the engine room currently is the pit because of its low strip, starts at surface, et cetera, fantastic processing characteristics, et cetera.
Okay, I have one final quick question. I know I'm supposed to wrap things up here, but one final quick question. You have tons of cash in the bank and you talk about the cash and the warrants being, you know, available for, you know, a CapEx contribution. Is there actually an expedited path to permitting and build here that we need to be aware of? Because, you know, you're about to do a PEA, but you're talking about build funds. So I'm just curious if there's a link there.
Yeah, so basically I tried to allude to it in my presentation, but the PEA that's coming out is really going to be, it's effectively the quality of it, and most of the sections will be PFS level in terms of confidence level of being de-risked. So our general plan right now is PEA, like I said, this fall, probably about a year later, maybe earlier if we can accelerate things, is the PFS. And then probably a year after that, construction decision, FS and construction decision. So, and that it'd be expedited, yes, we're talking internally about potentially going right from our PEA plus right to an FS. That's a thought we're thinking about. So things could be accelerated, yes. And in terms of permits, et cetera, we're already working on them now. We're working on getting construction permits. You know, we've started the process already. So trying to get ahead of things.
Fantastic. I have to wrap things up. I'm getting messages on my screen to the left here telling me to wrap it up because the next session has to get going in not too long. I know there were some questions for me and some other questions for these gentlemen that we didn't get to. I'm sorry for that. Time is what it is. But we do backstage interviews, so I will answer the questions that came in for me. The uranium question, by the way, that has to do with a potential uranium leak at a nuclear processing plant in China. People were asking why uranium has been underperforming the last 2 days. So delve into the news and look at, you know, a uranium power plant in China and potential leaks there. That's why uranium's having a bit of a struggle right now. Perhaps I'll write about that this week to try and illuminate. Nonetheless, thank you all for presenting, and everyone who's watching. If you have more questions, continue to send them in, and I will ask these guys anything else that comes in and has come in our backstage interviews. And for that, we're done with the first session of today, and I hope you all stick around because there's lots more interesting silver discussion and companies coming up over the rest of the day. All right, everyone. Thanks, guys. Take care.
Hello, everyone, and welcome to the second edition of the Silver Investor Forum. Before my presentation today, I just want to say we have 4 exciting companies presenting. That will be Blackrock Silver, GoGold Resources, GR Silver, and Sierra Madre Gold and Silver. I'd like to remind everyone to use the chat function to type in questions for the presenters. And the format will be that I'll first do my presentation on how to invest in silver and the accelerating silver bull market. And then we'll go through each of the companies one by one who will make their presentations, followed by a Q&A session. So how to invest in silver's accelerating bull market. I'm going to cover 4 aspects of this. First is silver's demand drivers. Right now, those are essentially inflation and industrial demand. I'll go then into what's next for silver. I'll talk a little bit about its accelerating bull market, and then finally how to invest in silver. There's a lot of talk lately about inflation, and recent numbers that were reported. Core US consumer price inflation showed the largest yearly increase since 1992. So yes, the Fed keeps talking about it being transitory, but certainly from all of the indicators that we have and the research that we're doing, it certainly looks like inflation is here in a big way and likely to stick around. It's not just me saying it either. Everyone knows Warren Buffett. He's probably one of the best placed investors to give a point of view on this, given his conglomerate and all the different sectors that Berkshire deals in. And he recently said, we're seeing very substantial inflation. It's very interesting. We are raising prices. People are raising prices to us, and it's being accepted. And we look at someone like Richard Galanti, who is Costco's CFO, and they're saying very similar things. They see a variety of inflationary pressures. They and others are noticing inflationary factors are pretty much everywhere: higher labor cost, higher shipping, transportation, container shortages, and it's across sectors, everything from computer chips to oils, chemical supplies, facilities hit by the Gulf storm, and across the commodity sector as well. So how does this affect silver? Well, we are in fact in conditions that are ideal, both from the demand, for both demand drivers, both the inflation hedge and the industrial demand side of silver demand. Inflation expectations, which is a separate thing from inflation itself, just the outlook on what inflation is expected to be going out over the next 5 years. Now, if we look at the chart on the left, that plummeted in early 2020. Quickly recuperated, and in fact has been soaring pretty much relentlessly ever since then. And that gives you an idea of what the economy in general, what people are thinking and expecting, and concerns about inflation. In fact, recent levels have surpassed inflation expectations going back over 3 years at this point. If we look at the consumer price index, we see that prices, in fact, have been accelerating. The chart on the right is the consumer price index for all urban consumers. It's the US city average, and it excludes food and energy. That, of course, dipped in the early part of last year, quickly recuperated, went back to sort of the same pace of gain. And then early this year, absolutely exploded higher. And so we certainly have an indication of higher inflation on the consumer side. Another indicator is, as I said earlier, industrial and what commodities are doing in this case. So commodities tend to rise in lockstep with inflation expectations. The chart on the left actually plots the two of these side by side. And you can see a very, very close relationship, high correlation between inflation expectations and what commodities do. And as far as commodities go, if we look at commodities from the point of view of producers, where often these are their raw materials for manufacturing and production, the producer price index for commodities, all commodities, recently broke out to a level that is a high, well beyond anything we've seen for years, has surpassed the 2008 high, and certainly is on quite the strong trajectory. And if we look further back at commodities in general, in terms of commodities prices relative to the S&P, if we go back 50 years, we see that it goes through some large cycles. It peaked in 2008, where commodities were relatively expensive. They've been dropping dramatically against the S&P, and it looks certainly like commodities are bottoming and due for quite the reversal. That certainly seems to have, looks to have started to take place. If it were to regain sort of its average of the last 50 years, we're looking at probably an 8 to 10 time return across the board on commodities from this point. A lot of this is being driven from what we call the fourth industrial revolution. The interesting thing about this revolution is things like networks, interconnectivity. It's certainly driven by clean energy. What's different is that it's globally coordinated, and it's a strategic effort on the economic and the social side. Silver certainly benefits a lot across the board, in many ways, from green energy and this green revolution, and I'll touch on that a little bit later. If we look at silver supply over the last several years, mine supply actually peaked in 2015, has been dropping, in fact, every year since then. It was worsened with the COVID shutdowns, of course, because miners were challenged in terms of being able to operate, but it's an industry-wide issue. We've seen that it's also fallen across the 10 largest silver producing countries over the last 5 years, and none of them, of course, has been spared. What's interesting about silver from the supply side, the mine side, is that primary silver mining is under 30% of the market. Something like 73% of silver is produced as a byproduct of other metals like gold, lead, zinc, and copper. So what happens is, if the price of silver rises, producers of these other metals have often little incentive to try and increase their silver production, simply because it tends to be a small portion of their revenues. So we call that inelastic. In other words, the silver supply is inelastic to the silver price. And so that encourages or it fosters a bit of a lower supply. We have a situation with lower supply, growing demand, and that tends to exacerbate to even higher prices. We look at silver demand in 2020, and in this case, excluding the demand from the ETF side, 54% of demand came from the industrial side of demand. That a lot of that is solar panels and electric vehicles. 22% came from net physical silver buying, things like coins and bars. But what we do know is that silver investment has been exploding, especially on the ETF side. Actually, in 2020, 330 million ounces were bought up by silver ETFs. Certainly an aspect of demand that's hard to, if not dangerous, to ignore. In fact, by early this year, the entire inventory held by silver ETFs globally reached over 1 billion ounces, which is an equivalent to an entire year's supply of silver. And that helped push demand for physical silver through the roof. Premiums for coins and bars are still, in many cases, triple what normal levels tend to be. They've gone from about 12 or 15% to very close to 50%. Many of you are probably aware of the Wall Street bets and silver squeeze movements. They've certainly driven a lot of attention to the silver sector. And we now have perhaps an entirely new generation that's watching and participating in the silver investment space. And even just recently, the US Mint called out a global silver shortage for an explanation for why they are certainly limited with supply, citing record demand in that aspect. Here I've run my own numbers where I've included the demand from silver ETFs in 2020, and it certainly makes the demand pie look very different. What it does is industrial demand actually represents about 40% when you include ETF demand. And the physical and ETF side, if you group them together, actually represent something like 43% of entire demand for silver last year. Again, ETF demand and investment demand certainly is something that can't be ignored. It's been a bit of a wild card lately. And so if you include the ETF demand last year, then the net supply of silver was actually in a deficit scenario by as much as 250 million ounces, which was 25% of the entire supply of silver for 2020. Silver certainly has many industrial applications, and that's what makes it interesting as a metal and quite different from not just precious metals, but base metals as well. So it's It has industrial applications, but it's also considered a monetary metal. On the industrial side, solar panels are probably the single largest driver of demand. They represent 10% at 100 million ounces per year. And the green revolution certainly is increasing the demand for solar panels and the silver that goes into them. Now, thrifting has reduced the silver demand per panel, but that seems to be being made up by the amount of growth in installations. Automobiles, especially with newer technologies, we see that EVs require twice the amount of silver that internal combustion engines require. In 2020, 60 million ounces were demanded from the automobile sector, and the Silver Institute expects that to reach 90 million ounces by 2025, which is 50% higher. Electronics are a big driver as well. Printed and flexible electronics in 2020 represented 48 million ounces, and that's expected to rise to as much as 74 million ounces by 2030. We also know that silver is important in medicine, and with the experience of the last year and a half with COVID, we certainly can imagine all sorts of applications where silver can help to kill bacteria. It limits infections. We find it embedded in medical devices and equipment. Silver nanoparticles are used in things like cornea replacements and contact lenses, and we see developments almost daily on that on the medicine front with silver. As I said earlier, demand for silver in the automotive sector is quite strong. EVs requiring as much as 2 times as much as what an internal combustion engine requires. And something that's perhaps less appreciated is the EV infrastructure of charging stations, where silver is certainly required at quite a high level as there as well. I mentioned electronics earlier. We certainly see strong growth there. 32.5% of global silver supply goes to electronics, so that's nearly 330 million ounces last year. And we see 54% growth into 2030 on the printed and flexible electronics demand aspect of silver. This represents things like on-off switches, RFID inventory tags to track items, to track inventory. And then we talk about things like smartphone sensors. It's really across the board in higher end electronics these days. So what's next for silver? Well, what we do know is that silver is still quite cheap. If you look at silver versus the money supply, silver bottomed in around the year 2000. We had a considerable run up and then correction from there. The silver price versus the money supply likely bottomed again last year in 2020. We've seen quite the bounce from there, and certainly all indications are that it's going to continue rising from that point of view. If we look at the gold silver ratio, so that's how many ounces of silver it takes to buy an ounce of gold. Right now we're at around 67 to 70 ounces of silver. That ratio peaked in March of last year around 125, which was an all-time high. I believe it's heading likely down to around the 55 level. If we use round numbers and we estimate, say, gold at $2,000 and a 55 gold to silver ratio, that would imply $37 silver at this point, which is a nice 32% gain in the silver price from here. So what has silver done in the past? Well, in the 1970s, so in that decade, silver was up an astounding nearly 37 times. From about $1.30, I believe, to nearly $50. We saw a repeat to up to $50 in the 2000 to 2011 period, where silver was up over 10 times, nearly 11 times. And to give you some idea of what silver stocks can do versus the silver price, in 2016, in the first half, we saw the price of silver up about 48% over the first 6 to 7 months. And we saw silver stocks, this is on average, silver stocks were up 5 times, about 240% in that same time frame. So far since the bottom in March, Silver stocks have been up about 125%, whereas gold stocks are up about 85%. So we're starting to see a considerable outperformance. We know that silver stocks also tend to outperform gold stocks in silver bull markets or in precious metals bull markets. We expect that to continue as the gold silver ratio continues to fall. So silver's in an accelerating bull market. Let's look at that a little bit more. In the 1970s, as I said, silver peaked near $50. It then went through a multi-decade correction and did something similar back in 2011. We see silver starting to climb once again. I certainly expect silver will take out relatively easily, eventually, that $50 high and considerably and rise considerably from there. As I mentioned earlier, silver always outperforms gold in bull markets. If we look on a percentage basis, the climb in silver in the 1970s and the 1980 peak was a multiple of gold's gains. We saw a similar thing back in 2011 where silver's gains, again, easily outpaced gold's. And right now, silver is close to about 50% of its all-time high, whereas gold is only about 10 to 15% below its all-time high. So from that perspective, silver certainly looks like it has a lot of catching up to do. The outlook for silver is quite strong. Silver stocks are historically cheap. There's been a considerable decrease in spending over the last several years by silver miners. They've been, on average, depleting their reserves, which need to be replaced. So that makes a lot of sort of the mid-tier developer juniors more attractive, as the larger producers will start looking to replace depleting reserves. And to give you a bit of perspective, the Silver Institute this year said the outlook for the silver price in 2021 remains exceptionally encouraging, with the annual average price projected to rise by 46%. So how do you invest in silver? Well, you have plenty of options. Physical silver would be one of them, coins and bars. However, right now, as I mentioned earlier, premiums are very high, in many cases triple what they normally are. Your next option might be physically backed silver ETFs. My standout preference there is the Sprott Silver ETF. It has very low premiums to the silver price. And just given how the ETF is built and how and where the silver is stored, et cetera, I'm certainly most comfortable with that ETF for silver. From there, you have silver miner ETFs, which is a basket of silver miners. You have larger producers. There are also silver miners that are juniors, which is a second type of ETF. And from there, you have individual companies that are in varying degrees of risk. You start sort of on the lower end with royalty and streaming. From there, larger producers, growing producers, developers, and juniors. Vetting silver investments. So in general, I have sort of three main criteria. My first is to look at management. I look for management that has plenty of experience, plenty of depth, and can demonstrate several prior successes. Exploration companies have to show that they have access to knowledge resources to help advance their projects and their exploration, especially on the technical side. Grade is certainly a big issue. In general, higher is better. If it's a company that's not producing, I look for ideally a resource where 50% of the resource is represented by silver in terms of value, at least on the company's main project. If it's a producing company, I look for 50% silver value by production, silver revenues. And then thirdly, location. Certainly safer is better. From that perspective, I favor North America, so Canada, the US, and Mexico, some Australia, some parts of Europe. South America is becoming almost on a daily basis more difficult and offering fewer and fewer acceptable choices. A few places are okay. Many of those I would otherwise tend to avoid. So to recap and give you an overview, Silver Stock Investor is a silver-focused newsletter. It's all about what I buy and sell with my own money. It's unbiased research. I receive no compensation from any of the companies that I write about. I cover the entire risk spectrum, everything from the silver ETFs and larger producers through to royalties, growing producers, developers, optionality plays, developers, again, and silver exploration, junior silver exploration companies. The newsletter is aimed at new and experienced investors, and so I cover everything from low up to high risk stocks. It's published by Resource Maven. We are independent and supported by subscribers exclusively. We never take money from companies for coverage. And as a precious metals expert, I contribute to various websites and do interviews and so on with several of these outlets. So I just want to encourage anyone that wants to know a little bit more. You can go to silverstockinvestor.com and remember, silver is in an accelerating bull market. It's certainly an exciting place to be. So with that, that's the end of my presentation. And I'd like to remind everyone that as we start the presentations by the individual companies, to use the chat function and include questions that you may have for each of the individual presenters. So first up, we have Blackrock Silver. Presentation will be by Andrew Pollard, who is president and CEO. So Andrew, on to you. Go ahead from here.
Thank you very much, Peter. It's great to be here. You certainly laid out a compelling case for silver, so I'm not going to touch on that too much. What I'm going to touch on is why I think we're going to be one of the better investments in the space. Well, whether or not silver actually goes on the run that we all think it will over the next few months. So for those of you that don't know our stock, we trade on the venture. BRC is our symbol. We're also on the OTC under BKRRF. If any of you are over in Germany and are feeling daring, try us out on the Frankfurt. It'd be wonderful to know actually how that goes. So give us a shot over there too. Certainly going to be making a hell of a lot of forward-looking statements. We've got a lot to look forward to over the next 6 months. So, you know, ultimately it's about silver today, but ultimately if you guys are watching, it's because you want to make money. I'm invested in this company. I control over 5 million shares fully diluted, and I'm all in here. I'm all in for two reasons. One, I like the fundamental case for silver, but mostly I really like our project and the team we've built, we've put together. It was a year ago today that we drilled our very first drill hole into our Tonopah West project. And that drill hole, as you can see, we released at the end of July there. It worked out to be the single best drill hole drilled in Nevada last year. We did 30 meters of a kilogram per ton silver equivalent on drill hole number 1. Since then, we've drilled in the order of about 60,000 meters up until today. By the end of the summer, we'll have completed about 80,000 meters, making us one of the most active junior companies in Nevada. Since then, obviously, we've gone on a hell of a run. We've just closed a $12 million financing, which included participation from First Majestic Silver. You know, they recently just changed their motto, which was one country, one commodity, which they've had for the last 19 years, by getting into Nevada. You know, they bought Jarrett Canyon and they bought a position in us. And I think you're going to see a flight of capital out of South America just because of what's going on down there. And when it comes to what we're doing, we're in the silver state of Nevada, and we're probably the most exciting story down there right now. Fully financed to get through what we're doing this year. And as I said, you know, the next 6 months, we've got a lot to look forward to. And that's because we're coming out with our maiden resource estimate in Q4. What that's going to mean is, well, we got a lot of drilling to do between now and then. And we got a big backload of assays that we'll be reporting very shortly and continuously, all of which will be thrown into the pot of our maiden resource estimate, which other than drill hole number 1, that's going to be the single biggest catalyst we've ever had. So as I said, lots to look forward to. So our project, Tonopah, it's called the Queen of the Silver Camps. And it's literally halfway between Las Vegas and Reno. In fact, the highway that connects the two goes right across our property. So in terms of infrastructure, it really doesn't get much better than this. Now, this district 100 years ago would have been one of the most significant precious metals districts on the planet. It produced 174 million ounces of silver and 1.8 million ounces of gold. So that's roughly 100-to-1 silver gold ratio. For those of you looking for exposure to silver, as Peter said, only about 29% of silver produced actually comes from silver primary projects. Another 15% of silver produced comes from as a byproduct of gold mines. Well, we're a pure play precious metals district, but we're silver primary and 100-to-1. So you're getting 100-to-1 exposure to silver, but you're getting backstopped by gold. And generally, people that like silver like gold. And yeah, we're a pretty good investment when it comes to that. So, when everyone thinks of Nevada, they think of it for the massive gold endowments, but Nevada is known as the silver state for anyone that's been down there and driven on the interstate. And it's known as the silver state for two reasons, the Comstock lode and Tonopah. Comstock slightly beats out Tonopah in terms of historic production, but I'll tell you what, based off what we're seeing, I think we're going to put Tonopah as #1 when it comes to silver jurisdictions in Nevada. So that's what I'm working towards, and I'd like to rewrite the history books there. Now, mining's a global industry, but in terms of where silver's produced, it's generally, about 2/3 of silver's produced in Latin America. Between Mexico, is #1 by a country mile. Peru, you've got Chile, Argentina, Bolivia is huge. Now, that's all well and good, but when you look at jurisdictions in terms of investor favorability, as laid out by the Fraser Institute recently, Nevada's #1. Mexico doesn't even make the first column in the on their list. Peru's #34, and for any of you that have been following what's going on in Peru right now with the new presidential elections, where the guy who just won it is saying he wants mining companies to leave 70% of their profits in the country. Do you think that's going to put an M&A premium on those companies, or do you think it's going to put a significant M&A premium on what we're doing in Nevada? I'd opine that we'd command one of the highest take-up premiums on the market, and what we're trying to do right now is rush our way to the finish line of getting this resource out, because I frankly don't think this time next year, this project will still be in our hands. It's too good to be true in terms of what we're drilling. As Peter laid out, what you want is grade, you want jurisdiction, you want catalyst. We got all three, and I think we're going to be just rushing to the finish line on this, and we'll see what happens. So the Tonopah Silver District, as I said, this time 100 years ago, one of the most significant precious metals districts in the U.S. In fact, to this day, Tonopah represents one of the most significant mining discoveries in Nevada, not just because of what they discovered in the district itself, but it led to many other discoveries leading up to World War I, including Goldfields, Bullfrog. Goldfields ended up becoming the largest city in Nevada in the early 1900s, and that was all on the back of the rush. So much of what's known as the Walker Lane district was discovered on the back of Tonopah. In terms of grade, historically, this is going to blow many of you guys off your socks, but it averaged in the 30 years or so of commercial production at 1,300 grams per ton silver and 16 grams gold. Bonanza stuff. Here's and really the story of the district itself. It had nothing to do with the quality or the fact that effectively the mines in the district were mined out. I mean, the reason that Tonopah still isn't top of mind and we're the first group to go back in 100 years later and drill into these mines had nothing to do with the I guess reserves on our property being depleted. It had everything to do with the business side of mining and metals prices tanking in the mid-1920s, leading up to the Great Depression. You'll see on this bar chart here, production went straight up. I mean, they found these big outcropping veins at surface. They were super gene enriched. When they first started producing, the early days, they were producing, in some instances, over 10 kilograms silver. And then as they went deeper and followed it along strike, it averaged out at 1,300 grams silver, 16 grams gold. Eye-watering numbers. But what happened in 1923 was that they unpegged the price of silver from $1 an ounce, which it was leading into that, And within 3 years, it fell to 35 cents an ounce. It sent every company belly up because, of course, they were operating on debt to fund development, to fund work. And really, all these companies ended up in Chapter 11. Now, what's unique is we're the first group to consolidate this district really since. What you'll see in the lower portion of your screen there is what the Tonopah Silver District looked like in 1912. All those different colors represent different publicly traded operating mining companies. Cut that down the middle, we have the entire western half. Now that's significant because it's an east-west trending set of veins in this district. Now the discovery was made on the east side of town, and what they did was they mined all of these veins from surface and they followed them westward. So early on, the east side of town were effectively mined out by their estimation, and the west represented the blue sky. It's where the last commercially producing mines were in the district when they went belly up. And guess what? It's what we've consolidated, put together, and are the first group to go back in and drill into the many historic mines on our property. And we've shown some significant new life. In terms of infrastructure, it doesn't get any better than this. I mean, there's our drill rig set up between a Subway sandwich shop and the Comfort Inn. We got water, we got electricity, we got everything you need. We got casinos in walking distance. So, as I said, a year ago today, we started drilling. We only set out to do about 7,500 meters. We ended up doing 30,000 meters between June and December. This year, we didn't, our targeting's been so good that the model's predictive. We didn't have to stop. We didn't have to recalibrate. We decided, you know what, we're going to go full throttle, and we're going to lay out at least 40,000 meters. Right now, it's actually looking more like 50,000 meters that we'll complete. And we'll go from first drill holes into our property to delivering a maiden resource by Q4 this year. So it's been exciting stuff. But it's quite an exciting program because we're not just doing infill. We keep stepping out. Since we laid out our 40,000 meter program in January, we've more than doubled the known strike of all the veins in the district. We've hit 3 new veins as we're going just by fluke. Guess what? We've got 4 drill rigs at site right now. 3 of them are focused on the resource, and we're using the 4th to continue stepping out, expanding, testing new targets. We just drilled a 1-mile step out from one of our big zones. So if that hits, I might be retiring. So anyways, as I said, we've now identified in a year 10 different veins. If you're to lay them out end to end, that's 5 kilometers of strike. Now, what's more exciting is the grades we've identified. In our drilling last year, we identified 40 significant intercepts ranging from a meter to 29 meters thick. We're using a 200 gram per ton cutoff. And using that, we had grades, we had 40 significant intercepts, but moreover, we hit multiple 2 kilogram plus silver, pure silver hits. We hit gold up to 26 grams per ton. Right now, we're just showing significant size potential. So, we're a train on the tracks at this point. As I said, the model's predictive. Pretty much all of the veins that we have identified so far are open, except where they end up at the property boundaries. The western half of our portfolio still is yet to be really tested. So we keep stepping out there, as is the northern half. So the main portion that we're focusing on for the resource is what's known as the Denver Paymaster Bermuda veins. There's a series of 4 veins there that were mined together, and they represented the last commercially producing mine in the district up until about 1930. So the center part of your thing there. Now, the biggest vein we've identified there is called Merton. And if Merton keeps going the way it is, I'm going to be naming my firstborn Merton Pollard. Because right now we've got about 1.5 kilometers of strike delineated. It's averaging about 3 meters thick. And of all the drill holes into it, we're averaging 798 grams per ton. Merton alone has the chance to be a household name within the silver industry. But guess what? We've got 9 other veins that we're drilling out too. Merton's still open for expansion, but this is going to be the big kahuna of the project. I mean, right now, based off what we're seeing, it could be anywhere between 3 to 4 million tons. Anyone that wants to do the math there, average it out at say 800 grams. Eye-watering stuff. And as I said, that's just one of our veins. The vein that took the market by storm last year was called Victor. VIPR represented the thickest vein in the district, and they got all the way down to around 1,880 foot level in the 1920s when they got turned around by water. Well, we've confirmed the down dip extension of what they were mining there, and we've now got about 500 meters of strike all the way to a property boundary there, and that's where we hit that 30-meter zone of a kilogram per ton. Back in the old days when they were mining these things, they did zero drilling, so they were just mining what they could see in front of their eyes. We've now hit 2 other new vein zones in this area too, and up to 3.6 kilos of silver equivalent in some of these veins, in some of these intercepts. So, huge opportunities there. VIPR's not even going to be included in our resource. That's just pure upside. We've also hit on the western half of this big faulted structure. So, of the Pittsburgh Monorfault, which the historic miners thought might have been the end of it. Well, we've got 600 meters of strike on that side now too. And that's not even going into our resource. This is sort of what the section will look like for a resource estimate. And as I said, this is the DPB zone. You see Merton there, Paymaster, Denver, Bermuda. We've also hit 2 new veins in this zone too. Those 2 new veins are now up to 400 and 500 meters each, respectively. Who knows what else we're going to hit along the way? But I can tell you what, at the grades we're averaging, at the jurisdictional advantage we have, being number 1 compared to, as I said, Mexico 42, Peru 34, Bolivia, Argentina, all these things. What we and the 100 to 1 silver gold ratio. I think it's too good to be true. And I think that there's going to be a flight of capital outside of South America, like you've seen with First Majestic, like you've seen with Fortuna, Hochschild. All these companies are facing the same issues. If you want to explore co with upside opportunity, it's not just about resource expansion, it's about M&A premiums. With that, I'm going to hand it back over to Peter and look forward to taking your questions in the Q&A.
All right, thanks for that, Andrew. Appreciate it. Nice presentation. Certainly plenty of energy. Next up, we have Brad Langiel, President and CEO of GoGold Resources.
Great. Thank you, Peter. And today I just want to mention that we will be making some forward-looking statements, and of course our audience, alert them to the risks in junior mining, which are many, which can be resource, reserve, metallurgical risks. But to mitigate those risks and to participate in what can be great returns, you want to deal with experienced management team. And really in Mexico and in GoGold, we have the benefit of 28 years of doing this. And on the screen in front of you would be the 4 companies I've been involved in, that I've led over the last 28 years. And they've all been focused in Mexico. I mean, we're really Mexico-focused country. We enjoy working there. We have good business relationships. The government relationships have been very good for us, and it's a very favorable country for mining. Now, the capital structure of GoGold, we're about 50% institutionally held. Some of the larger institutions in our space are significant shareholders of the company. We have 277 million shares outstanding, $73 million of US of cash in the bank, no debt. And we're about 20% insider held. And I would be the second largest shareholder of the company as CEO. Now, as far as our focus, again, it's Mexico. And I've been the CEO here for the last 6 years. I've been involved as an investor since the beginning of the company, about a decade ago. But what we focused on the last 6 years have been kind of our business model. We deal a lot with private families and look for off-the-radar assets in Mexico, and we've been quite successful in finding those. For example, one was Santacruz. We acquired that in 2014 for $9 million. We spent $11 million over the next 3 years drilling off a resource and completing pre-feasibility, or PEA. We then sold that to Agnico Eagle, one of the premier major mining companies in the industry. They paid us $80 million US for that, plus a royalty, which we then monetized with Metallica royalties for another $15 million. Now, Parral is our operating mine. That's been operating now for 7 years, and it has another 8 years of reserves remaining. And Peral at this point and these commodity prices is actually fully funding the company with about $2 million US of free cash flow a month. And then we have Los Ricos. Now, Los Ricos is the real driver of the company right now. That's our exploration development asset in Jalisco. But again, Mexico is the country that we've focused our efforts over the last 25 plus years. Santa Gratuitous sold to Agnico for $95 million. Ocampo, a project, one of our first projects in Mexico, where we developed 2 mines. That was eventually, after producing well over 1 million ounces, it was sold to Carlos Slim for $750 million US. Then we have Peral, which is our operating mine in GoGold. The Orion project, one of the team's efforts where we had a small discovery and we sold it to Capital Gold in 2010. We have the El Cubo mine, which we acquired from a private family for $20 million. We invested $45 million. 2 years later, we sold it for $375 million. And then we have Los Ricos, the real driver right now of GoGold. Now, Los Ricos is well located as far as infrastructure. It's an hour and 45 minutes outside of Guadalajara, the second largest city in Mexico. And it really is a district. The map in front of you in the red are our concessions. That's 35 kilometers for scale. Now the project, we first entered the project in March of 2019. And we entered the project with 29 concessions. We paid $7.4 million US for it. And since then we've been drilling. We've completed now over 100,000 meters of drilling. And we focus first in what we call Los Ricos South. And the reason being this, because we had all the concessions we needed there to put together a good drill program. And in Los Ricos North, we were still missing some key concessions, which we have since consolidated. And in fact, last summer, we launched a 100,000 meter drill program in Los Ricos North. But in Los Ricos South, we first focused on a zone called the main zone, where we completed 45,000 meters in the main zone. We defined a resource of 63 million ounces of M&I, silver equivalent, and another 20 million ounces of inferred on top of that. We then, within the first 22 months of acquiring the project, we took that to a preliminary economic assessment, which defined a project at $21 silver and $15.50 gold of $295 million of net present value at a 5% discount. And that's planned to be a mill of 5,000 tons a day and have an 11-year mine life currently and $125 million build. Now we're advancing this to pre-feasibility right now, and we plan to, by the end of the year or early next year, we'll have a pre-feasibility study. And we hope that by next summer or late next year, we'll be in the position to make a construction decision. And if you look at the economics of this, closer to the current commodity prices, silver at $24 and gold at $1,800, it has over a $400 million net present value. But the real excitement and the real driver right now is Los Ricos North. And Los Ricos North, this part of the project, as I mentioned, we had to wait until we got a few more concessions up there, and we were able to do that last summer with some more deals. And once we had those, we launched a 100,000 meter drill program. We're drilling with 9 drill rigs up there right now. Now, Los Ricos North, we view that as the biggest part of the mineralized system here. And really our drilling over the last 12 months has really kind of shown that. And it's all leading towards the next big catalyst for us, which is a first resource in Los Ricos North, which we're anticipating by the end of September or around the end of September or October, we should have that first resource. And it's focused really on 4 zones, which are El Favor, El Arito, Casados, and La Trini. And in El Favor, which is really part of a trend that's about 4 kilometers now, we are drilling here with 6 drill rigs between El Arito and El Favor. And really, we've shown some remarkable drill intercepts over a kilometer of strike length in El Favor. And there's a point I'd like to make here. If we wanted to market the company as a narrow, high-grade silver project, we could easily do that, because most of our intercepts, we do show the very high-grade core. And in fact, usually we will have a plus kilo in pretty much every press release, and we're releasing results pretty much every week to 2 weeks. For example, we have zones here of 52 meters of 300 grams, but within that we have 5 meters of 2.5 kilos. And we see that over and over again. But of course, we wouldn't market it as just a very high-grade silver project, because we're fortunate that it's enveloped in a much broader good grade zones that could be amenable to bulk mining. So that's a big advantage for the Los Ricos district as we move forward. Now, when you're looking at El Favor, then if we go along strike to the west, we have our zone called El Arito. And in El Arito, it's kind of the oddball, because everything else in the district is silver gold. But here in El Arito, it's silver base metals. We think it's a much deeper rooted part of the system, and therefore we're seeing the base metals. But still very wide zones and very good grades. We're seeing things like here you can see the sulfides and drill holes such as up to 43 meters of 322 grams silver equivalent. But we also see within there the much narrower portions where we do see the kilos of silver equivalent as well. And then just to the north of that, we have our Casado zone. And this was actually mined about 100 years ago, narrow vein and narrow vein mining. So we went in there and started drilling, and be the first drill holes that were ever put into Casados. And what we saw was a bit of a surprise. We drilled the first hole and we intercepted their old workings, which were 1.5 meters wide. And so they were gone, but in the Casados 1 vein, we still saw 22 meters of 121 grams. But then we intercepted what they didn't know about, which was another complete other vein in the footwall, which they did not discover, and intercepted 27 meters of 250 grams. And that included, because it's fully intact, there was 1.3 meters of 2.7 kilos. So Los Ricos North offers both. Again, it offers the very high grade kilo intercepts, but really even better than that, we have the advantage that they're enveloped in wider zones of good and moderate grade, which makes this more amenable to bulk mining, both open pit and underground. Now, I'd also like to touch for a moment on our production. We have the Parral Tailings Project, which we've been operating now for 7 years. As far as ESG, really Parral is the kind of the poster child for ESG. Here you're looking at environmental. We're cleaning up old tailings that are up to 300 years old that sit right in the city of Parral. We transport those 14 kilometers outside of Parral to our agglomerated heap leach. And we've developed new technology here. Now, it's agglomerated heap leaching, and you'll say, well, that's not new technology. But as far as I'm aware, we are really the first ones in the world, at least at this scale, who have applied it to tailings. And why did we do that? Because for $45 million of capital, we built an operation that processes 5,000 to 6,000 tons a day, and at a very low OPEX, where we're able to generate all-in sustaining costs of $15 an ounce silver equivalent. So again, per hour at these commodity prices, it's generating in excess of $2 million US free cash flow a month, which is paying for all that drilling, paying for our G&A, and on top of that, we have our 73 million US cash in the bank. So Peral is, the other things it's doing for the community is we pay the community $75,000 a month fee, and that represents about 15 to 20% of their municipal budget. So really a very, very strong ESG project, and a great project for making profit for GoGold. So really, GoGold's a company that's based on good community relations. It's based on having a good social license, which is really necessary in this environment to build mines. And, you know, always the question is asked of me that, well, you have Los Ricos. It's really a district that's demonstrating by size, grade, opportunity to bulk mine, that this is something that really the major mining companies might be interested in. Could fit very well into one of their pipelines. But my answer to that is we control what we can control. And by that, I mean, we control doing good technical work, doing, carrying out good drill programs, advancing the engineering towards building mines. And that's what we're focused on. We're focused on getting to that point where we make the construction decisions, we build the next mine, we add more free cash flow, more earnings to our company. But when you're focused on that, a lot of the times that's when the best offers can come. So we never put a for sale sign on the company. We just focus on the job that's in front of us. And of course, we have to go out there and tell our story. We got to market all the good things that the team is doing in GoGold. And that has really got us the interest and the participation of a lot of the biggest institutions in our sector. We're very fortunate this week. We're being added to the GDX. So that's a major mining index in our space, silver and gold. So that has added to our liquidity. We're a stock that strong balance sheet, experienced team, and able to finance projects and participation from the institutions. So I think all those things put together limit the risk in what is really can be a risky sector, junior mining. But again, team, balance sheet, experience, and country. So with that, I'll appreciate any questions that anybody may have at the end of the forum. Thank you.
Thanks for that, Brad. I appreciate it. Next up, we have GR Silver. We're going to hear from Marcio Fonseca, who is president and CEO. So please go ahead, Marcio.
Thank you, Peter, for having me here at the Silver Summit. I'm going to be presenting GR Silver Mining, an emerging silver gold company in the Rosario Mining District in Sinaloa, Mexico. I'll be providing some updates about what we've been able to achieve and deliver to the investors since we set up the company 3 years ago. It's a young company, but management, founders, executives have a lot of experience in Mexico and globally, not only exploring, discovering, building mines, putting into production, but also selling at premium. I'll be making some forward-looking statements just to make the audience aware. So GR Silver Mining is the first company ever in the history of the Rosario Mining District in Sinaloa, Mexico, to control 100% of 3 key assets in that district: the San Marcial, the Plomosas, and the Trinidad. We have delivered what we told the market when we created the company we were going to do. We said at the beginning, the first step is ownership, 100% ownership and control of a district. We delivered this by the latest acquisition of the San Marcial, where we have a 43-101, 39 million ounces of silver, 47 million ounces silver equivalent, a very attractive project. But what makes very attractive, more and more attractive, is that it can be open pit. Not many silver companies, even in Mexico, which is the largest silver producer in the world, Mexico, the country, are open pit. Immediately after that, we were invited by First Majestic to buy the Plomosa Silver Project, which we bought 100%. Doing all the work, we discovered the opportunity to be the first company ever to make the maiden 43-101 for the Plomosa Silver Project. The market is anxious to see the results, but it's important to say that we are not doing a resource based in one area with 100 drill holes. We are doing 2 resource estimates with more than 400 drill holes, more than 130,000 meters of drilling data, more than 11,000 samples underground. And you are doing this in a record time, close to 9 months. And doing the work, we realized that we can have a district. That's why we were working around São Marcial, which is here, and in the vicinity of Plomosas. And we discovered veins between these 2 areas. And we realized that we could control a trend, the Plomosa São Marcial trend. That's why we went after to acquire the La Trinidad. And we are not only concentrating and expanding the resources, which is fundamental for a company to have a solid resource, high quality resource. Is not made only on grade, made on thickness, depth, metallurgy, engineering, all this takes into account. And also location, infrastructure. We have 2 past producer sites with power lines. We don't need to rely on diesel. The 2 past producer sites have permits for mining. That's important to de-risk the project. And we are about to announce a very large drilling program outside of the resource areas, because most of the data is already with the QP to do the resource estimates. But we have at least 24 old workings or quartz veins, epithermal quartz veins, that we believe must be drilled. And this is going to be one of the core or catalysts for the company for the second half, a lot of drilling results. So important to say here that it's a very mining friendly area. Here's some comments about Mexico, country risk, but mining, silver mining is core for Mexico. A lot of jobs, although there's a new government, which is half away for his term. I do not foresee a big change in the game in Mexico. Remind the audience that the largest silver producer in the world, Fresnillo, is a Mexican company with its core assets in Mexico. Again, ESG is another important point. We have a high rate of employment of local employees, predominantly Mexicans. All the executives here are fluent in Spanish. We have been doing business in Mexico for more than 15 years. Success stories, directly participation in Silvercrest mines that was sold to First Majestic for 150 million. Meg Silver is a successful story. The ex-chairman of Meg Silver is one of the key individuals working for this company. But going further, let's show a bit of the story here. These 2 purple circles here is where we have all the drill holes, the plus 400 drill holes. We are doing 2 resource estimates. And as I said before, we discovered other veins between the San Juan and the São Marcial. So we immediately pursued an acquisition so we can integrate the resource area at São Marcial in green at the bottom with the 2 purple resources. And for the first time, create an integrated project. But of course, you need to have the resource from the San Juan and Plomosas in the next 30, 45 days. By the end of the year, we might bring more updates of resources from São Marcial, which can be open pit and upside potential for underground, and drive the company towards a PEA for the next year. But the first area I'm going to talk is about Plomosas mine area. Why is that important? This hill that you have in front of you is the Plomosas hill, is a Plomosas mine area. There's an underground mine with 8 kilometers under this mountain but the mines shut down in 2001 because they were producing only lead and zinc. Our work in the 9 months since we bought this 1 year ago, 1.5 years ago, has proved that the whole system is much larger, they extend beyond the initial 400 meters that we thought would be the vein. Today we have proved records of high-grade silver and gold, only veins in other structures. We are discovering wide mineralization close to the surface, which can prove that this cannot be not only an underground deposit, but potential areas for open pit. And now together in a big system. And again, with the infrastructure already on site and the permit to go into production site. But we are not the type of founders, engineers, geologists that we are going to cut corners. We want to create foundations for a company. So resources, studies are in progress to make sure that we can get this properly done. The second area that we are very excited still at the Plomosa Silver project is the San Juan, the next slide. As a reference, 1 year ago, we thought there would be just one vein, San Juan. Today we have 6 veins. The resource estimate at San Juan is going to include only 3 veins. We have 3 more to continue to drill. And we have signed contracts for drilling. And we will continue to drill along the strike and down deep. Recently, we put a news release at the La Colorada that's showing very interesting results, gold and silver, 9 meters close to the surface at 700 plus grams per ton of silver. If we go and apply a more higher cutoff and you start to see the high grade, you can have the multiple kilos of silver and narrow vein. But we want to approach this is a dual approach, where it's possible to be open cast, bulk mineable style. Why not? That's low cost. And underground as a follow-up. And continue to drill along the extensions. Outside of the San Juan and the Plomosas, like I said, we still have 24 showings that we are going to drill some of them in the next couple of months. Other point very interesting that I want to bring to the audience is about the San Marcial project. This project, San Marcial, was controlled by many junior companies for many, many years. Since we signed the option with SSR and we acquired this project, we increased the resource 60% by doing proper exploration, drilling, resource estimation, and preparing the project to be another key foundation for this company. We invested material capital doing underground development to access the ore underground and understand how we can expand this underground. And more recently, the next slide, we are completing a massive ground geophysical survey, more than 80 kilometers of line, connecting the resource area at San Marcial with the San Juan. That's close to 10 kilometers on a straight line. And we are very excited because we are discovering more and more anomalies. We are using IP and MAG. Again, nobody has ever done what we are doing here. We've been doing a lot of basic work to make sure that we can create opportunities to drill and discover more deposits in the area and integrate all together. IP, because we can find sulfides, and MAG, because we can find some sources of heat and flows, intrusives, that can really be key for epithermal deposits. We have plenty of catalysts, continuous drill results, not only for the resource area that's almost done. All the drill holes pretty much for Plomosas have been released. We have a couple 5 at La Colorada, but there'll be a series of drill hole results as we continue to drill with multiple drill rigs for the second half. We are doing metallurgical test work because we believe we can get better recoveries at Plomosas because all the work that was done in the past was on lead and zinc. We believe we can get high recoveries in silver and gold. Very soon we'll be announcing that. The acquisition of Trinidad brought an extensive database of more than $15 million of exploration data, multiple targets. Some of them were drilled and we can increase that as well. We can continue to drill. And very, very likely that by the year end, we are going to trigger PEA, integrating Plomosas, San Juan, and San Marcial, and maybe some discoveries between San Marcial and San Juan. It's key for us to create value, not just by drilling, but it's important to find deposits and expand resources in areas that we believe likely to become a mine. Key individuals in this company, including myself, have been very diligent in all institutions looking to finance projects in Mexico. And location is important, ore geology is important, metallurgy is important, experience, track records is extremely important. So we believe we are well set up now with the company well funded, $10 million in the bank to fund the program, and support of big shareholders, and capital structure is still very attractive. You can see here, big funds like Mackenzie, Sprott, Earth Resources, big shareholders. Management has a big position in the company, a lot of skin in the game. We will continue to work. And just some highlights of the key individuals. All the key executives of this company are bilingual. You go to Mexico and speak and talk in Spanish. We have hired general manager, underground engineers, metallurgical engineers to work in this company. So this is not a case of just brownfields exploration company. It's more advanced stage, moving potentially towards development. As I said earlier, the group of individuals, executives who were supporting this company have worked in major organizations, not only mining companies like Vale, Tech, Quadra Mining, Mag Silver, but also world-class financial institutions like Macquarie Bank. And we also brought key individuals, Mexican individuals, to work with us, such as Laura Diaz, the former General Director of Mines. We need to have that kind of individual to understand how to operate in Mexico. So having said all that, thank you very much for the opportunity. I'll be available for any questions that the audience might have. Thank you, Peter.
Thank you, Marcio. That was a great overview of GR Silver. And to round things out, we've got Sierra Madre Gold and Silver with Alex Langer, President and CEO, and Greg Liller, who is Chair and COO. Well, on to you.
Great. Thank you so much, Peter. Good morning, I guess good afternoon, everybody. Thank you very much for joining us today. Been quite a few exciting stories. We're quite new, so you may not have heard of us. Our name is Sierra Madre Gold and Silver. We started trading about 8 weeks ago, and our symbol is SM on the Toronto Stock Exchange on the venture side. Forward-looking statements, we will be saying a lot of them, so please have a read through when you get an opportunity. All right. Sierra Madre Gold and Silver is an exploration and future development company that is working towards consolidating the area in and around Nayarit in Western Mexico. Greg Liller and myself started this company about 4 years ago, along with a few other partners. I had reached out to Greg. I think I got him on his 3rd or 4th retirement about starting a new company. When we founded the company, there really wasn't much of an investable silver opportunity at an earlier stage that could grow to kind of like a junior mid-tier. If you like silver, of course, there's Pan American, Fortuna, Great Panther, there's a few of them. But if you wanted like an earlier stage, something that could be high risk, high reward, and grow to junior mid-tier, your options were pretty limited at the time. The area of Nayarit has seen a fair amount of production. A lot of it is private mines, privately held. There's infrastructure in place. There's processing facilities for both precious metals, silver and gold. There's mills and things like that, but no one has kind of come in and consolidated the area, and that's our plan. Our goal is to have 50 to 100 million ounces of silver under inventory in the next 3 to 5 years, as well as production from kind of 2 to 3 points, utilizing a centralized mining facility, kind of like a hub and spoke scenario. What that allows us to do is start with a lower capex and then make it modular. So as new mines come online or we increase production from certain facilities, we'll be able to do that modular. We are in acquisition mode, and we hope to bring in further projects in the very near term. Why Mexico? Why Nayarit? I guess it would be Greg Liller. He's our CEO as well as executive chairman. Greg has been active in Mexico since 1993. He is a exploration geologist by training. However, he's been part of production for numerous mines. He said 7 of his projects actually become mines, which is incredible, including some significant takeovers, M&A activities, upwards of $750 million US. One thing that was common in all of those transactions in terms of M&A is that the company was purchased after production. We see a lot of companies that raise a bit of money, drill out some ounces and hope to be taken over for $1 gazillion. That does happen, but it's relatively rare. We want production. We're not afraid of it, and that's what we're working towards. Our goal here is to increase shareholder value through exploration, development, and accretive project acquisition. Greg, a few other companies he's worked with, GoGold Resources, Gamma Lake, which became Gamma Gold, Mex Gold, to name a few. I myself, I come from the capital market side. I started my career at Canaccord Genuity. More recently, I've been on the corporate side of things. A couple of companies I've been founder and part of. One is Millennial Lithium, which has a lithium brine project in Argentina. We've gone from early stage there all the way to bankable feasibility stage. Another one is Prime Mining, which we started, I think, at about 15 million market cap and pushing towards 400 million now. That's also in Mexico. Another gentleman we've been able to bring on, who's been a really big win for us, is Greg Smith. Greg is a geologist. He's a director and also our VP of exploration. Greg most recently was CEO of Calibre Mining. He stick handled the acquisition of El Limon and La Libertad in Nicaragua. Greg has spent a lot of time in Latin America. He's Spanish speaking. He drilled out over 12 million ounces of gold in Venezuela. So a really big boon for our team. 2 other gentlemen I will quickly touch on. They're both Mexican nationals. One is Jorge Ramiro, who spoke earlier. He's CEO and founder of Reyna Silver, who have some really exciting exploration assets in Mexico as well. And the other gentleman is Alejandro Carabello. Alejandro comes from a really well-known Mexican mining family. He's been in the industry for 30 plus years. He's worked with Greg Liller in the past at both Mex Gold and Gamma Gold. Alejandro is based in Mexico. He handles kind of everything in terms of our permitting, dealing with the locals, the ejidos, drilling contractors, bankers. It's been great. It's really good to have a presence in country. We don't need to have any other consultants. Beyond the people here, we have another 7 Mexican national geologists. We've built up the team already for some of these future acquisitions we're going to make. They all have big company experience, and it's a really impressive team Greg's been able to put together here in the short term. Quickly, on our first acquisition, before I pass it over to Greg, we call the project Tepic. Tepic used to be housed in a public company. And as Peter mentioned earlier, that big spike in silver, the company actually had a market cap of over 150 million at that time. More importantly than that, Tepic, there was about $20 million in today's value spent in the ground. And we have all that information, including 31,000 meters of diamond drilling, which we have in our core storage facility in Tepic. They did a bunch of met work, which came out really, really positive. And there was a number of resource reports done on the project. I think there were 6 in total. The last 2 are the kind of the ones we use. They're both historic in nature. One of them was just over 10 million ounces of silver equivalent. And the other one was 18 million ounces, over 18 million ounces silver equivalent. Again, it just depended on which cutoff grade you wanted to use. And with that, I'll pass you over to our executive chairman, Greg Liller, to walk you through Tepic.
Thank you. When I do project acquisitions, I've got a checklist of things I go through, one of which is infrastructure. I've been involved in projects that are remote. They're more expensive to explore. They're more expensive to develop. Tepic's a dream. It's 22 kilometers from the state capital, city of Tepic. We've got paved road all the way up to the last 3 kilometers of access to the project. We have a rail siding 3 kilometers from the project that's on the major Pacific Coast rail line in Mexico. The national power grid is throughout the area, and we have a really good workforce within the area. It's pretty typical of the Sierra Madre silver gold deposits. As Alex said, we had an existing resource. I look at those looking for opportunities, shall we say, in the way they were done. Metallurgy, if you can't get the metal out of the rock, you might as well just walk away from it as fast as you can. And I also look at underlooked at potential. Is the project bigger than other people thought? The land area that we control now is 2,600 hectares. There never was any project-wide base mapping done on the project. It had no topographic maps. So the first thing we did with our seed money was we contracted to have current satellite imagery, and from that we had a topo map built. We divided the project then up into 3 areas: the central area, where most of the work had occurred in the past; the east area, which had never been looked at; and the north area, which had only had a cursory examination. One of the other things I noticed when I was doing my initial site visits was that there was a whole lot more alteration than could be accounted for by the structures that have been mapped in the past. Previously, they had basically these 5 structures. When we completed our first pass mapping on the central area, that 3.5 kilometers worth of structure had turned into 10. So there's a lot of overlooked potential in this project. The eastern area, as I said, never had been looked at before. On our first pass into the area, we found that Tauna structure, which we've now mapped out to over a kilometer in strike length, and it's returned recon samples of over 600 grams silver equivalent. We've announced a 2,700 meter trenching program, of which 400 meters is going to be devoted to Taunus. We're going to do 2,000 in the central area on our new projects. And then in the north area, there's a lot of recent basalts there. Some of these basalt flows are only a couple hundred years old, but where they've been dissected by erosion, we found structures, mineralized structures in line with our central area structures. These have returned up to over 600 grams silver. We've also found on these knobs that are sticking up, some of those are our host andesite. I was just up here last week looking at this area, which has not yet been mapped, and it was quite obvious there was a lot of silica, quartz breccia, altered andesite in the float. Over in this area, we again had our host andesite up. So we've now got 2 geologists working on this area, concentrating on these knobs, and where we've had some pretty good erosion dissecting down through the salt. The point here is there's just a very large hydrothermal system here, and that was not recognized in the past. So I see a lot of good potential in that. The other thing I look at is the way the mineral resources were done in the past. The geologic model that the previous company had was very complicated. They had a lot of faulting and offsets, and I just don't see it. Our mapping, where this used to be cut off and faulted over here, it was treated as one structure. No, it continues on to the south. We see that in the alteration. All the drilling here was all directed this direction. They never turned around and drilled off this area, so it's wide open on the resources, that the historic resource. The other thing too is back to this topography. They never had good elevational control, and how do you do decent modeling without that? So there's just multiple ways in which this project has got overlooked potential and just wasn't treated properly in the past. The past drilling was all Corp. All the resource reports that are available on CDAR talk about poor core recovery. Oftentimes, if you're not getting good core recovery, you may be underestimating the gold and silver grades. So we've got a 20-hole reverse circulation program going right now. Should finish that up in a couple of weeks to test that. Is it accurate, the core information, or was there an underestimation? We'll know at the end of this program. The one thing I do like to point out with the old resources was we do have really nice widths. These are amenable to both open pit and bulk tonnage underground techniques, which would lower the cost of operating a mine here. Metallurgy, preliminary test results on the bottle roll test are pretty typical of the silver gold deposits in the Sierra Madres. I generally run mine out about 96 hours. That's more reflective of an operating scenario. So that might improve this to 80, the low 80s. But what I found really interesting was they had done a combination flotation followed by cyanide leaching. And that preliminary results showed a boost up to 90% recovery on the silver. We're definitely going to be pursuing this option and doing a lot more test work on that. We began trading. We got our listing in mid-April. By mid-May, we were drilling. I don't know many other companies that can really move that fast. Our permit now, we have 67 holes. We're in the process of expanding that permit out to several hundred holes. And based on the outcome of the RC program, we'll either be doing some more infilling in addition to exploration drilling, or we'll flip to more of an exploration drilling scenario. We hope to get a resource completed by the end of the year. That's going to be dependent upon the rainy season. This area of Mexico during the monsoons, which have just commenced, gets well over a meter's worth of rain. I'm not going to fight Mother Nature. It's expensive. So we may not be completing our program until the beginning of next year. This 2022 acquisition numbers are kind of a placeholder. We're constantly looking for new acquisitions as part of our hub and spoke production scenario. And I think, how much do we have for acquisitions this year, Alex?
Yeah, within the prospectus. So I'll kind of walk everybody through the cap table really quickly. We have 66 million shares fully diluted. There are some broker warrants that we'll cross out here shortly. So to answer Greg's question, it was actually 5 million within the prospectus for project acquisition this year and development of those projects. When we went out to raise our initial capital, we were looking for 8 million. The order book was over 32 million. Which was quite a bit. So we settled on 15, which allowed us to make a few of these acquisitions moving forward. Share structure, Greg, myself, the other founders, we're actually up and over 40% now. We've been buying actively in the market. We do have 10 large funds that are involved. They're in for quite small amounts at this point. It was a scenario where we were able to bring them in with small investments now, with a full expectation that as Tepic progresses, and as we're able to acquire some of these other projects, they'll come in for more meaningful amounts. A lot of these guys want to invest, kind of 3 to 10 million. And I think the largest investment was about 800,000. So a quick summarization, great infrastructure, great location for Tepic, as well as Nayarit and consolidating the area. So far, we've gone from 3.5 kilometers to well over 10 kilometers strike length, which we are testing now. Good historic resource, and we have about 15 million in cash ready to push the projects forward and the management team to do so. I look forward to any questions, and I'll pass you back over to Peter. Thank you.
Thanks for that, Alex and Greg. So great presentation once again. And so now we move on to the question portion of today's presentation. We'll start with anything that shows up. Looking for anyone, if you have questions, please go ahead and use the chat function and send us your questions. In the meantime, I'll get started with a few that I have. So we'll start with Andrew at Blackrock Silver. My first question, Andrew, is where's the closest casino?
You know what? I'm going down there next week, and I'm staying at a place called the Mizpah Hotel, which up until around 1930 was the tallest building in all of Nevada at 5 stories tall. So yeah, I'll go with that. But being so close to Vegas, before when I used to go down to Nevada, I have to fly through Reno, and Reno's fantastic for anyone that's never been there. But Vegas, it's hard to beat down there. So I'll be playing the slots at the Win, I think. So
yeah, no kidding. On the business side, What's the geology like that you're dealing with? I mean, obviously it's veins, but can you give us some idea of like width, thickness, depth, and so on?
Yeah, well, it's a low sulfidation epithermal district, so there's nice banded, creamy looking textured veins. And I mean, we've seen thicknesses up to 29 meters. Our biggest vein right now, it was the 29-meter vein, the Victor vein, which sort of woke the market up, and that was our very first drill hole. But our Merton vein right now is easily the biggest in terms of, I guess, upside and potential ounces. I mean, we're looking there. We've established 1.5 kilometers of strike. It's 3 meters thick. We're averaging about 800 grams per ton silver equivalent. And it's about 4 football fields top to bottom in terms of some of these ore shoots. So, 400 meters. It's absolutely wild. And we haven't even hit the bottom of that. We're actually doing, one thing I didn't mention is we're actually doing a really deep hole, which, we don't need because I think our resource is going to be fantastic. But we're going to be drilling a mile down to see if we can hit where all these veins merge together. That's something that Quentin Hennig's been talking a lot about online about our company and how it sort of thinks it could turn into something bigger than the Comstock discovery, is how all these veins converge together at depth. Right now we're targeting 400 meters below surface, but this mile drill hole, I mean, that's a Hail Mary, and it's something that, the upside on that, we don't, as I said, we don't need it, but if we hit that, mother lode sort of stuff. So the Comstock discovery made the richest man in the world back in the early mid 1860s. We hit that, then who knows? We'll see. Maybe I'll be up there with Bezos.
Yeah, for sure. What's the plan to advance Silver Cloud, your other project?
Yeah, so we're looking at that. So we drilled Silver Cloud. Originally, Silver Cloud was the basis for us joining the company. It was 2 years ago that I stepped in as CEO, got rid of the old management team, brought in a brand new one, and from 1 million to 150 million market cap now. For up until we got our hands on Tonopah last March, Silver Cloud was our only asset, and we were able to get up to a valuation of $30 million there. But since then, Tonopah has clearly become the front runner. It's all of our valuation is based on Tonopah. So we look at Silver Cloud as a good potential to spin out and form a new co where we can unlock that value for investors. That's a gold primary project, whereas Tonopah's silver and gold, and it's train on the tracks at this point. We'll be spending a lot of money down there and hopefully developing it very, very quickly. But for this summer, we're just going to be doing some mapping program. We've already got a ton of geophysics. We got drill results that I think we did a 14-hole program in January. So we're sort of honing in up there. It's right at the Carlin Trend where it meets the Northern Nevada Rift, and we're right on trend of the Midas discovery. And Hecla, they've come out of nowhere in the past few months. They weren't doing much at Midas, which was one of the highest grade mines in the world in its heyday. But recently they made a brand new discovery about 2 miles away from all of their from the historic mine there, and they're hitting multi ounces per ton. And this is a blind discovery, and they've backed it up. So yeah, that's very exciting for us because that's the same sort of mineralization we're targeting there. But for now, all this money that we raised recently is going in the ground at Tonopah, because that's something where we've got a resource estimate expected soon, and soon thereafter I'd be shocked if we're around. So we're still, the plan is still to spin it out. It's a question of when we get that over the line.
How far is Hecla that you just mentioned from where you are?
Well, Hecla is right. If Phil Baker is looking at the claim map, we're the big donut hole in the middle, because we've got about 45 square kilometers. Right, we're directly next door to their Hollister mine, and we're right on trend of the Midas mine. So I mean, we've got one of the largest land holdings of any juniors on the Northern Nevada Rift. Hecla and its Hollister in its heyday produced a 34 gram per ton head grade, second highest grade gold mine on the planet in 2015. Midas back in the day in early 2000s was the only reason why Newmont was profitable, and that's where Pierre Lassonde and Franco-Nevada really, well, they got out of the royalty business, got in the mine building business. It was such a good deposit, and we're on trend at both of them. Hollister, the vein system goes east-west. They point directly at us, and at Midas, the veins go northwest, and they point directly at us too. And we've got just a lot of virgin undrilled territory there covered in sinter, multiple mercury mines. It's one of the most compelling, I guess, greenfield targets in Nevada. But right now we're drinking from a fire hose with what we're doing in Tonopah and having too much fun down there. So we're pushing forward with that, and we'll see what happens in the next few months.
Sure. One last question. Might be early, but how do you see the potential development? I mean, is there enough there that you could actually do something along the lines of open pit, or you're really looking at underground?
Yeah, there is potential in some areas for, there's this lower grade halo where we could look at open pit, but these mines historically were ultra high grade cash cows from an underground perspective. And this is using, 1900s metallurgical recoveries. I mean, recoveries have gotten a hell of a lot better since then. But at the grades we're hitting and at the depths we're targeting, this will be very small footprint, high grade underground mines should we get there. I don't think we'll be the ones to take it there, though. What we have is so unique in terms of grade, infrastructure, and the fact it's silver primary that I think if we make it to the point we deliver the resource, that's a big if, in the sense that someone might try and get us before. I don't think we'll be around much longer after that.
Okay. Is there anything else you'd like to wrap up with and maybe leave listeners with?
No, it's just, you know what, as I said before, the case for anyone watching this is obviously interested in silver. So the question to ask yourself is, when silver breaks through this, 8-month trading range it's been in, which is, $24.50 to $20, when it actually breaches 30, where's the money going to go? Sure, it's going to lift all the boats, the rising tide, but I think it's going to, where's it going to go first? I think it's going to go to those ones that have catalysts at the same time, that have grade, and that are in the jurisdiction. We've got, as I said, we're 2/3 of world silver comes from South America, and it seems that all the silver primary companies are trying to offset some jurisdictional risk by getting out of there. Well, I figure we're going to command the biggest M&A premium in the market based on what we're drilling, and I guess time will tell. So, in short, buy my stock.
All right, thanks a lot for that, Andrew. We'll move on to GoGold Resources. Brad, if you don't mind, we can maybe try and touch on a few things. One question I have is, what kind of multiple do you think that we could eventually be looking at on Los Ricos South in terms of when the initial resource is announced? Sorry, I'll back up for a second. What kind of multiple to the Los Ricos South can investors look forward to? And when the initial resource on Los Ricos North will come out later this year, how do you expect that to sort of impact things?
Well, today we're trading at about a 0.8 multiple, 0.7, 0.8. Los Ricos South at closer to current prices is well over 400 million, a 5% discounted net present value. Now, we view Los Ricos North as the biggest part of the mineralized system, and it may be multiples of the size of Los Ricos South. On top of that, we would have Parral, where we would, at least internally at silver prices in around that $21 and $15.50 gold, we would see that's about $180 million net asset value or net present value. The other thing about Parral, where we already have an operation that's been producing now for 7 years, and we've really become good at the reprocessing of mine waste. We are looking at other opportunities there. It's generating $2 million US a month right now in free cash flow. And we're looking for opportunities there to add to that free cash flow, and we'll keep on pursuing that as well. It gives us great social license. It's something that really the environmental department in Mexico really does like. They visit it. They like that operation. It's a good solution to a lot of these communities that have tailings or other mine waste in the center of these cities, because these cities grew up around these projects. But also, we're not finished at Los Ricos South. You said multiple, and we are doing pre-feasibility work right now, focused a lot around metallurgy, and the metallurgy is very good. We have 88% silver recovery in whole ore leaching. So we're not a flotation process. It's just crush, grind, and leach, and plus 90% gold recovery as well. So, but there's more exploration to be done in Los Ricos South. So before we make the production decision, I think that there will probably be a updated resource, and that'll change the net present value, obviously. Next big catalyst, though, is Los Ricos North. By the time we publish, we'll have about 100,000 meters of drilling up there, and that's going to all be around that maiden resource. And really, I feel quite comfortable in saying that we've already, gone through the in total 83 million in Los Ricos South, 63 million of M&I, and 20 million of inferred in Los Ricos North. So I think we're targeting for something in around that 125 million ounces in Los Ricos North for a first resource. And we just have to pick a cutoff date. When you're drilling with 9 drill rigs and that kind of meterage, you just have to say, okay, we've been drilling for a year now. The investor wants to know where we're at. So if it's September 1st or September 15th, we pick that day, we tally up what we have, we send that all to our third party. They give us a resource. But the next morning, we're drilling again with 9 drill rigs, working on the next updated resource in Los Ricos North. So very, very, very exciting district. It's really, I would say that I feel quite comfortable in saying, and I've been involved in some great districts in Mexico, such as Greg Liller over at Sierra Madre, who was key in the discovery of Ocampo. He was one of the real instrumental people there. I've been involved in great districts, and this Los Ricos is right up there with those, and it may be the best of my career.
What sort of potential, if any, do you see, Los Ricos North and South being developed as one sort of whole project?
Yeah, we're obviously doing the trade-off studies there. Now, Los Ricos North is, a year behind Los Ricos South in engineering and, the ultimate resource. But it really depends as well a little bit corporately. If you look at it, if we were, a major today, we would probably say, okay, if it's to build a whole district, $350, $400 million, and it had a slightly better return, that would be the way we'd go. But when I think of GoGold, I think of, okay, Paral at $2 million free cash flow a month, generating good cash flow, self-funding us. I think of Los Ricos South coming online, and the cash flow, 8 million ounces of silver equivalent a year that it'll produce, and at all-in cost around $13. So, you're talking a company with those 2 projects in production that could be well over $100 million of free cash flow a year. And then we're in a position with a strong balance sheet and that kind of cash flow to tackle the next one in the pipeline, which by the time Los Ricos South is built would be Los Ricos North. And maybe at that point it's at a pre-feasibility or whatever. So I see that for a GoGold, it's, bite-sized pieces. Los Ricos South is 120 million or 125 million capex in the PEA level. And, we have 73 million of that in the bank today. So that's a bite size that a GoGold can easily do. And that propels us into being a significant mid-tier within the pipeline Los Ricos North, which if Los Ricos South is kind of that size, maybe Los Ricos North, and it's a maybe, it's a little bit of arm waving today, but maybe it's twice the size of that. So that really propels us into being a very significant player in silver production. And, I'd like to stress again, I've been in this business for a long time, 28 years, and I'm sure Greg would echo this. I worked with Greg back in the early 2000s, and so many people, when you have a great district like in Ocampo, they'll come in and they kick the tires. But what you really have to do is you have to keep focused on doing good technical work, good exploration, good engineering, and you drive that thing forward. And I'd echo the same thing as GR Silver. We're not scared to build these. And ultimately, that's what you control. You do not control somebody coming in and buying your company. That control is in somebody else's boardroom. And what you control is what's in your boardroom. And that's building your business. And really here, we're building a business at GoGold. And that's a mining business. 60% of our revenue will come from silver. About 40% will come from gold. And that's what we can control. And that's what we're focused on.
Well, thank you very much for that, Brad. A great overview again. And unfortunately, we're actually out of time. We've got some great questions pending, but couldn't get to everything today. I'd like to thank everyone, all the presenters and everyone for attending. And we'll actually be wrapping this up now. And I'd like to invite everyone to later session at 3:15 Pacific time for 4 more companies.
Welcome, everyone. This is David Morgan from themorganreport.com, and we are going to talk about silver. It's the Silver Investment Forum in June 2021. Well, before we get started, I'm going to get a little bit of humor, but not so much about silver. So here we are over here. If you see my laser pointer, we've gone up from the $5 level up to about 28. And then we're going to make this leap over here and get in the final phase and go all the way up to there. So I'm looking for an exponential move. Many of you heard me talk about 90% of the move comes in the last 10% of the time. That may or may not be true, but the general idea is that's how markets work, especially during the trying times that we have in the financial markets. But we're going to focus mostly on companies. So let's get to it. I want to thank everyone involved. And I also want to thank, of course, the Metals Investors Forum for doing something that's silver focused, which in my view doesn't quite get enough attention as far as the amount of usefulness it has in a modern technological society. So I'm going to go through the World Silver Survey 2021. Most of these graphics are taken from there. And of course, we also tell you the source here at the bottom, Metals Focus and Bloomberg on this first one, global supply. So you can see from 2011 through to current day, we have basically had a flat to slightly tapering off global silver supply. And there's lots of reasons for that. I do not believe we're at peak silver, knowing some of these miners that we're going to be interviewing, but we could be close. Silver, according to the United States Geological Survey, will be the first to go off the periodic table. That's just a fancy way of saying we could, in theory, run out of silver. But there's a lot of variables around that. At $28 silver, you might be out. But if at $158 silver, that mine that looked really impossible to mine economically becomes viable. So lots of factors, but we are mining at a lower grade historically than we did, let's say, 100 years ago, 50 years ago. All right. So this one is very interesting. And even though it's kind of a simple graphic, what this shows is the amount of photovoltaic installation from basically 2019 projected out to 2025, where it finally starts to flatten out. But the amount of solar that is being used throughout the world continues to increase. And I read the Metals Focus study back in 2010. Jessica Krauth did that one. And her projection was about 100 million ounces of silver on an annual basis for photovoltaics. Didn't quite get to that level because the efficiency in solar panels has doubled twice. We're getting about as much energy or electricity conversion, I should say, per panel for about 1/4 the amount of silver that was in the original panels. I think we're getting pretty close to the limit, but there could be a technological breakthrough. It'll make a big thing out of it. But and you can see light duty vehicle production also moves up. There's a lot more to say about that. And just a bit of a shameless plug, but on my mastermind series, I'm going to interview the gentleman that wrote this study and go do a deep dive on silver's industrial usage over the next decade, which he projects and I won't go against it. 80% of the silver market in 10 years will be used for industrial purposes. All right, so COVID disruptions. What we saw was a lot of people moving into the investment side of silver. We had the largest increase ever into ETFs or ETPs, exchange traded products, about 350 million ounces by exchange traded funds. On top of that, an extremely robust retail market of about 200 million ounces. You add the two, I can do that arithmetic. We're looking at about 550 million ounces in 2020 went into silver as an investment. That's greater than the amount used in industrial applications. So huge spike, and I think it will continue. So far from the data I've seen, we're pretty close. So people are waking up, institutions are waking up, pension funds really haven't, but there's a lot of money sitting on the sidelines in the stock market, the bond market, that could potentially come into the silver market. And what that would do to the mining shares is almost beyond description, but I don't want to get myself too excited here. I'm trying to just stick to the data and let you take a look. This is the top 20 silver companies. Well, let me restate that. This is the top 20 silver producing companies, and you will see in this list of 20 how few are actually silver companies. And what do I mean? I mean that the bottom line, at least 50% or greater of the revenues come through because of silver. Fresnillo is, KGHM is, Glencore not really, Newmont not really, Codelco not really, Southern Copper not really, Polymet no, Pan American. So we're halfway down the list, and we're finally hitting like the third company that's basically a silver company. Hecla right behind them. Buenaventura, I would say yes. Industrias Españolas, of course. Moving down, you can see First Majestic, although it's probably one of the better known companies, really isn't that high up on the list. It certainly produces more silver on an annual basis than I purchased, but nonetheless, it's not, it's in there. It's certainly there. Yamana, not really. Tech, not really. And Hochschild, not really. So a lot of this silver comes as we all know, as a byproduct of mining. 25% comes from copper mining. 13% of the silver market's a result of gold mining. And the other 35% as a result of both base metal, lead and zinc mining. And let me just pause here for something housekeeping wise. I forgot to say at the beginning, everyone that's on this can put their question into the chat box, the Q&A, and we will go through those questions. So just if you could have the courtesy of typing maybe the first name or the company name of who you have the question for. Of course, some will be for me, but I like to focus mostly on the companies, but I'm sure I may generate a few questions. So mine production, as you can see over the last decade, it really peaked out about 2015-16. It's been coming down according to the Silver Institute's Silver Survey, which was written primarily by Metals Focus. We should rebound rather significantly this year. I'm going to just wait and see. I'm not sure how much will come back. I think we'll outproduce what we did in 2020 and 2021, but I'm not certain it'll be substantial. But again, we'll see. Recycling has been flat. There's a real need, in my view, to recycle more. And of course, I am biased because one of the companies who have as a rank speculation, I think it's an asymmetrical trade, is involved with electronic waste. And it's really an interesting technology. I don't want to pitch it too hard, but it's been flat. I think it can be improved. And I think as the silver price goes up and this push for green energy and sustainability and the ESG and everything else that's going on in our industry, you'll start to see that. I'll predict it come up rather significantly over the next 5 to 10 years. The bullion trade, it's interesting to see how much is imported here. India, which was huge, fell off a cliff. And I wanted to include this slide and show you how little was imported in the last quarter of 2020. And they're notoriously huge buyers of silver. And why is that? Excuse my analysis, but here it is. The silver price in rupee was the highest it's been in probably forever. And so if you are not knowing the difference between money and currency, or you've saved silver and it's at a very high price, you are going to be prompted to sell, which is what happened. So the reason for that, which I always ask the why, if I could figure it out, I'm very happy, because sometimes you can't, is because the rupee price was so extremely high, there basically was no imports, exports. They were selling their silver for cash. All right, global industrial demand. Although it is about 50% of the market, you can see it's kind of been flat for the last decade. And as I said a moment ago in telling you about my mastermind service, where we'll go through the projection for the next decade, it will start to move up again. And I do believe that's true. It's significant, but, you know, as I said, relatively flat, which is a little bit surprising. Unless you look at these studies, you may be under the misconception that, you know, silver, you know, every year there's an increase in industrial use, and really is not the case at this time. So the potential in green energy, I've already mentioned that a few times. We're seeing the photovoltaic demand and cell loadings have been increasing as it shows, and that will continue. So this, you can't even read it. There's three things on this slide that talk about silver's new emerging uses. You've got the silver powder. So you're going to be seeing the soldering industry is going to have to do away with lead. You're going to see silver substitute for that. Is it big? No, it's small, but it's in many applications. So it will demand more silver. Then you've got 5G, which I've talked about, and I don't hear anyone else talking about it. Not to make a huge thing out of it, but when the 5G becomes enabled, let's say on a global basis, where it's pervasive and it's the norm, you will see a lot of people that will get rid of their phones and buy a new phone. Is there a lot of silver in a cell phone? No, but when you're talking about 2 billion purchased on an annual basis, you can kind of catch my drift. And the last one is induction chargers, which I can't read that fine print, but it's another area where there will be significant increase in the demand for silver. All right, silverware fabrication fell off a cliff in 2020, which makes sense with the COVID, you know, not so many weddings, other things to do with your money, on and on. I don't pay a lot of attention to this. I mean, it's part of the study. If I read this correctly, and like I said, I read this survey once. If I remember correctly, the amount of silverware recycled was about equal to the amount of silverware shown in this chart, about 22 million ounces, which I find a bit amusing, meaning that as much got put into commercial bar form as was bought last year. So a net zero, really. So I've talked about it many, many times that I think the biggest move in silver is ahead for a variety of reasons. And again, I want to emphasize that if we see what I expect to see, or even half or a quarter as good as I anticipate, and believe me, I'm not the wild one out there. I mean, there are people saying $200 silver, $600 silver, $1,000 silver. I'm not saying anything close to that. However, what I am stating is I think the biggest part of the move is ahead of us. I think what will happen in a short duration of time, meaning probably the next 3 years, and that a way to really gain leverage after you have your, let's say, modestly important physical position is to get leverage through the mining sector, which is, of course, what we focus on. This is just proof that 90% of the move came in the last 10% of the time. If you were a rank speculator, bought silver at an all-time high of $6 an ounce in January 1979, you could have cashed out in January 1980 for over 800% gain. So selfish plug, there it is, the Morgan Report. And we've been publishing for about 22 years. Pretty proud of it. Have we gotten every stock pick correct? No, we haven't. But I divided up to protect investors that really are serious, and that's big money in the big companies. medium money in the medium companies, and we speculate bet a little to win a lot on the more speculative type of companies. So I think we're pretty close. Follow me. If you really want to follow my thinking on the economy, it's best to go to my Twitter account, which is at SilverGuru22. I do have a YouTube channel, but I also have a blog. It's on the blog. We posted on the YouTube channel, which has not been taken down yet. A few have been blocked, and I have gotten some strikes against me, but overall, it's been good. So I'm pretty much there. I'm not sure what my time is. I might have some, might have gone a little quickly on that. So maybe I should pass it over to one of the hosts and see if they have any ideas or questions for me, or we could start into the next company. Should I just continue on with the company?
Yes, please, David. Let's just move to the best company. Okay.
So first up is American Pacific, and this is with Eric Saderholm. My right-hand man, David Smith, and I did a road trip here from Spokane all the way over into Montana, and we inspected the project for several hours. And as usual, we got a really great tour of the whole project and saw the potential. I really like to put boots on the ground, as they say, and go through these projects. And I've done, in most cases, I've gone through them, and either me or David or both of us, in this case, it was both of us. What I really liked was the high potential, the fact that it's good to excellent grade, and it covers everything. Almost any mineral you want to name on a periodic chart is there and available. And then, of course, you get this confirmation bias. I'll call it bias, might not be the right word. It's confirmation that there's huge potential from the fact that Rio Tinto is involved in a significant way. And that's kind of a protection for me that this is probably one of the better, I'll call it speculation, although I think it's beyond that. So Eric probably said enough. If you want to give your background, which I know a little bit, but you can probably talk your background better than me. Welcome to the Metals Investment Forum, specializing in silver. I'm glad and happy that we got to meet each other, spend some time together. So let me not take any more of your time and turn it over to you.
Okay, appreciate it, Dave. I have 39 years in the industry, so I've been kind of a veteran of doing these kind of things. Was with Newmont for quite a bit, been on my own, worked with Rob McEwen at US Gold, so I consider myself somewhat weathered in this industry. We'll just dive right in because we've got a lot to talk about. Okay, forward-looking statement, we know that. Investment highlights, we acquired the Madison high-grade copper gold project, which it's interesting because it's now got a silver component as well that Rio Tinto is testing out this year. They cut into some veins while trenching, and they got multiple 100 grams of silver and gold. So that's one of their targets as well. So all of our projects do have silver in them. But we have just concentrated mainly on grade, copper, gold, silver throughout the Western US. Right now we have 81 million shares out, 3.5 million in the bank. We've taken on a strategic investor in the last month or so. So we're kind of moving along. We've got money coming in, so it looks like we're going to take some of that money and start to explore our silver project out in Western Nevada with that money. Madison Copper we'll go into real quickly. Main focus on Madison is the grade. When you see 20% to 35% copper and 16 grams gold, you immediately gain interest in the project. It has tremendous potential. It has very, very high grades, at least at the surface. And that's what drew Rio Tinto in to start off with, I believe. That and the chance that being on the same structural trend as the Butte mine, which is about 40 miles or so to the north of us, really excites them as the potential of a very large deposit. They wouldn't be there if they didn't think they could make it really big. Right now, they have an exploration program going. They just got a drill on 3 weeks ago. They're drilling jasperoid and massive sulfide mineralization, so relatively close to the surface, to try to get a handle on that and expand that off to many directions, to the south and to the west. The deep porphyry target, they haven't really tested it yet, but I think all of this drilling and all of the science they're putting together on this project will vector them into that particular type of mineralization. This one right here just shows historic high grades, 30 meters of 25 grams per ton, 64 meters of 7% copper. You start to see that it really does carry a lot of grade. I worked at the Fortitude deposit on several occasions and was the chief geologist when Newmont put Phoenix back into production in 2004. So I've seen a lot of material like this. And when I went underground and toured it in 2016, I was amazed with the similarities of the textures and how that mineralization lies in there. So it's got a lot of similarities to a 2.2 million ounce ore body that was mined out in the 80s by Battle Mountain. Location of this project is in Montana, south of Silver Star. As I mentioned, there's the Butte Pit. So it's in a very mining friendly area. A lot of exploration going on up there right now. Golden Sunlight, which is Barrick's mothballed mine, is just up the street as well. So it's not like we're in a place where we can't permit. We have our water permits, our water discharge permits, and our small mining permits are all in place. So it's a good place to be. Historic mining district as well. Quickly, the Kennecott has they need to spend $30 million in over 11 years to generate 70% interest. So I'll leave 30% for us. Having 30% of a real size target obviously is good for investors, and good for the industry as well. So they're outspending that, and they've spent $4 million thus far in 2 years. This is their third campaign. Their first round of this year's drilling is supposed to be at about $2 million. That's the phase one. This is in here, right, just so you can get onto our website. We did a drone footage. Usually I'm not a big fan of this kind of thing, but this one's actually quite nice. It shows the magnitude of the property. It's about 5,200 acres, so a little bit over 4 square miles. And most of the known mineralization is on our property. So it's a key piece to Kennecott as they try to put the package together. Over the winter time, they relogged all the holes from past companies, Broadway, there's Coronado, there's several companies that have had a whack here. And they really came up with a good geologic interpretation, I think, of the jasperoids, as you can see. And hypothetically, there's a massive sulfide that they're going to drill into as well. So they have 4 targets. There's only 3 on here, but the 4th one is that vein set that I just mentioned, the high silver, high gold, had visible gold in the vein. So it's very exciting when the geologist sees those kind of textures. This is they're right now doing a mag survey, so we're using drone to perfect this. This is a little bit globular, if you can look at it. This was done by Broadway in 2017, so the predecessor company. Shows where the targets are. The hot colors being the magnetic, the colder colors not so much. The Ajax mine and Hudson mine, those are all mines that have been in production in the past. Broadway mine was mined for 144,000 ounces of gold back in the mid-1900s. So it's got a history. Once again, this is on our website. It's a 3D model. We update it every time we get a chance with new holes and new surface data. So it's worth spinning around. It's animated and everything, but it's about 6 minutes if you choose to go have a look at it. In 2017, Rio was introduced to this slide and to these rocks. They saw what they wanted from a textural standpoint, especially. The rocks here there's 5 porphyritic units here, which is kind of what you need to make a porphyritic system. You've got to have multiple pulses. The latite porphyry was certainly intriguing to them. And this is the rock right here. Marble on the left side with sulfides in contact, very folded, very beaten up. Rock on the right is the latite. It's sphelically altered, which means that even though it's the latest porphyritic rock that we see, it's also altered quite nicely. So that's intriguing to them and intriguing to me. That means there's something else down there pushing it around. This is probably my favorite slide because it shows the different kinds of mineralization you can have in this system. Jasperoid ore, I've seen a lot of that working on the Carlin Trent for so long. And the jasper ore, it never ran very much. This runs half an ounce, so it's by far the richest jasperoid ore I've ever seen in the world. Native copper, of course, accounts for some of that high grade. And then the massive sulfide skarn that you see over here on the right side, at the Phoenix deposit, that would have been pretty much waste rock. Here it runs 0.67 ounce per ton and 11 ounce copper. So there's just about no kind of rock out here in this system that can't be ore. Typical oxide ore from what was mined from the Broadway, but this is core from last year from Kennecott. So you can see that it runs pretty good. The average ore from the historic mining was 9 grams per ton. Jasper ore on the right, oxidized skarn. The old timers focused just on oxide because the sulfide would mess up their process. Okay, we'll move on over to the Gooseberry Silver and Gold project. Staked this 2 years ago. It's a past producer with some really monster silver grades and some pretty good gold grades too. It's been out of commission since 1991. The company went broke, and when they went broke, they moved up and packed off. And then so we picked it up for staking costs. We walked in and just staked this up, which was kind of a coup for us because this is what we're going to focus a lot of our work on this year. We have a 15-hole program designed already, and it's in permitting process right now. So we're in the process of trying to get rigs lined up because it's such a boom right now with all of the drilling and production and everything else that it's hard to find equipment. It has a 1,450-foot shaft, 2 shafts actually that go down that deep. Was never tested below 1,300, and then it was just sparsely tested. It was never mined below 1,100. So it's in the Comstock area. It's in the Comstock-Ramsey district, and we all know the Comstock Lobe is quite a haul. 8 million ounces of gold and about 700 million ounces of silver. This is the same rocks, the same type, same age. So this right here enthuses us by we're going to drill deep. We're going to drill laterally because this is a diamond in the rough as far as we're concerned. Here's some of the grades that you can see here. 3,700 grams per ton silver, 400 grams per ton silver, 1,200 grams per ton silver, 4,600 grams per ton silver. Those are pretty good grades within this. That's not obviously the average, but that's a pretty good haul. You know why they were what they were running at before they went bankrupt. Pretty good grades. Typical. There's a little bit of copper in the system, but on the right, that's pretty much what the ore looks like. Quite simple. Calcite being replaced by quartz, and that's when the gold and the silver were dumped out into the veins. This is just looking at the vein perpendicular. We managed to get all the data from University of Nevada, Reno, and we put it into 3D. So now we're targeting our drill programs around it. You can see to the left, which is the west, high grades that were never mined. Off to the right, high grades that were never mined. That's to the east. So those are targets of our drilling this year. We consider it very poorly tested. Here you can see what was mined out in the past. The dark pink is the void left from what they mined. All the light pink that you see in there is material that was drilled out and ready to mine that they just went broke before they ever got to it. So we know there's ore down there already to find. This Tuscarora project is mainly gold, but as you move to the silver or to the south and to the north, you get into a silver rich zone. It was mainly a silver mine back in the day. Tuscarora had 5,000 people once upon a time in 3 mills, mainly mining silver. Our portion is, as you move to the south, is mainly gold, but as you go to the north, we get to a more 70-30 electro, quite silver rich at the northern part of our property. Located in Elko County, so it's pretty close to where I live, in a very mining friendly area. But some of the grades, you can see there's pretty splashy grades in the gold. So that's part of just one vein set. There are 12 that run through the district there that we haven't tested all of yet. Where they were exposed at the surface, they were mined. Where they went underneath the gravel, they were lost. And that's what we have mostly covered area with, like between 0 and 300 feet of gravel, and some pretty good grades there. Here you can see the projection of the majority of these veins. This is one of the reasons I came to American Pacific, was the potential of this ore body. We started the company with this. You can see East Pediment, South Navajo are the only ones tested within our property, and the rest of them really haven't seen a lot of activity. We've got a lot to do, got good geophysics that we've done on it. We have 8 targets, and right now the property's in limbo as we figure out what we're going to do with it ourselves. Are we going to drill it? Are we going to JV it? Milestones here. We pretty much have checked most of the boxes. Acquisition of the Madison Copper project clearly was something that put us in the limelight a bit. We've had good success with Rio Tinto in the conversation with them. They keep us in the loop. They send us a weekly report, so we know what they're doing. They've been a great JV partner. That's pretty much it for American Pacific. The guys here, just run right quickly. Warwick, Eric, Alnesh, Ken, and Jonas, we're all pretty seasoned veterans. So I think we have a really strong management team on top of that as well. I think we're moving in the right direction. I see growth in the company. Here's our investor relations lady that you can call. This is all on the website as well. Actually, there's a little bit more of an elaborate presentation on the website. Thanks.
All right, Eric, thank you for that. And we are going to go to Santacruz Silver. Arturo, Prestamo. Arturo, we've known each other for a very long time. You've done a lot since the last time we met face-to-face and had lunch. The Rosario mine speaks for itself, but you made an acquisition recently and you're expanding. You're a mid-tier producer in Mexico, and it's quite a story. So you can give us some more background, and I'll turn it over to you, my friend.
Thank you very much, David. Yes, absolutely. We just closed a very exciting acquisition, which I think it's a really exciting one. Actually, we're very happy to being able to close this. In the process here on my presentation, I get very excited about the story, and I'll be making some forward-looking statements. So I apologize up front. We like to see the company as a growing company nowadays because we're growing from head grades, we're growing from tonnage being milled, we're growing from the resources in the property, as well as we're growing the cash flow that is being generating within the company month over month. Our share structure today is around 430 million shares fully diluted, and we enjoy of what I think a very strong group of institutional shareholders. We have as well a very seasonal independent board in different disciplines, which we try to make them, of course, aware of any important decision that the company takes. Carlos Silva is our CEO. Carlos has been awarded the second best miner of the country a few years ago by the Mexico's Mining Association. So he's the one responsible of our operations here in Mexico. We have two mines in production, as you point out, David, the Rosario mine in San Luis Potosí and the Zimapan mine in Zimapan, Hidalgo. Both mines combined, they should be in the range of 4.5 million ounces of silver equivalent for this year. We're in line to be there by the end of the year. The Zimapan mine, of course, is our flagship property with a 3,200 ton a day mill. Now it's running at a rate of 2,800 tons, and it's increasing its tonnage as the days go by, as we're now starting to mine higher grade ore from Lomo del Toro mine, which I'll describe in a moment. And the Rosario mine, which is a small mine, but narrow vein system, but nonetheless a mine that we have invested throughout the last few years, and we have arrived to the targets that we identified through drilling campaigns in the past. So we'll keep running the Rosario mine as long as it's profitable. A little bit of the historic production of the Zimapan mine. Since 2010, this mine has been growing its production year over year. 2019 was the exception, also in 2020, because as we might recall, we just acquired this mine, and this mine throughout the last 10 years was under a lease agreement with Peñoles. The lease agreement was coming to an end in 2019, so the mine started a process of slowing down production, since the agreement stated that the mine should be returned to Peñoles on a current maintenance status. Nonetheless, in 2019, that's when Santacruz engaged into discussions with Peñoles, and we end up buying the property this year during Q1. As we speak, our main objective in Zimapan is to bring back production to historic levels of 2017, 2018, and we have already bought the equipment, the underground equipment that was needed to get these mines into this historic production. And now we're running Lomo del Toro, a mine that was within one of these group of mines, but was closed since 1995. And little by little, we're increasing production at Lomo del Toro, which is a high-grade area, and we expect to. We're planning. I mean, we plan to have 15,000 tons coming out of Lomo del Toro, which will allow us to increase the tonnage, and as well to increase the head grades within the milling tonnage nowadays. The Simapan mine, or the mill is fed by two mines, the Carrizal mine and the Monte mine. Both mines, they share similarities from a geological or mineralization point of view, in the sense that they both have wide ore bodies. Also very important, they both have a very competent rock. And those two, in my opinion, are really interesting when you are doing an underground mining. You are allowed to run high volumes because you have a wide system, wide mineralized system. And as well, you can advance in a safety manner and in an economical or very efficient way, because the rock is competent and you don't need to to shotcrete or reinforce every meter or every now and then as you keep advancing. Those two attributes allow you to have a very efficient mining method in these two mines, and of course a cost efficient as well. This last quarter, we just started building the Lomo del Toro mine, which is in this area at the Monte mine. And Lomo del Toro is the historic mine within the Simapan mining district. It was discovered by the Spaniards, and it was a very high-grade mine in the mid-90s when Peñoles was running this property. And also since history, it has been grades north of 250, 350 grams of silver, plus 7 or 8% zinc, which are grades that we have now finding as we keep advancing the exploration here at Lomo del Toro. As we speak, we're doing a drilling campaign with a very encouraging potential for a short area of the Lomo del Toro mine. We think that our drilling campaign will be able to allocate around 2.4 million tons of high-grade ore. As we speak, we're already mining 4,000 tons last month, and we expect to mine 6,000 tons this month from Lomo del Toro, where head grades are significantly increasing, and we're starting to see a very nice blend between the other two mines, the Carrizal mine and the Monte mine, going through the mill. So this is going to be one of our most important mines to be investing here in the next coming months, as it will be the driver for the increase in production and the increase in head grades at Simapan. This is, of course, our short-term exploration focus. And in addition to this, we have Santa Gorgonia, a mine or an area outside of this group of mines, but within the claims that we have acquired from Peñoles, which has also very interesting upside potential. We have done geochemistry and magnetometry throughout the last few years, and relying as well in some very thorough exploration that was done by Peñoles. We believe that it has the merits for a drilling campaign, and hopefully we can start that by next year, and that could be a significant addition to the Simapan group of properties. In Simapan, we are also very proud to enjoy, or these are the, let's say, the awards that we feel more proud of. And one of them is the IRMA standard. The IRMA standard is a standard of good mining practices, of responsible mining. And it's a standard that measures pretty much all the aspects of the company, and including your mining practices and environmental matters, how they are handled, and even how you handle your relationship with the local community. So we feel very proud to receive this award and being the first ones in North America, as we were told, to receive this standard. In addition to that, we have the Clean Industry Standard or Award, which is granted by Mexico's Federal environmental attorney, Profepa. This is an award that it's renewed or lost every 2 years. Every 2 years, Profepa or Federal Attorney Office Environment review your practices, review what you have done in the past and what you are planning to do in the next coming years. And they either give you the award or they retire the award in case you own one award and you are not, you don't have the merits to keep it. So this mine has been renewing this award since 2009 and has been continuously renewing the award. So these are the two most, let's say, awards that we feel proud within the company at Zimapan. And then we have the Rosario mine, which is in Charcas, San Luis Potosí. This is, as I was pointing out, a small mine, narrow vein system, different from Zimapan in the sense that the rock is not that competent, but nonetheless, we have just arrived to those high-grade areas that we delineated with drilling campaigns in the past. So we're going to keep moving slowly, but steady as we reach its full capacity by the end of Q2 this year, where we should be in the 400 tons per day. We're keeping a close eye to have this mine profitable by all means, also in the second quarter this year. And for the time being, we'll keep doing just as little exploration as needed, just to keep production and development on the mine in a safe way and in a profitable way as well. This is our production forecast for the next coming years. We feel comfortable that we should meet these targets. Maybe this year, 2020, we might be 2021. This year, we should be a little bit higher in our all-in sustained cash cost, since we accelerate the developments at Zimapan in order to take this mine to its historic production levels of 2017, 2018. But nonetheless, once we reach those levels, which should be by the beginning or by mid of this third quarter, we should start bringing costs down at Zimapan as well, in line to our forecasts. Our corporate objectives will be to we'll keep looking for opportunities to grow the company organically and maybe through acquisitions. We will capitalize on our investment in Zacatecas Silver Corp, a company that it's doing a very interesting and very thorough exploration activities in Zacatecas, a group of claims and mines that we used to own in Zacatecas. And we'll continue strengthening our balance sheet throughout the cash flow generation quarter over quarter. As for our operations, the Zimapan mine, our main focus will be to bring this mine to historical production levels. The completion of the phase one of the drilling campaigns at Lomo del Toro is a very important one for us, as it'll be the driver of the increase of head grades and tonnage here in the next coming months. And we'll keep focusing, reducing and bringing costs down again to Zimapan once we reach full capacity by the end of or mid third quarter. As for Rosario, as I was pointing out, we'll be focused in reaching its full capacity of 400 tons per day in the next coming months. And we'll continue doing exploration and infill drilling as we keep advancing the property throughout the next coming years. Generally speaking, we are a low-cost producer, silver equivalent silver producer in the country. We have just closed, as I was pointing out, this important acquisition from the Zimapan mine. We're focused on our near-term production and growth, and those will be our most important objectives for this year, David. And so I think that's pretty much for me about Santacruz and giving you an update. I hope this has covered or gave you a good picture about where the company is standing today.
Yes, Arturo, I think you did an excellent job, and congratulations on your awards and also where you are with expanding the company and so many vectors to increase value to shareholders. So again, thank you. It's always good to see you, even though it is virtual. Also want to comment on the stock price. I believe it was 2016-17, and the company started off at around 50 cents a share. We're back at that level. That's which correct. I think is commensurate with all the work you've done. And buying a stock at a breakout level is actually a good thing to do, believe it or not. I have a lot of experience investing. And so I think a stock, as all these companies, I don't want to pick one or favor anybody, but everything structurally looks really good from the mining itself, as well as the relationship to the stock price. So I'll leave it there. We will move on to impact. And it is an impactful situation. Fred has a different way of looking at things. Fred Davidson and I have known each other for quite some time. In fact, a long time ago in my early days, one of the people that worked for me on a part-time basis also worked for Fred. It's not a story I won't dive into, but he's actually was the one that tipped me off and said, you've got to meet this guy, Fred Davidson. I'm very glad that I have and learned a lot from him. He's helped me in, let's say, issues that I needed to know, and he was confidential and has been a good friend and a good mentor in many, many ways. So Fred, let me turn it over to you. You can probably talk a half an hour about your background, but we could shorten that up and talk more about impact. Thank you.
Thank you, David. I appreciate the opportunity to have a chat. And I'm Fred Davidson. I'm president and CEO of Impact Silver Corp. It's somewhat unique. It's probably the purest silver play listed on the TSX right now, with over 90% of its revenues sourced strictly from silver. Standard disclosure document. I'm sure you're all sophisticated and you understand it, so I won't spend too much time on it. Why are we in Mexico? And quite frankly, it's the top of the chart when it comes to production of silver. And it's also very near the top of the chart in Latin America for production of other metals. It's the largest producer of silver, in fact. We find that your mineral title is assured. The other side is, it was briefly talked about in one of the other presentations, ESG. And in Mexico, they understand mining. In fact, the local church has a statue of a miner out in front rather than the Madonna. So they understand we're a significant producer in the local community. And 99% of our staff is Mexican, and the 1% are basically geologists do 43-101 studies for us. And the other thing is the company is able to obtain necessary supplies relatively easy from both the United States and Mexico. This is our 15th year that we first started production. We've produced 11 million ounces to date. But we have to understand this property itself was producing back with Cortez when he first conquered Mexico in 1521. In fact, the earliest mine on our property is 1527. And our biggest producer right now, our biggest source of production right now, is 1529. So it's got a long history. We've located over 5,000 old mine workings on the property to date. We've located old 42 historic mills, haciendas as they're called, some Spanish era. What's happened to the silver production? Well, we do have a different attitude towards it. We were upping our production to about 2016. We were going to break the 1 million ounces of silver, not equivalent, but pure silver. And we ran into the problem everybody else did. The price of silver dropped. So we have set an attitude that a mine has to actually make money, not just produce silver. And we cut back that production to produce from those areas where we get the highest margin. Not even necessarily the highest grade, but the highest margin to the bottom line. And as a result, from about 2018 on, we've had positive cash flow from the mining operation. And in 2020, we generated 2 cents a share earnings. We're located in the southern portion of the epithermal silver belt, and our next door neighbor is the very famous mine, Tasco, who was the first mine in Mexico. We were the second. The advantage of being a pure silver play is demonstrated, for instance, March 2nd to July in 2020, where when the price of silver went up 37%, our price went up 149%. So we're very leveraged to silver. We are a higher cost producer, so when the price of silver moves up beyond a certain point, it goes right to the bottom line for us. And it's really dramatic in terms of our price of the stock. Again, as I said, we're in the lower part of that Mexican epithermal belt. We own 211 square kilometers here. It's well serviced with power, and it's only a 3.5-hour drive from Mexico City. The general area is described as the Zacualpan district and the Capiri-Matla district. And we have a mill up at the Guadalupe Production Center, and it sources from the epithermal veins in the area immediately surrounding it. We have another mill down in the very south called Capiri. It was a pilot plant that's designed to test feeds in the local area, and including one in specifically Capiri, an open pit. The stock has been trading all over the place in the last while. The 52-week range has been between 51 and $1.25. We currently have about 143 million shares outstanding and about 161 fully diluted. Market capitalization is under $100 million, and cash in the bank is about $22 million. Debt, none. Share ownership, 70% is retail, 20% is institutional, and 10% insiders and management. You can see this trend, as I mentioned. In 2018, we were negative in terms of the mine level, we call it EBITDA. This excludes the being a public company cost. That turnaround result next year in a $1.3 million profit or positive EBITDA. 0.87 next year, 146 in the last quarter of 2020, and overall $2.70 for 2020. First quarter of 2021 was $2.60. We're currently producing from 4 mines in the district. Guadalupe, that very historic mine, it now represents 48% of our feed. A small little open pit, which is high grade, but very, very low cost, and looks like it extends to depth. San Ramon, which has been in production since 2004, and Cuchero, which is basically a corridor of veins running higher, lower grades, widths, etc. I'll give you an example of some of the old mills. That's on the right-hand side, and the current mills we have are on the left-hand side, and we'll explore those very briefly. The team, this is the 4th mine I put into production. We've got George Grzinski, Jerry Wong, Amanda. We've all got a long history in what we're doing. We are excited about this, and we're putting a lot of effort into it. Back to that map again. Area 1 is, in fact, the brownfields area. Area 2 is very early stage. The reason those red lines are supposed to be veins, the reason there's no vein showing there is we haven't even got there. This is a massive property. Area 3 is an area where there's an interface between the epithermal and volcanogenic massive sulfides. And it's an area that we'll be talking about a little more. And Area 4 is a deeply incised valley, Valle de Oro, yes, Valley of Gold. That wasn't named by us, and we're following up some early leads that look quite exciting. Let's go to Area 1. The Guadalupe mine is in that circle to the north. There's a major structure running north-south here. And you can see these are all old mines that we indicate. You get to the south, you get into one called Alacran. Now, Guadalupe is, as I say, one of our major producers. Alacran is quite exciting, and this is the reason why. These are two reports. Excuse me. One in 1920 and another one in 1921 by two independent geologists writing in the Mines and Scientific Press. It gets us a little excited. Ores carrying 20 to 60 kilograms of silver per metric ton. The wall rock is enriched, unenriched spaces rather, between the ore bodies, usually assay 40 to 50 grams. Another report basically saying ore is running at 35 kilos per ton, and the low-grade material, the 10 kilo per ton, is being sent to the Corchera mill. Really quite exciting. And what makes this even more interesting is the mining was stopped not shortly after, or rather shortly after, for political and economic reasons. Area 2 is near Tasco. You can see one of the old mines and old workings in this. It's an area I say we're going to get to, but we just haven't spent the time and effort because we have limited resources and primarily people. Area 3 is the Capire. Capire, we drilled off and came up with a resource. Well, the current prices, it's now about 5 million ounces of silver and about an equivalent in lead and zinc in terms of, I hesitate to use the word silver equivalents. There's a 200 ton a day plant you can see there. It's been stripped, it was test mined. We found that the costs were fairly high. They're profitable at this point in time, but we want to improve the margins. And right now we're doing a study on ore sorting using XRT, which should be able to upgrade the material by about 30%. Secondly, we've had access to airborne data. There was almost $2 million worth of it. We've just done an interpretation and it's identified over 18 targets in the immediate vicinity. Area 4 is that valley. Now it comes up the side of the hill again, and this is just an example of one of these properties. What we're finding is there's a silver, lead, zinc district overlying a copper gold district, and with the open pit, not the open pit, with the valley, it's exposed the copper gold, and this is one of the transitional zones. It's an old mine in the area. We sampled the surface outcrop. Best result was 97 grams gold and 98 grams silver over a true width of 0.8. Not bad. And if it was the only one in the area, it'd be interesting. We've actually found multiple veins in the area which have seen copper, gold, and silver. And it's going to be our sort of greenfields exploration going forward. Why is a little frustrating? Well, regarded strictly as a miner, but even as a miner, based on our market capitalization, and the market capitalization here is somewhat optimistic on today's price, we have, first of all, working capital well in excess of a lot of our comparables. But even more so, we're profitable. And that makes us somewhat unique in the business. And it's one of the things I think people have to recognize. Deposits can be found, mines have to be made, and it's a whole different type of transaction than just finding them. This is what I mean by that example. And this is a Howard Engineering did a study on that XRT. Interesting area. I think it's becoming more involved in what people are doing today. But what makes us a little unique is we've spent a number of years compiling old mines and prospects right back to the Spanish era. That allows us to accelerate our work and accelerate our discovery work. We have our own drills, so we can drill them when we want without having to wait for a drilling contractor. And the mine development, we've been exceptionally good at it. We're well recognized with the Mexican government. Permitting has never been an issue. And that takes us to mine production and cash flow relatively quickly. We're looking at Capiri adding in the area between 250, 350,000 ounces of silver, and the equivalent again in byproduct such as lead, zinc, copper, and gold as we go forward to its production phase. So what we have is we're the purest play in silver right now. We've had stable production over almost 15 years. We're profitable. We've had exciting new early stage prospects like the Chapinel with 97.5 grams gold. We've got near-term development of bringing the Capiri into production. And we have hundreds, literally hundreds of epithermal vein targets, 5,000 old workings, and 42 old haciendas we've yet to follow up. So as a company, as a entity, we see that the future of mining in Mexico is secure. We think that with the money we have on hand, we can achieve all of that. And with the technical and resources we have, the only issue we've got is we will be constrained in exploring all of the exploration potential on the upside. And hopefully over the next little while, we'll fill in that gap to the south and east, but we still have to explore all of the aspects of Villa de Oro over the next 2 years. David, over to you.
All right. Thank you, Fred. All right. We are going to talk to Mr. Daryl Rader of Minaurum Gold. And Minaurum has been on the Morgan Report for quite some time with some patients involved, but we stay close to all these companies. Daryl, I won't belabor the point. Want to give us some background and get right into your presentation. Thank you.
Will do. Thanks, David. My name is Daryl Rader. I'm the president and CEO of Minaurum Gold. Before I begin, I just want to cover some forward-looking statements because this last sort of 12-month period since COVID hit Mexico definitely sort of played a bit fast and loose with some of our plans exploration-wise moving forward. So please do your due diligence before investing. Please take a look at this forward-looking statement. You'll see it on our website in the presentation section. For those of you that don't know Minaurum, Minaurum was formed originally as a mag gold concept vehicle. So we have a number of the same founders as mag silver, but more importantly, we have a very similar exploration methodology, which is we're looking for new high-grade discoveries in Mexico. We started out on the gold side and we ended up making a discovery on the silver side, and now a silver project is our flagship project, the Alamos Silver Project. But if you take a look at our track record in Mexico between Dr. Peter McGaw and David Jones, there's some of the largest gold and silver discoveries that were made in recent memory in Mexico. These are very active members of our team. Peter is a founder and director, and David's a director as well. Besides our flagship Alamos project, we have a pipeline of district scale projects. One of the things we wanted to do here with the company is have a pipeline, because when you're doing early stage exploration, we know the odds. And what we wanted to do is we wanted to focus on a process where on the gold space, we wanted to see at least multi-million ounce potential. And on the silver space, we wanted to see at least 100 million ounce potential. So as we went through these projects from the grassroots stage, drilling them, as soon as the target didn't look like it was big enough or a little different than what we were looking at, we either dropped the project or JV'd it, replaced that project with another one in the pipeline, and kept developing it. So as of today, 90% of our time and money is spent at the Alamos project, and the other 10% of the money is basically spent on the Santa Marta Copper Gold VMS district that we're just drill permitting, as well as the Orifero Gold project that we're permitting. You can see on the strong capital structure, we have just over $3.5 million in the treasury. We just announced a bought deal that's through heavy institutional participation. Is going to be taking another 8 million. So we'll have over $11 million in the treasury to develop our projects over the next 6 to 8 months here. Key thing to note here is, as I mentioned, COVID hit Minaurum pretty hard. Between July and December of 2020. We drilled with no problem. We had a COVID sort of clinic developed on the project that was testing everybody coming onto the project. We had a base camp. And as you can see from our share price, we had steady news and we mirrored the price of silver. At Christmas time of last year, a lot of students, family members came from all over, visited the communities on our project. And suddenly we got into a situation where maybe there was a death in the region every couple of weeks to multiple deaths a day in the region. And that continued on through till almost about May. And so when this was starting to come to everyone's attention in early January, the local community asked us to take a break from drilling, just wait till they had a handle on COVID. And so while our peer group's been trading up closer to their 52-week highs and the market's finally rewarding drill results, Minaurum has sort of been having to sit there and just bide its time. Thankfully, as of late May, we got the notice that it's time to go back in and drill. So we're going back now. We're going to be drilling here in a couple of weeks and we'll resume our steady news flow. And obviously on the share price side, the main objective is to start bridging that gap and get closer to our 52-week high. The other key item to notice, we do have analyst coverage from Agentis, and that's something that we're working on getting some additional coverage. As far as the project portfolio, Alamos is our flagship. You can see some of our other projects. The Adelita, we have a JV on with Infinitum, which is the backers behind Reyna Silver. Tavicha, we have Fortuna drilling on the project that's directly adjacent to San Jose mine. So as we get Alamos ramped up here and get the news flow out, we'll also be getting news flow out of the JVs, both of which I believe are planning to drill in the latter half of this year. And we're also looking at doing a few JVs on our non-core projects as a way of advancing them. So at Alamos, the opportunity here presented itself several years ago when a local family out of Hermosillo in Sonora spent about 6 years and $2 million US consolidating a historical district. This is a historical district that contains 3 mines on 2 veins that produce 200 million ounces of silver. This family is the same family that vended the Santa Elena project to Silvercrest #1, and this infrastructure family is the same group that is basically doing everything but geology for Silvercrest #2 at Las Chispas. At our project, they do everything from drilling to permitting, community relations. We take care of the geological side. So when they brought this project, I should say, to our attention, we right away looked at this and saw, okay, there's a lot of historical production in the camp. We know that it would appear that the mines ended in mineralization. Subsequent to the acquisition, we acquired some historical data you can see here that show that the mines continued at depth. I won't read out the results, but some of them are very material, including 4.6 meters of 2,800 grams silver. But what we did as a company is we decided we know that there's leftover mineralization, but we want to look for new things that the old timers missed. And this next slide just sort of shows you what the result of that work was. Over the last 4.5–5 years, we discovered 24 new vein systems, most of which have seen no historical production whatsoever. A number of them have seen a little bit of sampling, a little bit of sampling, a little bit of little sort of mine declines, little shafts that go down several meters. But to the most part, there was really nothing done. And so we mapped these all out. You can see the vein footprint grew from 500 meters by 4.5 kilometers to 11 by 6 kilometers. And we focused on these historically non-producing veins, these veins that for some reason were left behind. So what we did is we mobilized a couple of drill rigs. We ended up having 3 drill rigs. And in our phase 1 drill program, we wanted to prove that this is a high-grade silver district, not just 3 historical mines with remnant mineralization. We ended up drilling 19 vein systems. 14 of them returned high-grade results. And that gave us sort of the idea now that, okay, we're onto a silver district. It gives us an idea that what kind of potential we could see here. These systems are shooty silver systems. They occur in shoots on the vein systems. And what we wanted to do in the first program is put a hole or 2 into every single vein system we have on the project. And on that basis, start prioritizing targets. And as it says there, 14 returned high-grade intercepts, and we are now in our phase 2 following that up. This gives you some idea of our phase 1 results. They're all over the place because the drilling actually occurred all over the place. You see things like Europa Guadalupe, which was our discovery hole, 2.5 kilometer long vein, First hole in, we hit 8.25 meters, true thickness of 1,700 grams silver. One thing I didn't note was we are bordering Mexico's third largest open pit copper mine. So this is a very polymetallic system and copper rich, which of course with copper prices today is a nice base metal to have along with our primary silver mineralization. And what you see here is that some holes like San Jose, 10 meters of 200 grams, it looks like we're getting close to a silver shoot, but the grades aren't quite where a silver shoot would be in this district. Other areas, 90 centimeters to a meter of 400 to 500 grams silver. What that tells us is the vein can host high-grade mineralization. We need to go back and do step-out drilling and figure out where shoots form on the system. So phase 2, we started drilling in July, and as I mentioned, it unfortunately stopped at Christmas time last year and has yet to resume, and thankfully we'll be here in a couple of weeks. The two priorities behind our phase 2 are, number one, defining silver shoots. So we are aggressive drillers. We're not drilling sort of resource drilling. We're not trying to drill these potential shoots into Swiss cheese. We simply want to figure out as quickly as possible how large these potential shoots are. We believe we're onto 2 of them, one at Europa Guadalupe, one at Promontorio at depth. We're also focused on discovering new silver shoots, and these include targets like San Jose, and some of the other areas we'll drill include places like Ana and Alessandra that I'll discuss here very momentarily. So in phase 2 thus far, we drilled just over 14,000 meters. We are continuing with another minimum 15,000 meters expected to start late June and complete just around Christmas time this year. This gives you a very brief idea. One thing I mentioned again was we stopped because of COVID. You can see as we were drilling this logistically. We had our base camp west of the third target there, which is San Jose on the left. As we started moving towards the center of the camp, we shut down, didn't restart. So we want to get back to drilling especially number 1 and 2, which seem to be potential silver shoots, but we also want to get into number 4 and 5. Number 4, for instance, is a 3-kilometer long vein. We popped 1 hole in there, hit about 30 grams silver over 3 meters and about 15% combined base metals. Alessandra is a copper gold vein. We have a number of samples on surface grading in excess of 100 grams per ton gold. So we want to get in there, start looking for silver shoots in these systems. And the concept here is over the next 2 years, we want to get to a monetization event. That means we want to get to a place where we're either going to sell this for top dollar or bring in a partner, sort of like Mag Silver, to develop this into production. To achieve that, the focus is getting a sufficient number of silver shoots. If you sort of Google it, there's a number of major and mid-tier silver producers that talk about what they like to see in a new discovery. It's usually at least 4 to 5 silver shoots. So that's what we're focused on delineating here over the next year and a half, is getting up to that total number of shoots and then systematically drilling them off and putting them into a resource category. This just shows you a little bit of where we believe a potential shoot is at San Jose. You see a lot of results. Some of these wider intercepts, like almost 12 meters of 200 grams, have much higher sort of core grades. I believe that one has about 3 meters of 600 grams in the core of that one. So we're getting an idea of what these systems look like here, but we believe the trend is increasing grade at depth. So that is something we'll be testing here in a couple of weeks. Promontorio is another system where we believe we're just expanding on existing silver shoots to depth. We have holes up to 150 meters below the deepest workings, and we're still in high-grade mineralization. You can see the grades here on the side. They're very high-grade polymetallic results. Oops. San Jose is one of these sort of potential silver shoots. You can see we haven't put too many holes in it yet, but they're quite widely spaced. We started sort of with that 10 meters of 200 grams, and we're now getting down into, at our deepest hole was true thickness just under 2.5 meters of 460 grams per ton silver. That shows us we're getting into higher grades. We want to go a bit deeper there and step out a bit to the southwest because these shoots tend to dip to the southwest. So for Alamos, as I mentioned, we're going to see a lot of news flow, a lot of drill results moving forward. It's 90% of our time and money. On the district scale project side of things, besides news coming out of the Adelita project and the Tavicha project, and you can see some of the historical drill results there, our sort of 1B flagship project is the Santa Marta project. This is a large copper gold VMS that we've been permitting for a while. We've made significant headway on that front, and we're working towards getting drill permits for that by the end of the year. For those of you that know the project, this is a virgin VMS district in southwestern Mexico. This is a project that David Lowell came down back in 2013, liked it so much he invested personally in Minaurum, and it ultimately JV'd the project as the flagship project for Lowell Copper, which is now Equinox Gold. Due to some regional issues, they left the project. We've since been getting it ready to drill. As I mentioned, we hopefully will have the permits in the second half of this year. As soon as we get those, we'll go in, probably start with a 3,000 meter program. Aurifero is just one of these high impact projects. Again, high grade gold on surface. We're going to go drill at depth and see if all these high grade veins don't coalesce at depth and become a larger system. And that's something we'll be drilling in the second half, probably around 2,000 meters as well. So as I mentioned, 15,000 meters of drilling at Alamos, probably about 3,000 to 3,500 at Santa Marta, another 2,000 to 2,500 at Aurifero, all expected to happen in the second half of this year. So we're going to have a lot of news flow moving forward here. So the investor catalyst portion, here's our contact info, minaurum.com. You can find all the information you need. We also have a YouTube channel that has some interesting interviews with market personalities, as well as some of our directors, such as Dr. Peter McGaw. And I think it's pretty self-explanatory what our news flow here is and our investor catalyst moving forward. David, back to you.
Hello, everyone, and welcome to the second edition of the Silver Investor Forum. Today we have 4 exciting companies presenting to you. First will be Silver VIPR Minerals, followed by Southern Silver Exploration, and then Dolly Varden Silver, and finally Metallic Minerals. Today what we'll do is my presentation will be a summary of each of the companies that I highlighted earlier today, as well as in this block. And then we'll follow with the presentations for each of these 4 companies and a Q&A session at the end. So I encourage everyone to use the chat box, chat function to put up some questions that you'd like to put to the presenters. So I'm going to start with each of these companies. In fact, the first one is Discovery Silver, which was earlier today presented during Gwen's block. I like and I own Discovery Silver because they have the 100% of the largest, Discovery has 100% owned Cordero project located close to the prolific mining belt in Chihuahua State, Mexico. Its grades put the silver value at around 60%, and it's geologically similar to Newmont's Penasquito mine. It's actually owned and operated by, or part of the Oxygen group of companies, which have built 9 companies, and 5 of which have been acquired. And they've realized over the years over $3 billion in value. The catalysts for Discovery Silver are a 66,000 meter drill program this year, ongoing drill results from that program, and an updated resource expected in Q3 this year, followed by a pre-feasibility study in the next year. So the rationale, my rationale for owning Discovery Silver is that it owns an excellent project in a great jurisdiction. It has superb infrastructure. It looks to have an expected at least 15-year mine life, producing about 15 million ounces of silver equivalent per year. That will make it a top 10 primary silver mine globally, and it has the ability to scale up from there. Next is Blackrock Silver. Blackrock has a large land package on 2 prolific high-grade gold and silver belts in Nevada, which is, of course, a top mining jurisdiction. Its flagship project is Tonopah West, which consolidates half of one of the largest silver districts in North America. Both of its projects have grassroots and brownfield targets with high grades and multi-million ounce potential. They've recently had a vote of confidence, a considerable vote of confidence, where they had an investment by a large primary silver producer, being First Majestic. Some of the catalysts for Blackrock are the results of their ongoing 40,000 meter drilling campaign this year. And the rationale for Blackrock is looking forward to a robust maiden resource expected out in Q4 this year and a likely re-rate by the market. From there, we have GoGold Resources. They actually have a two-pronged approach. They have a producing asset and they have an exciting development asset, both in Mexico. Parral is a producing tailings project that's located on the outskirts of the city of Parral. Its tailings grade 64 grams per ton of silver equivalent. It has an 8-year mine life remaining. GoGold is producing through heap leach approximately 600,000 ounces of silver equivalent every quarter, and that generates about $2 million of free cash flow every month for the company, which of course they use to run the company and to fund exploration. The exploration and development side is in Los Ricos. That's a two-part project. Los Ricos South already has a preliminary economic assessment that's been completed that has a net present value of $300 million or just below 300 million. And at current or near current gold and silver prices, the after-tax internal rate of return is an attractive 58%. Los Ricos North is enjoying a 100,000 meter drilling program in 2021, which makes it one of the largest exploration projects in Mexico this year. They've been getting some long intersections of high-grade silver plus some multi-kilo per ton bonanza grades. The catalysts for GoGold are the advanced projects and an expected initial resource this year. The rationale is that I believe the market will be attracted to a profitable high-grade silver miner with large upside through development and a highly experienced and accomplished management team. And we have GR Silver, which owns a district scale silver and gold development project in Mexico. They're the first to fully own and control the Rosario mining district. Part of that is San Marcial, which is an advanced stage project with 36 million ounces in the indicated category of silver equivalent, and an additional 11 million ounces of silver equivalent in the inferred category. It has near surface high grade silver that is open pittable and it's being expanded. Part of the Rosario district is Plomosas, which was acquired from First Majestic, and First Majestic in fact owns 14% of GR Silver. Together, Plomosas and San Marcial are just 5 kilometers apart, and they show a strong possibility of actually eventually being developed together as one. La Trinidad is adjacent to both Plomosas and San Marcial. And up until 2019, when it closed, it was actually one of the highest grade open pit heap leach mines in Mexico. And it continues to offer some high upside on the discovery aspect. Catalysts for GR Silver are the Plomosas maiden resource that's expected in July. And then on San Marcial, we're looking for an upgrade in the resource in the second half of this year. My rationale for GR Silver is the highly accomplished team with an exceptional district scale silver gold system. I expect ongoing resource expansion and new discoveries and the potential to attract majors. Moving on, we have Sierra Madre Gold and Silver. Their flagship is the Tepic project in Nayarit, Mexico. It has great infrastructure with the electrical grid going through the property, paved road, an excellent mining culture. It's just 22 kilometers, mostly on paved highway from the city of Tepic. It has excellent existing, there's an excellent existing resource with indicated 7 million ounces at 201 grams per ton silver equivalent, and an inferred resource of 3.1 million ounces at 181 grams per ton of silver equivalent. In this case, the catalysts are the upcoming drill program and an expected updated resource by the end of 2021. The rationale for Sierra Madre is the excellent team, including the modern exploration that should help expand the resource substantially. They're working with larger than 2,600 hectare land package, and recent exploration suggests a strike length of more than 10 kilometers. As well, management is intent on making some accretive acquisitions to consolidate the area. And now with companies in today's block, starting with Silver VIPR. Their La Virginia project in Sonora, Mexico was acquired years ago from Pan American Silver. They recently announced their maiden resource of 20 million ounces of silver at plus 35 grams per ton, as well as 400,000 ounces of gold at plus 78 grams per ton in all categories, including some very high-grade zones. The resource in the ground is worth about $1.2 billion at current prices. The catalysts are ongoing drilling assays, potential to expand the resource even further. And the rationale is the team has demonstrated multiple previous successes. They have a strong initial resource. There's plenty of blue sky potential to grow and lots of underexplored areas to continue exploring. The resource is likely open pittable, and it certainly should be attractive to mid-tiers or even majors. Southern Silver has their flagship Cerro Las Menitas in Durango, Mexico. It's one of the largest high-grade undeveloped silver projects in the world. It has superb infrastructure, was owned by the Electrum Group, which today still owns 24% of Southern Silver. It has a total of 272 million ounces of 134 million of silver equivalent at 375 grams per ton indicated, and a further 138 million ounces of silver equivalent at 334 grams per ton. The catalysts are this year's 20,000 meter drill program, ongoing drill results from that, high-grade intercepts, a resource update expected in August this year, and a PEA later in the year. The rationale is that the deposit could grow by as much as 30%. There's a possible re-rate of the shares by the market, and as well, Southern Silver could make for an attractive takeover with several large silver miners as neighbors. Dolly Varden has the Dolly Varden Silver Project in the Golden Triangle area of northwestern BC. It's a large high-grade resource, which totals 44 million ounces, being 33 million at 300 grams per ton indicated, and 11.5 million ounces at 277 grams per ton inferred. It's a past producer at high grades of above 466 grams per ton. Sprott owns 18%, Hecla owns 11%. The catalysts are a phase 1 10,000 meter drill program this year. The drilling results coming along from there. And the rationale is big exploration and discovery upside, potential for considerable growth in the resource, strong leverage to the silver price, and again, located in a great neighborhood. And lastly, Metallic Minerals, their flagship Keno Silver Project located in Yukon, as well as their La Plata Silver, Gold, Copper in Colorado, and thirdly, their Alluvial Project in the Yukon. They're advancing their flagship Keno project after having consolidated a large land position. They have a strong cash position with no debt. Keno is actually neighbor to Alexco, which is one of the highest grade silver producers globally. It demonstrates excellent infrastructure. The catalysts are a 10,000 meter drill program this year. We can look forward to the drill results from that. And for their other project, La Plata, some exploration results from there as well. The rationale is a team that has multiple high profile prior successes, excellent leverage to silver. The Keno project has the right address for a big discovery. Modern exploration shows potential for large scale mineralization across an area of 5 by 2 kilometers, a mix of very high grade with as well high grade, and a potential for possibly an open pit. So that covers all of the companies in the 2 blocks of presentation today. From there, we'll move on to the first company presenting, being Silver VIPR. Steve Cope will be presenting, Steve being president and CEO of Silver VIPR. So Steve, on to you.
Yeah, thank you, Peter. It's a pleasure, and thanks for the support that you've been giving us through the newsletter and for inviting us to participate in the Metals Investor Forum again. We had a blast last time, and we're looking forward to going through the company again for existing shareholders or people that have never heard the story. I will be making some forward-looking statements today, so I'll draw your attention to that slide. When you're looking at investing in a precious metals exploration company, I think there's really 3 things you need to focus on. 1, that it's got a high quality asset. 2, that it still has lots of potential left. And 3, that it has a strong management and shareholder group behind us. We certainly check off all 3 of those boxes. In our case, it's the La Virginia project located in eastern Sonora. As you mentioned, we acquired that project from Pan American and as well as a local private prospect generator group, the internal claims. And we were able to bring the whole land package back together and get to work and get to where we are today. The big event for us was the discovery at the El Ruby zone. It sat about 4 kilometers north of where all the historic work was originally done by mine finders and Pan American on the project. And very quickly upon making that discovery and the work that we've been doing, we were able to come out with a maiden 43-101 resource just recently in the last month or so. We're very excited about that resource, but it's just a start for us. Just the El Ruby zone, never mind the rest of the targets that have never been tested, is still open along strike and at depth. Our work this year is really going to focus on expanding the open pit component of that, but also trying to introduce a maiden underground resource to the El Ruby area. The original maiden resource, we had some high grade hits that were below the pit. We didn't have enough tonnage in that area yet, but we will very much be focusing on creating a maiden underground resource. And we have a number of different ideas that we'll talk about later into the presentation here that we're really excited about on that expansion. Like I said, where we expand potential, we're certainly going to expand on the resource, but we also have a number of other targets and anomalies that have never been tested that we are confident that we're going to make additional discoveries on this project. So again, lots of room for this thing to continue to grow. When we took over the project, the northern half had never even been mapped or sampled, or very little mapping and sampling. That's where we made our discovery at El Ruby. We've identified a number of new anomalies that will certainly be tested during this phase of drilling that we're on right now. We drill year round. We're, should have assays coming out in the next couple of weeks. And like I say, we're going to run at least a 20,000 meter drill program this year, though it'll probably ramp up like we did last year. I think last year we announced a 5,000 meter program and ended up doing almost 24,000 meters. I would expect to at least replicate that, but also probably, based on success, to increase that drill program. The strong management and technical group behind it, we sit within a group called the Belcara Management Group. We have 3 public companies under our management. I take the lead on Silver VIPR as the president and CEO. But one of the staples as a group is that you see management ownership at 20%. And all 3 of the Belcara Group companies, management owns over 20%. We're active in the market. We don't think there's a better place to invest our money than in ourselves. We have a very strong institutional ownership group within this company. I think it's at least 65% institutional, the ownership at the moment. It might even be higher than that. There's at least 20 different funds that own the stock. We've got lots of support from funds all over the world. Certainly the story has resonated with them. And then recently we've been increasing our retail following, and it's very much been growing through groups such as yourself, but also there's been another number of other groups on the front that have really been growing our retail support, especially in the US, where we've seen, some days our US volume is even higher than our volume on the venture exchange. Still very low share count. The company was set up as a true IPO in 2017. So with our recent financing that we just closed of $6 million, that takes us to approximately 95 million shares outstanding. Just quickly, here's the claims as they stand now. The blue claims was the claims that we got from the private project generator group out of Mexico, and you can see the terms there on the right. What had happened was Pan American, after they bought out mine finders for 1.5 billion, they completed the work program, but metals prices fell off a cliff. They don't do grassroots exploration in general. So what they did is they turned back those internal claims where all the historic work had been done and sat on a very large land package around them. And their thought was that that internal group would ultimately end up dropping the claims and they could go back in and stake them, which didn't happen. You fast forward to 2018 and that internal group approached us and we were able to work out a deal with them and Pan American to bring the whole thing back together. But we inherited, over 50,000 meters of drilling and 188 holes that were all focused in that La Virginia, Com Virginia, Las Huatas area there in the blue claims. After we got involved, we made our discovery at El Ruby. And since then, that's where we've certainly been focused with the majority of our drilling. You can see to get to the project, you fly into Hermosillo in Mexico, an international airport. You take a paved highway to the local town of Nacori Chico, and from there it's about 30 minutes in on a gravel and dirt road. We have very good infrastructure actually in this area for how remote we are here in the Sierra Madres. We've got water year round. We've got a power line corridor that was recently installed that goes right through the middle of the project that connects that town of Nacori Chico to the next town down the road of Mesa Tres Rios. I would like to draw your attention to this picture here. Actually, this is El Ruby, and what's nice about El Ruby is you can see it's a flat plateau. It's about 2 kilometers by 2 kilometers in diameter, and that makes it really favorable for open pit mining versus a lot of the rest of the project where you can have some small starter pits. But from a topography standpoint, El Ruby is very favorable for open pit heap leach mining. This project was found by mine finders, and what they had done is they flew the whole mountain range where you had Dolores, which was their flagship mine, 100K to the south, and then El Tigre, which sits about 90K to our north, and there's been no modern operations in between. And that's very strange when you look at the periodicity of mines in Mexico. So they flew the whole range with helicopters, settled on La Virginia, being a lookalike on surface to Dolores. The area that they drilled was certainly interesting. It wasn't quite like Dolores. But when you start to look at El Ruby and compare notes on what they have at Dolores, and this is where the lookalike really comes in as far as when you're looking at the core, looking at the Pathfinder elements. We're very confident that El Ruby here is the main event. That we can jump right into El Ruby. We're using all man-portable rigs at El Ruby. That's one of the reasons we were able to get into that portion of the project right away. When mine finders and Pan American were doing their exploration, they were using large track-mounted rigs. They were bulldozing in roads. They were having success where they were, but it was expensive exploration. With kind of technology changing over time and these man-portable rigs getting a lot stronger, we're able to go all over wherever we want on the project. We've got our permitting with SEMARNAT in place to drill everywhere. And really that is kind of why I think they ignored El Ruby. It was an obvious target when we did our site visit that, it was our number one exploration target when we took over the project. But I think it was the fact that, man-portable rigs weren't as good, 10 years ago. And, we took advantage of that. You can see there, we reuse all the lumber for the pads. When we're done drilling on an area, we throw some seed down and you can't tell, after a couple of weeks that we were even drilling there other than the drill color that's left in the ground. One of the unique things for us at El Ruby from our experience in Mexico has been, visible gold. And I guess here it's actually electrum, but you can see through the microscope what that gold looked like in the core. And in Mexico, typically, obviously, the silver mineralization jumps out at you, everywhere you go, but we haven't had a lot of experience of seeing visible gold. But in that El Ruby area of the project and a lot of our core, we do get these kind of the fine silver gold or fine visible gold in the core. And obviously always a good indicator of, assays that are going to come when we can see that. This slide's really important, especially with the work that we're going to be doing this year. One of the funds that Crescat, who just participated on our last placement, has Quentin Hennig there has kind of looked at this, and he started to compare this to a number of deposits around the world that he's seen in his time. And part of their participation is them getting excited about us targeting El Ruby at depth, and the big contact that we don't know where it is yet that they're excited about is where those rhyolites are going to meet the meta sediments. And so we're going to be doing some geophysics here. I believe at the start of August we have Quantec coming in to do the geophysics that we're looking at there that's going to identify structures down very deep. But the idea is that this is it's an epithermal system, but it's not a traditional epithermal system. And Quentin refers to it as a gold carbonate base metal deposit, but that comes from getting down to that meta sediments and getting into the the lime material where the carbonates come from, and that's where they're really expecting bonanza grades, which is interesting because we hit some pretty good bonanza grades already, over 10,000 grams silver and over 700 grams gold in a sample. But we're really looking forward to seeing kind of what the structure looks like at depth and what we're going to end up, hopefully hitting later this year as we start to test this down much deeper on El Ruby. The rest of this is still very important for the open pit side. Again, that western zone was the discovery we made in hole 245 and it's since, expanded upon. That was the ounce building zone to our main El Ruby structure. Those were the broad 100-meter long kind of gram to gram and a half gold equivalent type rock that we were getting in that portion. And then when we hit kind of our main El Ruby structure, this was our, 1 meter up to 19 meter wide high grade structure that had the low grade halos around it. It was the combination of those two that really made this exciting for open pit heap leach mining, but also showing the potential to continue to follow that El Ruby structure down at depth. Again, you can see some of the really exciting high grades that we've hit and a couple of the broad low grade zones. I won't spend too much time on that slide, but you can go back and reference that if you'd like to see some of the numbers. Dive right into the resource that we recently did. Again, we were thrilled. This exceeded, kind of what our expectations were going to be from an ounce perspective on the maiden resource. And really it was that broad low grade zone that really started to enhance it and expand very quickly at El Ruby, that resource. You can see these grades. A lot of people will say a 0.78 gold, well, that's low grade, 35 gram silver, but you've got to be familiar with the type of mining that people are going to be doing on it. Yes, if that was an underground grade, wouldn't work. But when you're looking at open pit heap leach deposits, the average open pit heap leach mine in the state and in the surrounding, in the US and surrounding states of Mexico operates about a 0.5 gram gold average grade. And so when you start to look at it through that eyes, this becomes very good grade. And those are types of deposits we're all making money at 1,200, 1,100 gold through the worst of times in our market. So from that, I can tell you that we got a lot of interest from majors right off the bat when we came out with some of our drill results and then followed it up with this resource. And this is something that is, in my opinion, and I think our independent's opinion, something that is very economic. We look forward to expanding it and growing, the tons and the ounces in the open pit. And then, like I say, we'll come up with something that I think will grab, when you start looking at our drill results, and you'll start to see something in the underground resource that starts to reflect those grades. And again, it'll be a good combination of both. I would expect to have 2 different circuits at a mine once you get to that point, but we've shown that the rock leaches very well. We've shown the silver actually leaches very well, which is also good for the open pit heap leach mining, especially the low grade silver. So very good start. You can see here, that the top image is our El Ruby pit. And again, I referenced some material that was outside of the pit. There, I had our independent run it, but that's about 8,000 tons of rock. So not stuff that would, not big enough yet that it could make it and become an underground resource, but it was running at about 15 grams gold. So again, you can see that higher grade material and the potential as we move at depth on stuff like that. Again, and you can see all the ounces that are outside of the historic area where we are in a more mountainous area. So those pits don't necessarily bring in a lot of the other low grade ounces that exist in that historic area, but that's something that could expand as metals prices move up and you start looking at those and doing pit optimization models at higher numbers. There's also a lot of ounces that would be open pittable in that historic area that would just come from increasing the pit size. This section was kind of the first hint. I referenced the going deeper and looking for the gold carbonate type system. And this section really shows why we started thinking that, why Crestcat and Quinton started thinking that. And that's when you're looking at the traditional epithermal models, here we've got 300 meters of depth shown on this section. And we've got high grade gold and silver at the surface with very, anomalous base metals at best. And then we go down 300 meters and other than one sample down there, again, you've got high grade gold and silver and still, anomalous base metals outside of 1/2 meter that ran high grade lead and zinc. So like I say, it's an epithermal system, but it's not the traditional model. We should be seeing 300 meters down, the gold and silver falling off and the base metals spiking up. And that's not what we have here. So like I said, we're going to be testing this deeper. We've certainly seen visually right now with our drilling that's ongoing that we, have mineralization in the rhyolites, but the big kind of in that system and in that model will be that contact between the rhyolites and the metasediments. Again, here with the focus and the drilling that we're doing now, before we go down at depth, we've got 300 meters of open end there to the south of the pit that we've been filling in with drilling at the moment. Again, that's all expansion and, we'll add to the resource. You can see down the bottom of the arroyo there, we had some narrow hits, but again, we think we have to go deeper on that section to pick up the El Ruby zone. And then to the north here on the left side of this image, we are fully confident that we're going to expand that pit. And we've started to go back and look at that core, and it looks like that northern end, we're in a down drop block similar to we saw at the south end of El Ruby. And so again, we've got lots of room to expand to the north as well on this portion of the project. We will be testing some other anomalies, and you can see them kind of lining up here in the geophysics that we've done already. La Gloria, we won't be putting anything in La Gloria at the moment. That's a 3K by 3K porphyry target that we put a couple of shallow holes into in phase 1. The target that we're really excited about at the moment, or 2 targets, would be Macho Libre and testing it at depth, and then La Colmena, which has never seen any drill results, that we've seen some really interesting stuff from our surface mapping and sampling there as well. I mentioned recoveries. Again, you can see here that kind of sample 4 where you got up to 76% silver leaching. That's fantastic. That would be above industry standards for open pit heap leach mines. And again, that's a great step. We're going to do some additional network just to show that we can recover the high grade silver through a secondary circuit, which will coincide, with an underground resource and how you would treat. We've also going to do some ore scanning and other studies to see if you can't help, make things more efficient on that front as well. I mentioned the group. Our last big success was Orco Silver. Again, that's our group's model. We take something along an exploration timeline, take it as far as a feasibility study, but look to vend off to one of the major mining companies. Just quickly here, because I'm out of time. You can see our cash position, our share structure, a couple of our larger institutional holders, but again, there's over 20 of those. Red Cloud Securities has the official coverage on the company at the moment, and you can reach out to them if you'd like to see a copy of that report. And then with that, in summary, I think we check off all the boxes. We've got a high quality asset. We're in a great jurisdiction, strong management technically behind it, lots of potential, good shareholder support, and we're well financed. And with that, I'll turn it back. And who's next?
All right. Well, thanks for that, Steve. A great overview of Silver VIPR. Now we'll hand the floor over to Southern Silver, Rob McDonald, and the floor is yours.
Great. Thank you very much, Peter. And thank you all for joining us at the Silver Investor Forum. I'm going to speak to you today about Southern Silver Exploration Corp. and quite specifically the Cerro Las Manitas silver lead zinc project located in Durango, Mexico. I will be making forward-looking statements. I am a geologist. That's really part of my job. And so the main focus on the presentation today will be Cerro Las Manitas. It's a silver lead zinc skarn located in Durango, Mexico. At this time, it is one of the largest and highest grade undeveloped silver projects in the world, with indicated and inferred resources totaling 272 million silver equivalent ounces at an average grade of 354 grams per ton silver equivalent. We're in a very well-established silver mining district located in Durango, Mexico. We're surrounded by producers, very good neighbors, excellent place to work. We've completed a number of value-creating transactions over the last year, starting with the acquisition of our former joint venture partner's 60% interest in the CLM project for $15 million in cash and share payments. This now gives us 100% ownership and control of the project, and we're fully financed to continue moving the project forward. We are currently completing a both brokered and non-brokered $12 million financing being led by Red Cloud Securities. And now in terms of the upscaling opportunity, we are just completing a 20,000 meter drill program. So we've got maybe another 1,000 or 2 meters left to go. We still have, we've had some great high grade intercepts returned to date, and we anticipate additional news flow in the coming weeks and months. The objective is to increase the size of the deposit by 30%, and we believe we are on track to do that. And we're looking towards a resource update, likely in the September timeframe. I know Peter had mentioned in August, but we're still drilling. So it's probably going to push us a couple of weeks later, or a few weeks later than what I was initially anticipating. And then, of course, that means we'll roll all of that information into a PEA and be looking at maybe in the first quarter of 2022 for the completion of that PEA work. These are some of the results that we've had to date as part of this 20,000 meter program. And, the highlights here really are the high grade assays that we've been able to return as both a silver equivalency as well as the actual pure silver mineralization that's within the intercepts. These are estimated true thickness intercepts, so these are very, very mineable intercepts. Some excellent mineralization, and again with that strong bias to silver and lead, which is very good for the project, ultimately for the project. A bit of a review on the capital structure. You can see issued and outstanding shares at just over 250 million, leaves us with a market capitalization of about 131 million. We still have one share payment left to Electrum, but we do have that money in the bank. We have $8.3 million Canadian sitting in the bank, and we are now just completing a $12 million bought deal and non-brokered placement. So we will be well financed as we continue to move the project forward. And so a review of the share price. When we announced the deal with the Electrum Group, we saw a very sharp increase in trading volume, sharp increase in share price that has remained stable for the last, I guess it's going on 12 months now, 10, 12 months. And in that 50 to 60 cent range, 45, 55 cent range. And so we're doing quite well in the market. And since we made that announcement with Electrum, we have been one of the top performing silver stocks since the announcement of that transaction. Again, I've spoken about the transaction, and the main thing to take away here is that it was a relatively low acquisition price. It was $15 million in total cash and share payments. That translates to a purchase price of only 9 cents an ounce silver equivalent ounces in the ground. And so we are getting valued at much, much more than that, up around 40 cents per ounce. So this was a fantastic deal for the shareholder, and it was reflected in our trading and our share price over the last 10 to 12 months. Again, we're just in that current financing. We are closing that within the next several days. So the deal itself gave us full control of the project. It increased our attributable resources. It enhanced the market profile of the company, increased our market capitalization, and made us a more attractive takeover target. And so again, just a reminder of the mineral resource that we have within the project. And we remain one of the largest and highest grade underground resources, undeveloped underground silver-based resources in the world at this point. We have an experienced management team, experienced mine finders with a history of success, particularly in Mexico. You go through the list, you'll see about 12 different production scenarios, 12 different mines. Some of these world-class deposits, like the Peñasquito project in Mexico, Hemlo or Escape Creek in Canada. The San Cristobal project in Bolivia, Los Gatos in Mexico is becoming a world-class deposit. San Nicolas project in Zacatecas. So it's a group of people that know what major projects look like. They know how to advance them and develop them, and they know how to bring them to a production decision, either within the companies that they're operating with or through sale to a producer that comes in and puts the project into production. So in terms of Southern Silver, we do have 2 projects in the portfolio. The Oro project is an earlier stage project in southern New Mexico. It's 100% owned. It's a laramide copper porphyry system, and I will get onto that at the end of the presentation. The flagship of the company is Cerro Las Manitas. It sits within the heart of the Faja de Plata of north central Mexico. It too is now 100% owned. We spent over $27 million developing it. We're at the tail end now of a 20,000 meter drill program targeting a 30% increase in the resource. That would bring our resources up into the neighborhood of 350 million silver equivalent ounces. We've completed engineering, metallurgical test work, and all of that is getting rolled into a PEA that's now due in the first quarter of 2022. The project is very well located in an active exploration and development area with superior infrastructure and community support. We're in a very safe jurisdiction. We're on the edge of the Alto Plano. As I like to joke, we're out in the middle of the bean fields, not the marijuana fields. It's a very safe area to access, and I've been going in and out of the project since 2011 without any incident or any additional security. Our permits are in place for exploration. We have exploration access agreements in place with the local ejido. We've completed well over 70,000 meters of drilling, and again at a cash discovery cost of only 9 cents an ounce silver equivalent. Exploration is a great way to add value to the project. This is where we're located, and you can see us highlighted in yellow here. This is the area of the Cerro, where we have excellent infrastructure with highways running through the property, a local nearby town, and we're surrounded by producers with Hecla Mining San Sebastian project on our eastern boundary, Fresnillo exploring the El Titanic claim on our northern boundary, Avino mining gold and silver mines about 6 kilometers away, and Corp mining working at La Preciosa. So this is the Cerro. You can see the highway running right through the property here. And so when we first took on the project, we developed resources on the western side of the Cerro. So we're looking north, basically from the autopista. So on the west side is where we have our known mineral resources, those being the Skarn Front, Blind Zone, El Sol, and Las Victorias zones. We're now currently exploring in the Mina La Bacona area and the South Skarn area. So these are on the eastern side of the Cerro. So anything that we're adding on this eastern side is entirely separate, although cumulative to what has already been discovered on the western side of the Cerro. This is a schematic just showing, the mineralizing system that we have here. It's pretty typical of other major polymetallic deposits throughout Mexico, like the San Martin deposit, Grupo Mexico San Martin deposit, First Majestic's La Paria or Peñoles Velardeña project, which is located just 80 kilometers up the highway that you saw on the previous slide. We have a central intrusion that acts as the heat pump of the system, a zone of alteration around that central intrusion with mineral deposits forming within the skarn surrounding that intrusion. This is what we call the Skarn Front deposit. It is the largest and most significant zone of mineralization that we've identified to date, accounting for over 200 million of the 272 million silver equivalent ounces that we've identified to date on the project. We have 3 other smaller deposits, and they're associated with structures in a dike swarm off the western margin of the central intrusion. The Mina La Bacona target area and the South Skarn are located on the eastern side. Again, we're in the area of historic mining, drilling under a head frame, and continue to develop that. And we'll have updates of that in the next 8 to 10 weeks. This is the mineral resource. Again, just the breakdown is over 80 million ounces of silver and 2.2 billion pounds of combined lead zinc. Major project, and it's only growing bigger. This is where we're drilling right now. It's on the eastern side of the Cerro. So here's the central intrusion, zone of alteration around it. This is the outline of our known mineral deposits. We're currently drilling over on the eastern side in the Mina La Bacona target area and the South Skarn target area. This is a longitudinal section of the Mina La Bacona target. There's 3 different targets that we've identified in this area. So there's an oxide target, and so we have some oxidation going down around 150 meters depth. So oxide mineralization, and 2 sulfide zones that we continue to drill and develop out. The black holes or the black dots are holes that we have drilled, but we're still pending assays. So we are looking forward to continued news flow over the coming weeks. And what we're seeing right here is finding high-grade mineralization relatively near surface and continuing to follow that down some earlier holes that we drilled in 2010 and 2015. So to identify around a 300-meter zone by about another 300 meters down dip. Similarly, at the South Skarn target, we've identified a core area, 300 meter strike length, 400 meters down dip. We're now drilling around the margins and building out some of the resources. Mineralization is carried by high grade and in 119, 124, and again, a broad area of mineralization that will soon be developing into new mineral resources. So in terms of our engineering and metallurgical test work, excellent metallurgical results to date. Over 90% recovery of silver, just under 95% recovery of zinc, over 80% recovery of lead, and 60% recovery of copper. We've worked this into an NSR model and now developed a preliminary mine design on those western deposits. This includes a stope model, production scenarios, and mine scheduling. So now we're looking at the western deposits, looking from the west to east. So we're actually over in this area exploring now over on the eastern side. And the idea is to do all of this, bring our metallurgical work to bear, and then do a full mine design as we work all of this data into a PEA. So very quickly now with the Oro project, again, this is a large laramide porphyry system, part of the Arizona Copper Belt on the eastern side. We have the big porphyry center here, distal series of replacement deposits that remind, in the early 1900s, and a distal gold target. We've flown the area with a ZTEM survey. We have a big porphyry target identified here, and this is going to be our focus. We've identified 6 holes totaling 4,000 meters. We're financed, ready to go drilling on that, and our permitting will be in place by the fall of this year, and we'll be looking at exploring in September, October 2021. So again, that's more news flow that we have going into the fall timeframe, and again, trying to take advantage of the uptick in copper price to the benefit of our shareholders. And so again, why Southern Silver? We have transformative value creating transaction with our former JV partner. It's made a fantastic entry point for the investors. We continue to explore very effectively on the project and are looking at increasing the size of what is currently one of the largest and highest grade undeveloped silver-based projects in the world. And again, just a reminder, our near-term exploration target, we are looking forward to growing this resource by an additional 30% as we continue adding value to the project for the benefit of the shareholder. And again, I'll just leave you with a photo of the Cerro Las Bonitas project taken from atop the Cerro and looking out to the to the southwest, and then the number of bean fields that are out that are out in the background there. And thank you very much, Peter, and thank you all for your time.
Well, Rob, thanks for that great detailed overview of Southern Silver. And with that, I will now give the mic over to Sean Kunkun of Dolly Varden Silver.
Thank you very much, Peter. Very grateful and humbled to be invited. Before I get into Dolly Varden and the opportunity that we have specifically in the Golden Triangle and our quest for 100 million ounces of high-grade pure silver, I just want to take a moment just to welcome the audience. We've got the MIF audience. I'm sure this video will be shared throughout the precious metals investing universe. And I just wanted to give all the audience and the viewers just a little bit of background on why I'm here and what's drawn me to Dolly Varden and what's drawn me to push forward with this opportunity. I've been working in the mining space for the last 17 years. I've lived through a bull market in the 2000s. I helped build a company from inception to $1.5 billion market cap. I work with a team that have worked for some of the largest precious metals companies in the world, have sold small companies like Dolly to larger entities. And all of my experience and all of my knowledge and all of my studying of history and previous markets have brought me to this opportunity. There's a few differentiators that we have. This is an excellent field of companies, and there's different approaches investors can take, whether it's a basket, an ETF, physical silver. But I'll just highlight a few of the differentiators that I think that make this particular company and this presentation unique. We trade on the TSX. We also trade on the OTC. I will be making some forward-looking statements. And just starting with the past, the property's got a rich history. It's produced over 20 million ounces of high-grade silver, predominantly from the Torbrit mine, which produced 18 million ounces at an average grade of almost 500 grams per ton. Now, this is a pure silver grade, And just to note that production ceased in 1959 when the silver price was 85 cents an ounce. So much of the deposit was left intact. There was a modern resource estimate that was published in 2019. So we've got a high degree of confidence. Not only do we have over 44 million ounces at roughly 300 grams per ton, but the bulk of these ounces are in the indicated category. This is a wide system, as you'll see as I go through my presentation, amenable potentially to bulk mining methods. And this is a 100% silver system. We're not reporting any silver equivalents here. And we are located in BC's Golden Triangle. In terms of our capital structure, we've been endorsed by some renowned investors, including Eric Sprott, including a producer in Hecla. And we've got some great institutional shareholders, including Delbrook, Crescat, US Global, English and Snyder, Sprott, and many others. So if you look at Eric's ownership, Hecla's ownership, and the institutional ownership, including management, about 85% of the stock is held in very good hands. I'm happy to report that we've got a very healthy treasury. We've got over $22 million in the bank. We have no debt, and we've got very, very good liquidity. So we've got roughly a $100 million market cap today, making us open to all institutions all over the world. And so great structure as demonstrated there. In terms of location, on the right-hand side of the screen, we're looking at BC's Golden Triangle. The triangle's been, it's been a flurry of activity recently, with Newmont recently acquiring GT Gold for almost $500 million. We've seen Yamana come into Ascot's private placement, and as Ascot is resurrecting the Premier mine. But this is really a story of resurrecting past treasures in the Golden Triangle. I'm trying to take a page out of Skeena's model at SK Creek as I reawaken the Dolly Varden silver mine. Skeena has grown from about a $30 million company to almost a $900 million company in the last couple of seasons. And Dolly Varden is part of the way through that journey. So looking on to the left-hand side of the page to zero in on the area, one of the big hallmarks here is that we're sandwiched in between one of our largest shareholder, Hecla's holdings, and Fury Gold Mines holdings. So our 44 million ounces are adjacent to Fury's 1 million ounces of gold and 20 million ounces of silver. So what this really is this is a district. It's a district that is part of a larger system that has hosted some of the largest gold and silver deposits in the world. Just looking at SK Creek alone, 200 million ounces of over 2,000 gram per ton silver has come out of SK Creek. So these are the richest silver and gold mines on the planet. We've got a BC government here that has brought in the infrastructure. We have a First Nations group here in the Nisga'a that is open for business. 30% of our workforce at Dolly is from Nisga'a Nation. We're part of the BC Regional Mining Alliance, and a group that includes Skeena, Ascot. It did include GT Gold until they were acquired by Newmont. But the idea behind the group is to promote that BC is open for business. So together with our government partners and our Indigenous partners, we're actively letting investors know all over the world that this is an area that is open for business. It's open for growth. It's open for exploration. This slide here highlights the tremendous infrastructure. Often the north is thought of as an area that's isolated, that lacks infrastructure. As you can see here, we can tap into the BC hydropower grid. We've got roads to the property. We've got water access at Alice Arm. And unlike some of the northern projects that have tough topography, we're a lower lying property where most of the endowment is in the valley. Again, why Dolly Varden? This is the vehicle for silver investors. Silver was up 44% last year. Our stock did what good silver stocks should do. We were up over 300%. So we are outperforming silver as we should. We're in a safe jurisdiction. We've got a high grade system, good management, high institutional ownership. not only do we have the cornerstone foundational resource that's got grade, but we've also got a big silver trend that's open for exploration and new discoveries. And we also have the capital to unlock those discoveries and the technical team that knows the nuances of these particular rocks that have made discoveries in the triangle, that have worked on most of the big triangle projects and have sold companies in the Golden Triangle. Whether it's Anglo, Coeur, Hecla, whether it's selling companies to Kinross, we've got a team from management to directors to advisors. We've got a good mix of youth, energy, experience, and the biographies are available at our website for more information. This is the resource. As I said, bulk of it is in the indicated category. And just at the bottom there, we talk about the high silver recoveries in the high 80 percentile. This is a snapshot of where most of the silver ounces are held. This is the Torbrit mine. If you can see in light pink, that is the mined out area. In the dark red, that is the resource intact. And as it illustrates in this image, it's a wide ore body. And we've put out some drill results in 2020 and in previous years that demonstrate that the strong thicknesses and the potential for bulk mining methods. These are some of the highlights from the 2020 drill program. We're highlight hole here, 300 grams of silver over 45 meters. So some of the resource was relying on 1960s drilling that we've since realized have understated both the thickness and the grade. And then we stepped out from Torbrit and hit 12 meters of over 350 grams of silver, including some high grade, better than kilo grades over multi-meters. The big feature at Torbrit, in addition to the 18 million ounces that were produced, and what's intact today, we've got a plus 50 million ounce single ore body. And our goal, seeing as though only 3% of the property has been explored, is to find another Torbrit. As you can see here, we've got some strong potassium alteration. And as you see Torbrit sitting along that big pink image here, there's a tremendous trend that goes on for about 4.5 kilometers, including Wolf, which is part of the resource, and the Chance discovery. So tremendous exploration potential up the valley. And here's another look at the exploration potential at both Torbrit and Wolf. And should note here that our focus for 2021 in phase 1 is to spend 50% of our focus around Torbrit, expanding it, extending it, growing Torbrit, and the other 50% going up the valley looking for the next Torbrit. So we've got some very, very exciting exploration targets that we will be drilling into as indicated here. I did touch on our strong relations with the First Nations. As more and more institutional investors stress the importance of ESG and social license is everything. And we have that license with our First Nations partners and with our local governments. The message from governments, as long as we respect water and we respect Indigenous partners, we will get the green lights, we will get the permits, and we will be able to move this project ahead. Again, and this is critical. We're not showing you base metals in silver equivalents. This is pure silver numbers. We are not showing you big disseminated low-grade numbers. We've got high cutoffs. We've got a high-grade system. We're located in Canada. We're located in BC's Golden Triangle. There's a tremendous amount of exploration potential on the property. We're nicely leveraged the silver price. We've got a healthy treasury, and we've signed dozens of confidentiality agreements over the last 12 months. We are open to moving the company ahead, whether we are predator or prey. We're looking for synergies. And I'll just reemphasize that, the majors have not focused on exploration and development. Dolly Varden is an excellent company an excellent project that would fit nicely as a pipeline development pipeline project. We've got a ton of exploration potential, and with spot silver and with our resource and with the wide nature of the ore body, we are happy to move it forward ourselves. I welcome any investors, sophisticated resource investors, new investors to the space. I've got a real passion for the industry and for this project. So please reach out to me. All my contact information is there. I look forward to any questions in the question period. So thank you, Peter. Thank you for everyone in the audience.
Well, thank you for that, Sean. You certainly made a compelling case for Dolly Varden. And so now I just wanted to remind everyone who's viewing that there's a blue box below the presenter, and that they can certainly make use of that to submit questions, and we'll try and get to those afterwards. Just wanted to remind everyone of that once again. And so now we'll move on to Metallic Minerals, Greg Johnson. And Greg, the floor is yours.
Oh, great. Thanks. Pleasure to be presenting here with a great group of companies. Metallic Minerals is a silver-focused exploration development stage company. Two key assets, our lead asset being the Keno Hill Silver District with a long history in the Yukon, and a second former high-grade silver and gold producer down in the La Plata mining district of southwestern US. On the cover slide here, you can kind of get a sense for the terrain on our Keno project. So this is big country. This is, as pointed out by a couple of the other speakers, this is the kind of terrain that you can work easily in year round, and there's lots of room here for a major new discovery. Looking at the presentation here, we will be making forward-looking statements. We do have our technical information and disclosure in the back of our corporate presentation if investors would like to take a look at some of the details on the nature of that disclosure. So why Metallic Minerals? What really stands out with our company and approach? I think we are a group that is comprised of an experienced management team that brings a track record of discovery, advancement, and development. We've come together at a time in the market cycle for precious metals, particularly silver and gold, that we believe is the early stages of a multi-year bull market. We've focused in districts where we see the potential for world-class discoveries, districts that have had high-grade historic production, and the potential with the scale of land positions and the compatible geologic environment to be able to make major new discoveries. The people, as mentioned in the intro, the people in this group, many of them were part of the original co-founding of Nova Gold, where I got my start after my early career with Placerville and Barrick. This is a team that brings together a number of major discoveries in this region and really has a proven track record of value creation. Key investors in Metallic Mineral include Eric Sprott as our largest individual holder, US Global, Crescat, and others who recognize the potential in the Keno Hill Silver District for both high-grade and potential world-class scale silver deposits. Balance sheet is very strong. We completed 2 fundings last year led by Canaccord that leave us in a position of a strong balance sheet, able to carry out our programs this year with no debt. Location, we are solely focused in low political risk jurisdictions, the Yukon and the southwestern US in mining-friendly jurisdictions. And we are working in jurisdictions that already have a proven track record of making high-grade economic silver deposits. With the infrastructure in place in these brownfields districts, that means the rate at which we can take these opportunities to production and the capital cost to build them is dramatically less than standalone greenfield projects. And that's going to be a benefit for shareholders down the road in terms of both timing and equity financing that needs to be raised in order to advance these projects. Under our management, we have 3 key assets, the lead asset being the Keno Hill Silver District that we'll talk about primarily here in this presentation. Our secondary project that was just acquired in the last couple of years is the La Plata Silver and Gold District in the southwestern US, which was formerly controlled by Rio Tinto and Phelps Dodge, and is a precious metal rich porphyry system with an intact high precious metals vein district that surrounds it, and we control 100% of that. And then lastly, a bit unique, we've got a portfolio royalty in the Klondike Gold District of Yukon. This portfolio is building out. We're one of the largest holders of unmined ground in the Klondike. We're seeing great interest at today's metal prices for gold and silver in these holdings, with the opportunity to bring production and a whole royalty for metallic minerals of 10 to 15%. Key catalyst ahead for us, we've just kicked off a 10,000 plus meter drill program, multi-drill at Keno Hill, and where that's going to be focused both on high grade targets as well as bulk tonnage targets. We've got expansion of the royalty portfolio that's starting to come together quite nicely. We've got exploration work at our La Plata project, and really have demonstrated over the last 12 months high leverage to silver price. Taking a look at the metallic group of companies, Metallic Minerals is the silver-focused entity in this group. Sister companies, Group 10 Metals and Granite Creek Copper, with Group 10 being focused in the battery metals and PGMs, and with Granite Creek Copper focused in copper gold. We've brought a similar approach to business across the three companies. You'll see these are much more tightly woven than many of the other groups that you see, but a similar approach, bringing an experienced management team to bear, acquiring high potential, high grade districts that were brownfield, where we could put together district scale land positions in these districts, making these acquisitions at the low part of the metal price cycle, applying a systematic approach to exploration, including applying new technologies like machine learning and artificial intelligence, and using this to drive creation of shareholder value along the road by making discoveries, growing resources, and then de-risking those assets towards production. And with the existing infrastructure in these brownfields districts that are shared by all three companies, we see this as a way to really leverage value and leverage performance for shareholders of the group of companies. The leadership team specifically here at Metallic Minerals, many of us were original co-founders at Nova Gold, so there's a long history here of both exploration success and capital raising. We have people in the group that have experience not only in high-grade vein systems, but also porphyry-related systems that are very applicable to our particular projects. And the team is credited with a number of major discoveries in the region that represent some of the largest undeveloped deposits of their kind, including the Diamond Creek, Galore, and Wellgreen deposits. In addition, we've been recognized by the Yukon government for excellence in our sustainable development initiatives and reclamation practices. We believe in a strong ESG approach to business and have developed excellent working relationships with both the local First Nations as well as the government and regulatory agencies in our region. So what's the strategy been here for Metallic Minerals, and why did we focus in the Keno Hill Silver District? I think first and foremost, the long history in this district, over 200 million ounces of past high-grade production in a district that today hosts 100 million ounces of one of the highest grade silver resources in the world. Recent major discoveries at Birmingham and Flame and Moth. I believe Birmingham probably is one of the best undeveloped silver deposits in the world at over 1,200 grams per ton, shallow depth and open nature. It really highlights the potential that remains in this historic district. We consolidated 166 square kilometer land position over the first couple of years of our work in this district during the bear market. That included 8 past producing deposits on that ground, demonstrating that we've got the structure, we've got the geology, and these are excellent places for us to focus exploration. We see the potential to not only advance at those targets that sit along the known productive structures, where we've quickly developed mineral inventories on a number of major areas, as well as applying new geologic models in areas that are underexplored, particularly on the eastern part of the district, where our efforts have identified 12 multi-kilometer scale targets that initial testing in late 2020 have delivered several major new discoveries in an area that not only has high-grade classic Keno style mineralization, but is showing the potential for bulk tonnage and possible open pit type mining. We've taken a similar approach at La Plata. It's earlier stage, but it has the benefit of significant work by majors, including Rio Tinto and Freeport-McMoran. So we see the opportunity here for rapid advancement to resources based on that historic work in this area. And as I mentioned before, the fact that these projects, these assets sit within these known brownfields districts, and you have the benefit of both the infrastructure and all of the facilities that are in place in these regions to rapidly advance discoveries towards production. And we see this as a key value driver for shareholders. Why invest in an earlier stage company? You get that leverage not only to metal price, but you get that leverage to discovery, resource growth, and then de-risking as those ounces in the ground get revalued as they are advanced towards development and production. This is a photo of the Keno City Mill Complex. It sits in the center of the Keno Hill District. This was built in 2010 by our neighbor, Alexco. They've just gone back into production here in Q4 2020. So they're still in the startup phases, but everything appears to be on track. I just wanted to highlight a couple of the operating parameters here to really focus on the quality of this asset at Keno Hill. 800 gram per ton silver grade, not a silver equivalent grade, is one of the highest reserve grades in the industry at over 4 million ounces of year production with an opportunity for expansion beyond that. This makes this a top 15 silver mine in the world at an operating cost at less than $12 US an ounce. It makes it one of the lowest cost producers in the industry. And the total capital cost to build 2 new underground mines because of the existing mill infrastructure was just a little over $20 million. So this is very low cost capital development with very high rates of return and demonstrates the potential kind of value creation from new discoveries in this district. Looking at a chart of reserve grade for primary silver mines in the world. So primary silver mining needs more than half of the cash flow comes from silver. You can see in this chart that the average grade is around 300 grams per ton silver grade. And there really are 6 standout silver deposits globally in terms of grade. And when you look at who owns these, you'll see that Keno Hill is the highest grade of those reserve grades. And then you go down the list and you see these are largely controlled by names like Hecla, Hochschild, Coeur d'Alene, Buenaventura, Pan American. So these standout assets are already mostly controlled by larger producers in the silver space. There aren't that many high-grade assets that are already de-risked and in production that have the type of quality that Keno does. As we move from a bear market to a bull market, the silver producers are going to be looking for opportunities to snap on high potential exploration or production assets. And a Keno Hill type situation with high grades, low political risk, existing infrastructure, and lots of blue sky opportunity, I think is going to rate very highly on those lists for producers looking for opportunity to grow in a bull market part of the cycle. The district itself is 35 kilometers long from the westernmost producer at Silver King to the easternmost producer at Cobalt Hill. The namesake Keno Hill mine sits in the center of the district. And we really see the district kind of 2 halves, eastern and western, with most of the historic production coming from the west, where it was consolidated early in the 1950s and 60s by Alexco's predecessor. You can see these deposits shown as the circles along these major known trends, but the geologic environment continues off to the east as well. So if I turn on the land status here with Alexco on the green, you can see that their land position is dominantly on the west, and Metallic Minerals has consolidated its land position on the east and south, effectively a long trend and down dip of the known main deposits, but also in the same geologic setting and environment. So if we take a look at the geologic map for a second, what you can see here is the layered geology, which these deposits would be classified as structurally controlled metasediment hosted deposits. The key to success in the Keno district is understanding where you are, both in terms of the best host rocks, being the quartzite, the greenstone, or the silicified structural zones. Knowing where you are along those, knowing where these major structural corridors pass through, and focusing your exploration efforts in those most productive structural corridors. So looking at the large historic producers in the orange circle, the newly discovered resources in the yellow, these small red circles on Metallic Minerals holdings are these high-grade deposits that were mined in the 20s and 30s. And these red circles represent these greenfields discoveries that are large combined soil and geophysical targets, identified metallic minerals. You can see the geologic setting is the same as the western part of the district, and our initial drilling on some of these targets has in fact returned both classic high-grade Keno-style mineralization as well as bulk tonnage. And a big part of our effort this year in this 10,000-meter program will be to drill more of these untested anomalies on the east, as well as to continue to advance on the advanced stage targets. Looking at the geophysical interpretation, as kind of the new guys coming into this district, one of the first things we did was take a look at all the various types of data for the district, reinterpret this data with a new perspective in terms of exploration. And one of the key things that fell out of that work was a recognition that the high-grade past deposits, the largest of them, had a close association with the magnetic signature. And this we interpret to indicate the potential source of these deposits related to deep-seated intrusions. And as you take a look on this map, you'll see that our soil anomalies in these red lines closely correlate with these intense magnetic low features, which we interpret to be potential mineralized intrusive that are the feeders and perhaps providing the metals and the heat for driving these systems. So that in the east, we may be seeing deeper in the system at Keno Hill. And in fact, we may be seeing the source of these high-grade deposits that have been historically developed. So our efforts here at Keno Hill are both to look for the classic high-grade Keno-style deposits, such as you see in the photo here, which occur along these structural trends are extremely high-grade and can add up to 50, 100 million ounce type scale in individual deposits. But in addition, looking at the areas where mineralization is both disseminated and high-grade and may occur in much larger tonnages and perhaps represent opportunities for plus 100 million ounce type systems. Our efforts here in the east are recognizing this setting and relationship between potential intrusive related hosts and the structurals. This would be a model that would be akin to, say, a Penasquito type model, but being applied in Yukon. And as you can see in the cross section here at Keno East, the scale of the systems, the geophysical signature, the combination of high-grade structures and disseminated mineralization is really holding out the potential for something that could be much larger scale than has been previously recognized here in this region. This soil map on the right highlights the scale and magnitude of these 12 separate multi-kilometer anomalies with silver in soil values up to 100 grams per ton, which is higher grade than the Penasquito ore zones. So with scales of 2 to 5 kilometer anomalies and several kilometers of width, we see the potential here for something that is much larger than has been previously recognized in the district. The initial drilling in this area returned 26 out of 30 hits, including both high grade and bulk tonnage. And this is one of the key areas for follow-up for metallic minerals in 2021. Looking quickly at the share capital structure, we've got 126 million shares outstanding, a market cap of roughly 80 million. We've got $7 million cash, no debt, and about $12 million in the money warrants and options, which are beginning to come in. I've already mentioned the key holders by key investors such as Eric Sprott, US Global, and Crespat, but also it's worth mentioning that management owns over 20% of the shares. Having a high ownership level in your management really shows a vested interest that aligns management and shareholder interest longer term. And we really look to run these companies as owner builders. So the last couple of comments I'll make here, I think as I look out across the landscape at other silver-focused companies and take a look at our mix of assets, we have a number of unique attributes. The geologic systems, the scale of these is measured in kilometers. The system shows it makes economic grades. We're using world-class deposit models to explore for these and a technical team that has deep expertise in these types of discoveries. And we're working in low political risk environments with existing infrastructure. The highly experienced team that's come together for metallic minerals has demonstrated its ability to advance and create value. The consolidated land positions have strategic value, being located as they are next to these operating mines. We see the potential to rapidly advance these resources towards production, either through arrangements with the next door operator or via attracting larger players into the district. With a 10,000 meter drill program underway, you can expect a lot of news from Keno. Plus, we have undergoing programs at La Plata and our alluvials that we'll be talking about. And with this infrastructure, we see an opportunity, much like with Alexco, our next door neighbor, for rapid development at a low capital cost, giving our investors high leverage to silver with a lot of dilution to be able to advance these assets into cash flow and production. So with that, that is a high-level introduction to metallic minerals. I'd like to thank Peter for inviting us to attend. If any of you have any questions, please feel free to reach out to us directly through our website or our other social media channels.
Well, Greg, thanks for that superb detailed overview of metallic minerals. And with that, we'll now move on to questions, and we'll start with Silver VIPR. So, Steve, if you're ready.
Yeah, absolutely.
I'm going to put to you a question that actually I recently got from a subscriber, and it's not specifically about Silver VIPR, but given that you're running this company and it's similar, it would be a similar question, I guess, for any of the four presenters. But this subscriber was wondering, why is it that so few projections of anticipated timeframes for upcoming events are made? In other words, why are the timelines not more specific for events that are upcoming?
Yeah, I mean, that's a good question. It's tough. No one wants to be the CEO that makes the promise of a timeline and then swings and misses, and then you look at a message board and everyone's cursing and screaming at you because it's supposed to be out right now, today, like this day. So, I mean, there's the under promise type of idea, and I think we all try and give fairly accurate timelines, but there's also stuff that happens in the world. I mean, we're living through one right now with COVID. I mean, the walking delay for the last year and a half. Whether it's at the assay labs or and a good example with us is I thought our resource was going to be out in the third quarter of 2020. I think we gave that guidance around the start of COVID, and but then things change. You have good drilling, you have delays in the lab, and it pushed it back until we didn't finally come out with it till Q1 of the next year. But that's probably the main answer why people don't really promise every single thing. But I mean, there's the balancing act. We try to be fully open and honest and let everyone know what is happening. So we were gonna have our timeline for our geophysics right now is at the start of August. Another good example of delays, though, was our LiDAR survey for the resource, which was the other thing. It took us over a year to get a LiDAR survey done. Again, COVID made the complications of moving equipment in and out of the country and people and getting permitting done with government offices operating at quarter capacity. So there's all sorts of things, and I mean that would be the main reason I think people could get frustrated at times with certain companies. I mean, I think we're pretty open and honest, and I try and give pretty accurate guidelines to everything, but that would be the reason that people aren't, is because sometimes it's a moving goalpost and various factors can affect the timing on things.
Sure. I mean, from my perspective, what I've seen and heard obviously a lot is just one aspect is assays. You'll send out core and you'll wait. Sometimes you just don't know. You may not be dealing with regular timelines, and we are in a bull market. We have been dealing with COVID. So, that's just thrown a wrench into the gears for so many of these things. And it makes sense that it's difficult to try to be more specific for certain things in terms of timeline prediction. So I can certainly understand and sympathize with that. And like you say, you don't want to be promising things you can't deliver.
Well, assay is a great example, as you say that. Just quick, I'll chime in, but yeah, I mean, we see it. We've got companies in here that are operating up in Canada, and we see the absolute change of assay turnaround times with the Golden Triangle picking up. They go 6 months without acting, but our multi-elements are run in Vancouver after our gold numbers are run in Hermosillo, and it's amazing. Like we go from 2-3 prior to COVID 2-3 week turnarounds to 1-2 month turnarounds, and then with COVID, that added, with the staffs and that being that much less, but exploration still being picked up, and we started going like 3 month turnaround times at the worst, during COVID last year for singular assays, and that's that's very difficult. And then the flip flop that's happened with the triangle being done now, but exploration really picking up in Mexico across, we've seen a lot of companies start, is that we're getting our multi-elements back from North Vancouver quicker than we're getting our gold numbers that are being run in Hermosillo at times. So it's, you know, you say that it's a moving target at all the time throughout the year, what's happening. Hopefully we get back to more of a regular basis here as, you know, travel and everything gets back to normal. But yes, the assays can be a very moving target on the turnaround times.
Absolutely. It was a nice bounce back in your shares after a little while after your resource was announced. I mean, I have my own theories, but what do you think the market was missing initially?
I mean, I think I publicly stated it before. I think people, you know, we had a few delays for the resource, which pushed us down to where we were much closer to, you know, our cash position being lower than we certainly would have liked before we financed. And I publicly stated that there was definitely some funds that were aware of financing was coming, and I think, you know, purposely holding the price down. Not that you could ever prove that, but I think that was a big part of it, because we put out, I mean, some pretty spectacular numbers, and then had a resource that exceeded guidance, and, you know, we were absolutely thrilled with, and our stock was being leaned on after every single one of those events. So that was very frustrating. And then obviously the big bounce back, you know, where it's really bounced back now is, hey, look, we closed the financing, and, you know, lo and behold, the stock goes up, you know, 70% or whatever we're up from the financing price. So that, it was frustrating. It was, I mean, very frustrating, but that happens. And, you know, we're not the only company that's ever had that happen. And, you know, you deal with it and we move on. And, you know, we are happy that every single one of our financings has been done at a higher price than the one before it still. And, you know, all we can control is moving along the project and, you know, fundamentally making the company stronger and stronger. But it does look really good right now. The share price is getting back up and moving in the right direction, and, you know, it's definitely a lot better looking than it was.
Yep, getting the recognition, absolutely. Yeah. Thanks for that. I'm gonna move on just to try and give everybody a bit of a chance here. Rob, let's start with this. How about what have you been learning about the geology, and how does that influence the approach towards your eventual PEA?
Well, I think in terms of the geology, specifically on the eastern side of the Cerro, we tend to be drilling maybe a little bit closer spaced than we had been drilling on the western side of the Cerro, and that was in part in recognition that mineralization may very well have some structural control, and so we have been focused on that a little bit more, and you know, utilizing the various modeling tools that we have to maybe track the projection of some of those structures, to be able to target some of those structures, and then of course, you know, once you hit the higher grade feature, you know, in terms of modeling, you kind of need to bracket it. So in terms of the geology, I think it's just getting a better appreciation for the potential structural controls on the sort of high grade shoot nature of the mineralization, and it probably, you know, leads me to believe that on the western side, where we had much more wider space drilling, that you're probably looking at some fairly similar geometries in there as well. So I think it's being very helpful as we move forward, one, in being able to potentially define higher grade mineralization, as opposed to, you know, when modeling occurs, sometimes if you have wide spaced hole, grades get spread out. And so if you're able to do more closely spaced drilling and properly constrain the grade, well, then you'll often come away maybe with smaller tons, but you'll come away with higher grade mineralization, higher margin ore, which at this stage in the project is something that's, you know, one, it's always going to be welcome, but is a very good thing to have, to be able to have that grade.
Makes sense. I think you mentioned earlier that there are some other established miners in your area. Can you just sort of remind us who those were? And obviously, you can't be specific necessarily, but if there has been interest, has there been any interest from any of them?
Well, in terms of the project itself, we are surrounded by miners. Hecla Mining has been mining at San Sebastian for the last 3 or 4 years. It has been one of their most profitable operations. Fresnillo is exploring on our northern boundary at their El Titanic claim. Avino is mining gold and silver veins just to the north of us. Peñoles has a smelter up the road around probably about 120 kilometers up the road, and they explore in the Villardena district, and they developed significant resources there. Core Mining is in the region, and a little bit further afield, Argonaut Gold. So over and there's other explorers and developers throughout Mexico, and without giving any names, I mean, we have been in conversation with a number of our neighbors and other people that might be active throughout the country itself. And so, we believe we're in a good position. We're in a very safe district to be working with, some excellent access. There's a lot of, on the logistical side, a lot of benefits to working, where we are. And we think that coupled with the mineral resources certainly makes us attractive to our neighbors. And so, like good neighbors, we continue the conversations.
Right. Super. Interesting question here. Other than Southern Silver, which silver explorer or developer would you invest in yourself, or would you recommend looking at or investing in?
Oh boy, am I allowed to name a sister company?
I guess so.
We do have a company that's exploring for silver mineralization. It's Equity Metals, and we're exploring in west central British Columbia. We've reported some super bonanza grade silver mineralization with that company. I am invested. I will be investing in investing further. And yeah, so I guess that's my first answer. But I think any of the people that are here on this panel, in terms of their presentations and what they've been able to bring to the table, are all worthy of investing. And I certainly wouldn't want to single out any one of my co-presenters here, but suffice to say, they're all excellent projects, all with fantastic merits. And in a rising bull market, a silver market, I don't think you could go wrong with any of the companies that have been presented here, certainly in this session.
Good answer. Thanks for that, Rob. Sean, we're going to move on to you now for Dolly Varden. Can you give us an idea of how much drilling you're going to be doing this year, and over what sort of time frame?
Hey, thanks for that, Peter. My approach has been, we put out kind of a modest 10,000 meter phase 1 program, despite having, $22 million in the bank. My approach has been, we've never had a busier off season at Dolly Varden. The amount of engineering work, whether it was conceptual mine planning, stope design, road improvements, in terms of exploration targeting, we've really challenged our team. And the approach that we're taking is, we've got this planned phase 1 at Torbrit for the 5,000 meters. We have the planned program on the exploration targets. We can strap on. We've obviously got ample treasury, but we want to be methodical. And I see a lot of companies going out and drilling 100,000 meters or more, and that attracts certain types of market participants. But when we look back at our production and our discoveries, we've really challenged our team, particularly in and around Torbrit, in terms of how many ounces can we add, what is going to be the discovery cost per meter. It's been my experience that when you drill around a past producing mine, a known resource, in addition to the potential for stepping out, extending, and expanding, you're going to get incremental improvements. We saw it last season. We'll see it this season. Somewhere lurking on this property is a big system, and I think the likelihood of us tagging into that is high. And then beyond our borders, last year we were the only company working up in the area. This year, and I'm not talking about the Golden Triangle at large. I'm just talking about Kinskutch, Alisarm. We've got Hecla will be drilling to the east. Libero will be drilling a target that we own half of, Big Bulk. It's a copper gold target. Goliath has got a very exciting drill program to the west. And Fury has announced a 25,000 meter program directly adjacent to us. So there's, in addition to the news that we'll be putting out, we were all alone last year in a vacuum. This year we've got 4 neighbors drilling. And then if you go a little bit to the north, it's a long list of, it's a very busy as postal code up there.
All right. In terms of advancing the project, where do you see the biggest challenges for you?
Well, this goes back to your timeline question, and I have kind of a remark that some people may not appreciate, but the reality is this stuff takes a long time. And if most CEOs came out and gave that guidance, like, ladies and gentlemen, we're going to need obscene amounts of money in probably 10 years, and there's a good chance that things are not going to go ahead after we go through this exercise. What investor in their right mind would want to sign up for that opportunity? So, I'm careful. When I looked at taking over Dolly Varden a year ago, it's in a $17 silver universe. There was one clear answer. We are an exploration company. I need more of these ounces at this grade in this area. But, everything changed when the silver price went up, and everything changed when we started really getting into this detailed work around Torbrit, and we started looking at how wide this ore body is. Now, what I think I've got myself right now is is something that I would describe as small, but it's in this silver price, it's likely profitable. But we're looking for something much bigger. So what really excites me is where's the next Torbrit? But it's very compelling as a standalone today, considering the shape of the ore body, its proximity to surface, its proximity to infrastructure, and we're continuing to be surprised with the drill bit.
Can you give us some idea of when investors maybe can look forward to an upgraded resource or eventually even a PEA?
It's a good question. Likely a PEA, and in terms of an upgraded resource, the company had just published a resource in 2019, so we do have a fairly modern report on hand. But maybe an updated PEA or a initial PEA. But in terms of timing, I want to get out. I want to drill this season before we provide any guidance.
Okay, fair enough. Thanks for that. So Sean, I'm going to move the floor over to Greg at Metallic. Thanks for your answers. So Greg, our first question will be, can you provide some perspective on the land package you consolidated and the potential that it holds?
Yeah, so Keno Hill has this long history. They started, the first discoveries there were just shortly after 1905. So it's a district that's had over 100 years of production. So in contrast with newer areas, it was very patchwork land ownership. Alexco's predecessor, United Keno Hill Mines, consolidated much of the western half of the district in the 1950s and 60s. And when we came in during the bear market, we basically started meeting with individuals, other junior companies. It took a while. We pulled together 40 different parcels plus our own staking to consolidate the other half of the district, so 166 square kilometers. And some of that, because we staked it, was a bear market, it got dropped, there's no royalty on, and others have a small royalty with a buyout. But we've been able to structure all of it so that effectively it's just Alexco and ourselves in terms of the silver-focused part of the district. Of course, you've got a couple of gold-focused groups. You've got Banyan and Victoria across the valley, and you've got Mount Hinton, which is to the south, which is really a gold system. And they're probably interrelated in terms of the geology, but the core part of the district for silver, high-graded silver, is really Alexco and ourselves.
Super. Can you give us some idea of what modern exploration has contributed to your understanding of a potential deposit and when investors can look forward to a maiden resource potentially?
Yeah, I think our neighbor Alexco and the team there has done a terrific job over the last 5-6 years of understanding the structural controls and really bringing modern science to the district. Prior to that, under United Keno Hill Mine, they just would drill and drift to be able to develop resources and reserves ahead of them. And they were successful at doing that. But in today's environment, you need to build up a resource. Alexco started at 0 and over a period of about 6 years went to 100 million ounces. So, we hope to be able to replicate that with a very systematic, exploration process. I think the thing is a little different. We're doing a lot of the same things that Alexco did in terms of our work on the high-grade structures that are on trend with the main productive trends in the district. But we're also looking at new styles of mineralization, and these new multi-kilometer scale footprints of the geophysical targets is suggesting that we may be seeing deeper in the system, and we may be seeing the intrusive sources, the drivers, if you will, for the high-grade silver mineralization in the district. So we're combining our approach, the tried and true, building on the shoulders of others that came before us, and we're greatly successful, but also bringing in some new science, some new thinking, with some new interpretation to say, with these signatures we see that suggest we may have nearby intrusions, we may have the potential for not only high grade, but bulk tonnage that could really change the complex, in a very positive way and hold out the potential for much larger systems. I mean, with over 200 million ounces of past production, 100 million ounces of resources, you're already over 300 million ounces on the western half of the district, and the deepest deposit was only 300 meters from surface. Alexco has now extended that to 600 meters depth, still quite shallow by many districts. For instance, Coeur d'Alene, which is comparable geologically, they're mining at 3 kilometers depth. And on the eastern part of the district, no one's really, we were the first drill holes ever put into the district. So we see the potential for a 1 billion ounce district with exploration deeper on the west and at shallow and to depth on the east. And, that's really something that stands out in a Canadian context in terms of setting.
And do you have some sort of a timeline for a maiden resource, or?
We've got 3 initial areas that already have mineral inventories that we're advancing. We need to do some additional work, which will be part of our 10,000 meter first phase program. My hope is that we could be looking at an initial resource in the next 12 months. And our secondary project, La Plata, it's got 50 holes in that historic resource area from some of the majors. And so that's a second area that could be moved to a resource in the relatively near term.
Super. And if we could just touch a little bit on your alluvial project, that's kind of interesting, quite different from the typical either exploration or advanced project. Can you give us a little more color on that and what that entails?
Sure. This opportunity is actually somewhat similar to in the last metal price cycle with Nova Gold, where we had that sand and gravel business in Nome, Alaska, that brought in $1.5 million, $2 million a year in revenue and allowed Nova to have sustainability through the bear market cycle and to go after assets like Donlin and Galore. And so when the opportunity presented itself for Metallic Minerals to pick up the extension of the historic Klondike, the area that produces 50% of the Yukon's gold today from open pit placer mines, we jumped at it. It's not the core focus, but this land package has room for 10 or 15 operators. In the alluvial business, you can take a 10, 15% royalty without impairing the economics. You have the benefit that an asset can go from exploration to production in a year. And so we've already got 2 operators in place. We're getting the permits in place for additional operators. This is something we can see quickly being able to cover our G&A costs and ultimately to become a well fleshed out producing royalty portfolio. So not the main focus, but it's awful nice to have free cash flow at an early stage of your development while you're still doing exploration and advancement. And so it's a pretty interesting and somewhat unique feature for metallic minerals.
Thanks for that, Greg. Well, I can see that we're pretty much running out of time. We've covered a lot of ground today. Everyone's given us a great overview of their companies and has generously answered questions from viewers. And I think with that, we'll be wrapping up. Again, I'd like to thank everyone for attending. I'd like to thank the presenters as well as the viewers, and call it a day, I guess, on the second Silver Investor Forum, and which seems to have been quite a success once again. Thanks everyone for being here.
Great. Thanks, everybody.
Thank you very much, Peter. Thank you, everybody.
Thanks, everyone.